Hey everyone, welcome to CoinDesk Live, presented by MoonPay. We are coming to you from Consensus Miami, where the biggest names in crypto, finance, and policy have descended for 3 days of deals, debates, and announcements that will shape the industry's next chapter. This is day 2. I'm Jen Sanasi. Joining me to kick things off this morning are Zach Seward, Eleanor Terrett, and Jesse Hamilton. Hey guys.
Jen, it is lovely to see you.
Morning.
Lovely to see you too. Everyone is just looking very fabulous. I love that.
Not as fabulous as Zach in his Miami outfit, though.
I know, Zach
This is
really
Miami,
brought the
right?
It is Miami.
We're going Miami Vice today, right?
Yep. I'm dressed in New York. I mean, I'm classic black, but, you know.
Generic.
Generic.
DC generic.
Okay. Sounds
Well,
good.
we'll try and get the outfit coordination going as we get deeper into consensus. Jesse, I want to start with you. I know you were on some stages yesterday.
I
Or
was.
you are going to be on some stages today.
I had a chance to speak with the CFTC chairman, Mike Selig, yesterday. And today will be Patrick Witt from the White House. So.
Who just said hi to us over there on the floor, by the way.
Oh.
He threw us a wave, so, hey, Patrick. He walked away, but we'll be looking forward to that one.
And Ellie, what are you going to get up to for the conference?
So yesterday, I sat down with Johan from Robinhood. We talked about democratizing investing further to the broader global audience, actually. It's pretty interesting what Robinhood is doing. They obviously started out in 2014 with lowering trading fees, bringing Wall Street to broader investment population, and now tokenization is making that even more accessible, and they're getting on board with that. Thinking about bringing pre-IPO shares to a retail audience, which comes with a lot of tie-ups when you think about how the SEC is going to be involved in that and sort of regulation, but with regulation as leaner and more friendly, as we've seen. SEC Chair Paul Atkins has been very excited about tokenization. We're hoping there's going to be a tokenization exemption on the horizon at some point, although we've been talking about that for some time. I think a lot of crypto companies are excited for that. Johan mentioned that on stage yesterday. And then today I'm actually doing a policy panel with Rebecca Reddick, Summer Mersinger, and Kristen Smith, talking all things DC and how crypto's relationship with the policy makers and regulators has evolved, and how it's evolved in the last year and a half, would you guys say?
Oh my gosh, I think like 2 years ago, if you would have said that the next 2 years we're going to have the milestones that we experienced over the last year and a half, I would have said you were crazy.
Yeah.
Yeah, on the DC theme, I spent yesterday up with Salon Accelerate, and there was a ton of lawmakers in attendance, right? We had Gillibrand, we had Bernie Moreno, we had Rick Scott, we had more, Tom Emmer from the House as well. And just to see that degree of embrace from DC and around these conversations that are a bit more nuanced than they were a couple years ago is really fascinating to see. So I think that's obviously sort of a subplot, I'd say, of a lot of the programming this year here at Consensus, which has been very well attended. Main stage seems pretty packed most days, most sessions yesterday for sure. So it's interesting to see. I think we're actually seeing Senator Kirsten Gillibrand over there right now as we speak. So fascinating to see her presence here as well, in addition to Salon Accelerate yesterday.
Yeah.
Senator Gillibrand will be at the desk later today, and we have some like pretty heavy-hitting guests joining us at the desk.
We do.
I know we're talking regulation, but A-Rod is going to be here. I know you're a baseball fan.
Oh yeah, I mean, I am the official Hash baseball correspondent.
You really are.
So I knew you needed to call me in for this one, the assist, and I'm honored to be interviewing Alex Rodriguez, a contentious player, but one of the best of all time to do it. Now in business, we're going to figure out what he thinks about crypto.
Yeah, we're going to be talking about his...
What does he think about crypto?
We're going to find that out.
Okay,
yeah.
You got to tune in, all right?
Tune in. Any teaser you can give us?
No, we're doing it live.
Oh.
We are doing it live.
All right.
You got to tune in, you got to watch. And speaking of what people think about crypto, Jesse, CoinDesk recently did a poll, and we got some stats. We unpacked them here at the desk yesterday, but give us the TLDR on the findings.
There's a bit of a difficult truth to confront, I think, for the industry. Yeah, so we commissioned a poll. We started releasing the information since last weekend and more yesterday. But it's a majority sort of distrust among voters for crypto. Independent voters, 48% unfavorable, 27% favorable, which is not, I guess, a great place to be. So it's, it is a difficult truth to confront. While the numbers go up, the trust isn't necessarily matching for crypto. But we were as interested in some of the sort of more political elements of the poll. We asked whether people thought that senior government officials should be able to hold and benefit from the crypto industry. 73% of people were opposed to that.
I cited this in my newsletter Monday. I just pulled it up. I thought that was a really interesting
It's a pretty
stat.
interesting statistic in light of course, President Trump's and his family's involvement in crypto. And 62% of respondents said they didn't trust the Trump administration on crypto issues. So it largely reflects the president's sort of declining approval rating, but it's maybe not a great place to be for the administration as it's trying to implement some of the policies that we're talking about. We're going to be talking about today with Patrick Witt on stage, and of course tomorrow at our policy summit, where we'll have a lot of people sort of digging into the deep into the information here.
Yeah, and on the eve of what could be a markup potentially next week, I think Senator Bernie Moreno said yesterday that they will be marking up next week. They haven't noticed it yet, but it's something that everybody in the industry has been waiting a long time for. Obviously, the markup has been stuck in committee since January, and we can go into all details behind that, but I think our audience knows, you guys know what was behind, what went into all of that, but yeah, ethics is going to be a potential roadblock as we move past committee and get it onto the Senate floor. It'll be interesting to watch, and I think some of those stats, like you said, may even be cited.
I feel like the buzzkill on the show.
I know. What a way to kick off
the
day.
Vote Jesse off the desk.
Yeah, you're banned.
Yeah.
Where's the hook?
Eleanor, I was actually going to ask you about that because, it seems like the stablecoin debate has been largely solved with compromise on both sides.
Yeah.
But that ethics piece is a really important piece and reflective of what our poll participants are saying there. And so what needs to happen? I mean, I know you talk to people in DC, you get a lot of scoops, you have your finger on the pulse. Can you give us a little bit of insight into how those conversations are going?
So I think it is largely going to be figured out after it goes through the Senate Banking Committee. It's going to be largely we have to figure out if it's going to be a partisan markup next week or if it's going to be bipartisan. Some of those ethics provisions will be added after the markup, like I just said. It's largely because the Senate banking does not have complete jurisdiction over ethics issues. It's going to be other offices weighing in. But it's going to be a big issue. You saw Senator Tom Tillis come out a couple weeks ago. Feels like months ago now, but it was only, in fact, 2 weeks ago. He is the first Republican to come out and say, I would like to see some ethics provisions go into this, because we've largely heard only from Democrats so far. But he said something along the lines of, if this does not have conflict of interest provisions and protections by the time it leaves the Senate floor, I will actively vote against this legislation. And so you kind of saw that narrative shift of, oh, this is not just a Democrat issue and want anymore. It's actually turning a little bit bipartisan. So definitely something to watch. They're calling it a poison pill, some people in this industry now. Could ethics be a poison pill? So yeah, it's definitely going to be an issue that could come up.
Drama. I got to ask you guys. I mean, you guys are very plugged in on the DC scene, and I'm just a mere observer at this point. What's going to happen with the midterms? Like, how is crypto going to be impacted by the midterms? What's the sort of chatter around town in terms of how the midterms may affect crypto policy going forward, especially in light of this polling data that you're now putting forward?
Yeah,
I'll put you on the spot. Your personal opinion about what's going to happen post midterm.
I, of course, have no personal opinion
Of course.
anything ever. But yeah, the midterms, I mean, that's the thing looming over everything that we talk about, right?
Yeah.
And it can't.
It's put a deadline on clarity.
Yeah, clarity is basically facing this brick wall legislatively of the midterms coming up, and so leaving maybe 10 weeks of Senate floor time to potentially get it done. It's a very narrow window at this point, but the effect of the midterms, of course, is that if everyone is right, that the House is going to switch hands.
And Ken Griffin said it was actually going to. He said the House is lost to Republicans yesterday at Milken. That was a headline. So, just adding that one back.
Well, the betting line
is
certainly heavy on the prediction markets that the House.
Yep, that's true too.
Is going, and so if that's the case, then you have all of the committees who work on the House Financial Services, for instance, will have a new chair. Likely Maxine Waters will return to the chairmanship of that, and that's going to be a different situation for legislation. Would it have to be entirely rebooted, likely, or is it going to be ignored for other things? Are we looking at a 2-year gap in progress if the House changes hands? That's all we're going to have to learn, but it's definitely a significant change, which is what puts so much emphasis on the timeline for clarity right now, the Clarity Act in the Senate.
Yeah, you talk to Senate Republicans and they say, oh, it's going to be fine, Well,
I was going to ask you about that. I hear a lot of optimism.
There is optimism.
A lot of optimism in public forums, but I'm curious about the conversations that are going on behind the scenes. Does that optimism persist, or are people fearful that this doesn't get done before midterms and things look really different?
Yeah, I think the industry knows that it's going to be challenging, and I think some of those conversations behind the scenes are realistic. I think public facing is much more, we're going to be fine. We're going to get through this. There's bipartisanship in this industry. Democrats want this just as much as Republicans do. But I think on the face of things, we know that Maxine Waters, if she does take over as ranking member she's ranking member now. If she does take over as chair of the House Financial Services Committee, she is going to be focusing a lot on the Trump crypto corruption, as she likes to call it. So, is that going to leave time to get all the things necessary done to get Clarity Act through the House? And, we just don't know what the dynamics are going to be. I think whether it gets done or not, a lot is uncertain. So, I think while we have the window, they have this window of, the next 10 weeks, as Jesse said, there's certainty there that, at least, have that time to get something done. But beyond that, it just gets into a very gray, opaque area where you never know what could happen, I think. So it's
good to hear. I mean, I don't know what my full assessment is, but I keep thinking back to, I think it was 2 years ago, 2024 consensus. We had a debate on stage in which I was the moderator, and it was, is Trump good for crypto? And it was Ryan Selkis of Masari versus Marvin Amori of Uniswap at the time. And Selkis was arguing for the short-term win, right? Trump would be good for crypto. We need to rally behind that and make it happen. Amori, on the other hand, was saying, if we make this a partisan issue, we lose in the long term. And I look back to that 2 years later, and I keep wondering, has Trump been good for crypto? There was so much excitement with the Trump 2 era coming into the fore, and it really hasn't borne out in terms of token prices, in terms of meaningful advancement, I feel like. So I'm curious kind of what the consensus opinion among the insider class is for folks who are kind of assessing 2 years in, has Trump been good for crypto?
It's for sure a mixed result.
Definitely mixed.
But you have to look at unprecedented successes like the passage of the Genius Act to regulate stablecoin issuers. That was certainly a huge project for the White House. And you have to consider that the real sort of policy progress right now is being made at the Securities and Exchange Commission, at the the CFTC, Commodity Futures Trading Commission, and the rules that they are engaging in will certainly be more durable if they're backed by legislation eventually, but they are doing things, and they're going to be very impactful. The agencies have already sort of come out with the crypto taxonomy policy, putting the assets into the buckets, and everyone's been waiting years to find out how the agencies, the regulators, are going to treat different crypto assets. So
I think
that's a big success.
Yeah.
But is it durable? I guess is
right. And I think a lot of times folks in the space judge whether crypto is good or not based on their portfolio. Crypto prices obviously haven't been great.
Bias?
The market,
Bag
right?
bias much?
The market hasn't been favorable, but I think, to Jesse's point, putting a lot of these, laying the groundwork, putting these crypto-friendly regulators in place, opening up some of these, opportunities to some of these bigger institutions to, open up the space, mainstream adoption, that's going to have longer-term effects. And I think that wouldn't have happened under maybe a different administration. So I think there's definitely wins. You kind of take the good with the bad, I think, but definitely a mixed bag.
And the flip side, of course, is, as you were pointing out, the Clarity Act, the ethics provision of the Clarity Act, is there because of President Trump. This is to get this worked out. It's really the thing that may hold up, that may destroy the poison pill, that may destroy the Clarity Act. Wouldn't exist if he weren't president. So that's where the mixed bag comes in.
Yeah,
for sure.
All right, more on regulation and policy throughout the rest of the conference. We are just kicking.
We got to do more.
We could fill a whole hour on
this.
Yeah,
we really could. We're just kicking off day 2 now. Yesterday was an incredible first day. Let's take a look at a little recap.
Consensus, I think, is the epicenter. It creates the mecca where everybody in the industry is coming together.
Consensus is one of the most diversified digital asset events out there.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server. Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Well,
what's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server.
Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Welcome back to CoinDesk Live from Consensus 2026. Our next two guests are expanding the Bitcoin ecosystem. Adam Reeds, co-founder and CEO of Legislating, and Borja Martel-Seward, co-founder and CEO of Roxum, join us now. Hello.
Hi, how's it going?
We're doing absolutely fantastic. We are kicking off day 2 here. How's your conference been so far?
It's been incredible. Yeah, great to be here.
What have you been up to?
Lots of meetings, meeting lots of partners I haven't seen in a while. So
yeah.
Yeah, I mean, like, it's a beautiful time for Bitcoin, I think. Bitcoin is catching up a bit. We're here in Miami. I like to see low prices. We get some time for accumulation, you know, it's important as well. So yeah, having a great time. Thank you for having us.
Borja, my long-lost Argentinian cousin. We have 2 Sewards on the panel.
Sewards.
This is amazing. Who would have thunk it? It's wonderful to finally meet you. I wonder where our family paths crossed.
I mean, I guess that you guys went to the US and we went to Argentina.
I guess so. It's pretty nice down there.
I'm starting to see some similarities, you know, as I
yeah,
look
you
at
know
you,
what?
Zach, I look at you, Borja.
It's in the blood.
I think there's something here.
Yeah, we're both very beautiful.
For another day, for another show. I do want to talk about Argentina. You know, Jen and I had been down there maybe a couple years ago at this point, and really seeing crypto adoption there is, for me, was like truly inspirational, right? Because it's actually solving a need in the lives of day-to-day people in Argentina with all sorts of inflation and other economic issues. So I wanted to open just by asking you, as someone from Argentina, and seeing crypto really take off in that context, you know, what people who may be based in America and sort of complain that, you know, Bitcoin doesn't really do anything, whereas in Argentina, you really see that it does stuff in terms of preserving wealth. So I wanted to open that question with you and just get your thoughts.
I mean, you just gotta understand that in Argentina, like, we've taken zeros out of the Argentine peso, like in Venezuela, several times. We've reinvented our currency like at least 5-6 times. So the trust in our currency is lost, right? So something that happens in Argentina many times is people looking for a harder and stronger currency. And for a lot of time, this was the dollar, right? But what happens in Argentina, luckily for Bitcoin and for crypto, was that because everybody was looking at an escape hatch on the dollar, then governments, what did they start doing? They started prohibiting the dollar, right? So, hey, everybody's buying dollars, nobody's keeping pesos, let's forbid and prevent everybody from accessing the dollar, right? And then what happened was, and in 2011, people started jumping, let's say, and going around that regulation through Bitcoin. So then Bitcoin became like actually a way to bypass very bad regulation like that was detrimental to the population. And then people like started learning about Bitcoin. Then of course stablecoins made the whole bypass much simpler and less volatile. But then what happened was that Argentines said like, there is this currency that is printed by no one, that is completely independent, decentralized, and so on. And Argentines, we understand this very well. So when we saw this, like many Argentines saw like, hey, this is a stronger currency. It's not the dollar, maybe it's this. And I guess that today we're there. Like there's around a quarter of the economically active population in Argentina that actively holds Bitcoin. Today, stablecoin adoption is huge. So I think that there you see an example of how when governments try to step into personal finance and just be detrimental to the citizens of a country, Bitcoin and also stablecoins end up being like a great escape. So
what's the split? Because when Zach and I were there, we spoke a lot about stablecoins and what stablecoins are doing for locals. And it feels like, you know, when you're in a country like that, when inflation is so high, when you're not making as much as we are here in North America, stablecoins feel a little bit safer. Bitcoin is still pretty volatile. So what's the split when we talk about Bitcoin versus stablecoins in Argentina or more broadly Latin America?
Look, Bitcoin is a long-term saving, and dollar is like kind of replacing the peso in the kind of the medium of exchange, and that is where I think that products like what Adam is doing at Legislating come into place, because basically they allow you to save, right? And Adam will be able to talk a lot about that, but how they can allow you to save. And in Argentina it happens a lot. It's like, hey, I don't want to sell this, I'm going to live on this. So Bitcoin is a longer term thing, and the dollar is kind of becoming like the medium of exchange.
Yeah, we saw, I mean, we just did the first ever investment grade ABS for Bitcoin. And what was interesting about that and what we were most proud of was it was actually the first time that a bond issuance was able to combine borrowers from different countries into one. So normally it's like you're American or you're not American, and the American standard is higher rated, and the rest of the world is lower because of traditional credit. But because it's Bitcoin was the main collateral source. As we all know, Bitcoin's the same to everybody. So now we're able to treat Argentine borrowers the same as American borrowers, and of course not just those two countries, everywhere, because we all know Bitcoin's the most pristine collateral. So that was really interesting to push forward.
Yeah, Adam, I wanted you to take on this because you're kind of advancing, Bitcoin into the financial system in a meaningful way. I feel like a couple of years ago there was a ton of noise around sort of BTC-fi and getting yield natively on your Bitcoin holdings. Seems as though a lot of that excitement has waned or tapered off. Really curious for your thoughts on the rise and maybe subsequent fall of some of the Bitcoin L2s and why you think that is.
Yeah, look, I think first off, the yield on dollars, the way you generate it is extremely different from how you generate yield on Bitcoin, right? So, the lending space within the Bitcoin community and broader digital asset system, kind of gets confused and mixed. But as we all know, dollars can be used for many things, right? And so when you're trying to generate yield on dollars within the Bitcoin ecosystem, you're competing with something like lending to restaurants, right? Like many different competitions for all different types of loans. So I think first off, what we're seeing now is I think the better use case for yield on Bitcoin is becoming collateral. So I've run into some interesting companies doing things like insurance, situations where you need to post a lot of just capital to sit there. That's creating some interesting use case for generating a yield on again Bitcoin. But I think the yield on dollars, what we focus on is a different use case and far lower risk because of how you can collateralize it.
Adam Borja, we got to leave it there. We hope you enjoy the rest of Consensus 2026. It was a pleasure chatting with you.
Yeah, thanks for having us on.
All right, that was Roxum co-founder and CEO Borja Martel Seward and Legislating co-founder and CEO Adam Reeds. Now we're going to go to artist and creative technologist Jayan Silva. He's on the showroom floor, showcasing the voices of attendees, speakers, and bringing the vibes to the program. Let's see what he's up to.
All right, y'all, we're here at the National Cryptocurrency Association's booth. Here they have this little amazing hideout called Crypto Confessions. People can pop in, give us their hottest take, 30 seconds. Let's check it out.
The first thing I think of when I heard the word crypto is how Bitcoin changed my life. In December of 2010, somebody called into my radio program, Free Talk Live, and they talked for about 10 minutes about magic internet money. That was what we believe the first moment that Bitcoin appeared in major media.
So over the next few years, I expect that the crypto industry is going to absolutely explode, because I really believe that crypto is going to underpin everything we do in transactions and finance.
So I'm from London, and in London, crypto is not as popular as it is in America. I wish more people knew that crypto is the future. They knew about the technology. They didn't just hear the headlines from the banks used to put out that crypto is dodgy, because now all the banks are adopting crypto. So I just wish people could take their personal opinions out and really look into the technology.
I love the freedom and the potential freedom it gives individuals in the world to transact, especially people in the world who don't have the opportunity to get a bank account.
It has changed my life, and I know it can change the lives of so many others.
The first thing I think when I hear the word crypto, it's freedom, it's empowerment, it's accessibility of capital.
The first thing I think about when I hear the word crypto, I think about digital, I think about future. I think it's what's next, it's where the future is headed.
And it's such an exciting time for our industry. I really believe that we're in an inflection point where everything we've been talking about for over a decade now is really finally coming to life.
Bitcoin treasury companies used to be simple: raise money, buy Bitcoin, and hold it. Midway through 2026, that legacy model has evolved substantially. Joining us now to discuss are Catherine Dowling, president of the Bitcoin Standard Treasury Company, and Matt Cole, chairman and CEO of Strive. Hello.
Hi, thanks for having us.
Thanks for being here to kick off day 2. We are here at Consensus 2026. Zach has his Miami Vice outfit on. We are really starting to feel the vibes. And we're talking about treasury companies. So why don't we just kick off here, Catherine? I'm going to start with you. Just like lay a really quick foundation for us on the evolution of treasury companies and talk to us about that future you're working towards.
Yeah, absolutely. Well, evolution dates back even before the treasury company model that we're currently seeing. Before becoming president of BSTR, I was at Bitwise, and kind of the early days at Bitwise, we created a fund for an ETF for all of the companies, index-based, who had placed Bitcoin in their treasuries, right? So, and that was more of the hold it, see what you can do with it on your balance sheet. Now, fast forward, we're looking at much more of an active strategy. So at BSTR, we're looking at actively managing the Bitcoin, not just stockpiling it, not just financial engineering. Financial engineering is incredibly important to meet the market where it is. It's a very important part of the strategy. But the other portion of the strategy is the active management of the Bitcoin and getting yield and alpha returns on that Bitcoin. I think that's incredibly important and something that investors have been asking for. Even dating back to my Bitwise days, investors were looking for that version 2. Okay, we have Bitcoin now. We have the exposure, but we want to do more with that Bitcoin. We don't just want to wait for the price appreciation. You know, we're Bitcoin positive. We believe the fundamentals are there to have that price appreciation, but we want to see what else we can do with it, but do it in a conservative and do it in a safe way. And that's what is part of our strategy at BSTR, to actively manage the Bitcoin.
Okay, so that's one flavor of the DAT playbook in 2026. Matt, I want to turn this to you. You guys seem to have a different approach, acquiring some companies, doing some interesting moves. What does your version of the playbook look like for 2026 and beyond?
All in on digital credit. So we believe that the demand for a double-digit yield where the issuer, whether it's Strategy or Strive or maybe in the future BSTR, is taking steps to actively minimize the volatility as an issuer, which is pretty rare. So through different actions, like whether it's raising or lowering the interest rate, whether it's increasing the balance sheet strength, adding cash, adding more Bitcoin, that we can grow this, I believe, to $1 trillion plus TAM in the next several years. Digital credit's already more than $10 billion. It's been around for less than a year. I think outside of the Bitcoin ETFs, it's the most successful launch of a financial product in capital markets history. And I think what you're seeing is that that's going to filter out throughout everywhere in the economy. It's going to filter into everyday Americans, high net worth Americans. I think it's also going to filter into the crypto economy. I think the regulation of clarity and that stablecoins can't pay interest make digital credit actually a killer app in the crypto community. I mean, would you rather have a stable?
You're the only person I've spoken to who said that stablecoins not being able to pay interest is actually going to benefit a part of this industry. So this is
it's going to benefit us.
Yeah.
And in a major way, because, and you're seeing this, so you're seeing APYX put Stretch and SATA on chain. Then you're seeing other protocols like Pendle connect to APYX and filter this out. And I think, I mean, you know, obviously there's a lot of demand overseas for stable coins to get their money out of captive countries, right, and to be on chain. Well, if you can bring something similar and offer 13% or 11.5% like Stretch, 13% with SATA, I think it could grow massively in the crypto community.
Catherine, I want to put you on the spot. I mean, so we've seen other, DAT strategies around ETH, other assets that are native to other layer 1 blockchains. Do you guys see this opportunity as uniquely well suited to Bitcoin, or do you see this as a playbook that can successfully work for a BitMine or say another digital asset treasury company that is not Bitcoin focused?
I mean, obviously we're Bitcoin maxis, so we believe, start with Bitcoin, but, there definitely are other, DATs that are not Bitcoin that are executing on their playbooks, right? Like Tom Lee is out there, and I think there's some good players in that space, but we think from kind of the fortress balance sheet with Bitcoin, there's so much opportunity. And I just ask people to imagine all of the opportunity with fiat and just think about if you Bitcoin in the place of fiat and what you can do with that. And we, from where we sit, because we have some sister companies that are investors in the space, we see so many of these younger businesses, and we call them Bitcoin financialization businesses. So there's a lot of opportunity down the line for opportunistic M&A within our platform and within other platforms. And it becomes pretty exciting when you look forward at the potential of those young businesses, many of whom, because of the regulatory clarity we're seeing and continuing to see, I'm an optimist, I think clarity is going to happen. I've been in this space for about 6 years, so I've seen every rendition of clarity and genius. And I think that's going to further embolden some of these companies to execute their business strategies here in the US, and those become part of that bridging the gap between TradFi and digital assets. So the Bitcoin financialization, it's coming, it's here to stay, and it's super exciting, but it presents kind of that next evolution of M&A opportunities within our space.
Matt, as we're talking about, we're starting to see Treasury companies really start to diversify, start to offer actively managed strategies. Talk to me a little bit about how you're thinking about the future. Do you think we're going to see a consolidation? It seems like every day we're talking about a new digital asset Treasury company. What does that future look like?
Yeah, so my view is that every company that has a long-term outlook putting Bitcoin or digital credit on their balance sheet is a good thing. I think we saw a expansion in a major way where a lot of companies didn't even have full staffs, they didn't have full strategies. And so now I think we're kind of probably in what I would call a consolidation period where the winners that actually have teams and strategies, obviously our focus is digital credit, but there could be other focuses. It's not like that's the only focus that could actually grow a Bitcoin stack. But I think we consolidate, and I think ultimately we end up with substantially more companies over the long run putting Bitcoin risk on their balance sheet through Bitcoin exclusive, actually, or digital credit. I think we're seeing a pretty nice explosion in corporations starting to put digital credit on their balance sheet. Strive's announced a couple, Strategy's announced a couple, and I think there's going to be more to come.
DATs were riding high at the end of last year, right? And then we saw massive drawdowns. Is there a degree of sort of public education that you guys do being in the public markets to make investors comfortable with some of the crypto native volatility that, us seasoned pros have seen time and time again? I'm very curious if that's part of the package here as you go on top.
You're spot on. It's an incredibly important part of the package because you need to if you want the institutional capital to come in, you need to spend that time educating and giving that level of understanding, as well as a level of security with the systems that we're setting up and why they are safe and they're conservative. So we spent a lot of time, my team and I, and we think we're building the veteran team in the industry to deliver not just the product, but also explain the operational fundamentals behind our business model and how important diligence is, how important setting up the risk mechanisms are going to be. I mean, it's public companies. You have a duty to do so, and the educational mission of not just that volatility and explaining that aspect of it, but also showing that you have the secure foundational elements operationally behind the scenes, so it's not some black curtain that the investors don't understand. And that gives a level of comfort to the institutional investors that the hope is brings in that long-term capital, kind of move beyond the arb traders into that long-term capital that is going to be really important for our space as we evolve into version 3.
Maybe another interesting thing that we've seen. So part of it is education. We're all education, leveling up the talent within the industry, institutional backgrounds, but also it's track record building. And so when we launched SEDA in November and we did our IPO process and our follow-on process with talking to all the institutions, the biggest question at the time is, well, how is this preferred equity going to do in a bear market? We're going to start with a 12-month cash reserve. Are you going to use that cash reserve in a bear market? Bitcoin went down more than 50%. Right now it's down more than a third from its all-time high. Digital credit, both SEDA and Stretch, are right at 100. Their biggest drops were around 10% and recovered very quickly. Our cash reserve actually increased from 12 months to 18 months. And so what we're showing, and we've obviously made every single dividend payment, is that in times of stress, the capital markets remained open to digital credit issuers, and we were able to meet our obligations, control the volatility, and then that's like, okay, we have a team. You asked us what's going to happen in a bear market. Look what just happened in a bear market. It worked, which obviously will drive comfort going forward, where when we first launched, it was like Strive could not have an amplification ratio more than 25%. Our follow-on, they let us go higher. Now you had Strategy on the earnings call saying when we retire our debt, well, Strive has basically no debt. They might go to 50 to 60%, and now they believe it's less risk than having the convertible notes, and I would agree with that.
Yeah, the education is not just about going north, but how do you handle going south, and having the collateral and the operational fundamentals to protect for that, and that's part of the education that's so important, and it's going to drive capital.
All right, Catherine, Matt, we got to leave it there. Thanks so much for joining us at the desk, and we'll see you around the conference.
All right, excellent. Thank you both.
Thank you.
Thank you.
Yep.
Yeah.
That was
We'll be
Catherine
in a
Dowling,
little warm-up.
President of Bitcoin Standard Treasury Company, and Matt Cole, Chairman and CEO of Strive.
Markets move fast, crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
What's your first move going to be? Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Live right now? Hey everyone, welcome back to CoinDesk Live from Consensus Miami, brought to you by MoonPay. I'm Jen Sanasi. Will Foxley is joining us at the desk, and Zach Seward has switched his seat. Look at us playing musical chairs up here.
Zach's wearing a suit today. I'm not.
I know, but Zach's suit is very Miami crypto.
We're in Miami,
Yeah,
guys.
yeah.
Miami. What are we doing here? Come on.
Will dressed very institutional yesterday. I was very surprised.
Yeah, I got like a Norwegian thing going on today.
Will head faked me. I saw him last night. You said you were wearing a suit last night.
No, I said I wore a suit that day.
Well,
but
that's
today,
the old mental. That's the old.
dressing down today.
That's the old. All right.
Yeah, it's still appropriate.
You're still looking good. I mean, we're getting the band back together, guys. This is
I
super
know, I love
awesome.
this. We got an open fourth chair for that rotating host.
That rotating host. That's always the wild card host
That is
right
always
there.
the wild card
That one.
host.
Woo! We've had some good ones in that.
We
chair.
really have. We've gone through it all. We've seen it all. We've had great times.
Bad
and here we are at Consensus 2026. Who would have thought that we would be sitting here?
I mean, it's the Lindy effect, right? You keep doing something, you keep doing it. So
Yeah.
we're still here. We're still doing
here.
TV stuff.
Hey guys, the hash.
Underrated.
Yeah.
Underrated.
100%.
Underrated. It's official.
Some have said it was front ran TBPN. You know, it's like
I know.
I think there's some value
We were just too early.
to that.
We were too
idea.
early. We could have been so rich. Oh my
Could have been so rich. There's still time for us.
Sam
I
Altman
think.
could have bought us for $200
That
million.
would have been so sweet.
Do you think the audience knows what we're talking about?
TBPN. It's the guys who wear suits and they got
No, I
they
know.
got bought for like
I mean
$1
the hash.
billion.
I mean the hash.
Oh, the hash?
But I don't think
Come
they know
on.
what we're talking
You know
about.
there's hash fans out there.
Fans out there.
Raise your hand if you're a hash fan out there, guys. Yep. There you go.
There we go.
There you go. I saw them down the line. There was some people out there.
Oh yeah?
Oh yeah.
I love that.
Yeah.
All right, so maybe we can just have a photo opportunity for some of those folks later. Come find us. We will take pictures. We will sign autographs. Will, you were at the desk with us yesterday. What are you going to get up to today?
What did I get to already?
What did you get to, and what are you going to get to?
Because I was already on stage at the Bitcoin Summit. My favorite place in all Consensus. Consensus is great. Miami is great. We're having a lot of fun here. But the Bitcoin Summit stage, we programmed that. We put a lot of time, sweat, blood, tears into it. And it's pretty awesome. We kicked it off this morning with like a little panel about Bitcoin L2s with the idea of if you build it, will they come? We know that story in crypto. Oftentimes people don't come. But then that one idea does stick, like Bitcoin itself or Hyperliquid or the ETF even, and tons of people come. You can't even contain the demand. So I think that was a fun way to kind of kick off the day. The rest of the day is consensus. Got to meet everybody. Tons of meetings.
Okay, so you helped program the Bitcoin stage. What was the one standout conversation or one that you were looking forward to?
That is a great question. I mean, I think the one this morning I was most excited for because I was on it.
Because you were in it?
Yeah.
Okay,
A
well.
little self-deluded,
thanks, Will.
but there's some other
That was
ETF
so
ones
funny.
that are interesting.
Yeah. You're like, I love that, like, known Bitcoin maxi here, Will Foxley. He's like, yeah, the Bitcoin thing. And then the rest is consensus, kind of like a low-key
Consensus is
sneak
great.
diss. We see how it is. We see what's going on.
I got a question for you, Zach. Yesterday, Sam Ewan said at the desk several times that NFTs are making a comeback. Some folks agreed with him mildly.
Wow.
Are NFTs making a comeback?
I mean, if they do, that's big for you.
It is big for me.
You are the hash NFT expert.
NFT queen.
This was a great bit for many years
It
in
was.
which NFTs rose and fall. They rose, they fell.
Metaverse.
Mostly fell.
We could kind of make fun of you both ways,
I
like
know.
at all times.
I know.
So like, if it comes back, there's a whole new opportunity for you to be an NFT influencer again.
It's true.
It's true.
I don't know that. I mean, I was a little bit of a fair weather fan. NFTs died, and
I mean,
I moved on.
I
I don't know.
didn't,
Would I?
Weren't
Yeah.
they all?
Would I go back? I don't know.
The ironic thing is I was a huge Pudgy Penguins fan at the time.
I'm
They're
still a
doing
Pudgy
great.
Penguins fan.
I'm a great picker.
I'm still a Pudgy Penguins fan. Yeah, you are a great picker.
Thank you.
Will, the great picker.
Well, you were like an ordinals guy for a minute, right?
You were.
Still am.
You still are?
am.
You're still
I mean,
have
we're
conviction?
down. It's worse than NFTs.
It's down bad. Yeah, ordinals is down real bad.
Yeah, it's not even a thing anymore.
I know.
Wow.
So.
Are you a Pudgy Penguins fan?
I mean,
Wow.
I like the little guy. I mean, I don't.
I love that little
have
guy.
one. I mean, he's a little cutie. I think they.
I like the
I've
roadmap.
get a little plushie. The
Yeah.
physical thing is
Yeah.
pretty cute.
I have
so,
a ton of them.
Yeah, no complaints.
many.
No complaints.
All right. Well, that's it. We're all Pudgy Penguins fans here. Zach, thank you for joining us.
Thanks, Jen. It's always
Pleasure.
lovely to be on stage with you.
I think you're going to be back later.
Maybe.
All right.
All right.
Zach's going to be back later. Will and I are going to stick with you. Stick around.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Quantum computing is no longer a distant theoretical risk for crypto. Recent research has compressed the estimated resources needed to break widely used cryptography, while the industry still has to solve the hardest part: how decentralized networks migrate before Q-Day arrives. Joining us now is Alex Pruden, CEO of Project 11. Wow, day 2, and I can't read letters. Day 2, and I can't read letters.
I'm known by many names.
Yes, CEO of Project 11. Thank you so much, Alex, for joining us. I'm just going to start off by asking you this, because you said you get asked it a lot on panels, and I actually want to know, when do you think Q-Day is going to be?
So I think Q-Day is going to be 2033, and I think that because we actually just published a comprehensive research report that takes as input lots of leading edge quantum research, blockchain vulnerability assessments. It's the definitive resource for understanding quantum and blockchains, and in that report, we have a modeling framework by which we kind of try and estimate when this will happen. And so based on that framework and our deep research, my bet is that by 2033, there's a greater chance than not that Q-Day will arrive.
Okay, that is a lot to take in one segment.
All right.
So what are we gonna do with all these coins?
Yeah. What do we do?
What do we do?
All right. Well, the thing to do is to not panic. One, right? There's no need to panic.
Well, I already failed that.
Will's already panicking.
It's all right. Just take a sip of coffee and you'll be back. The important thing to do is everyone just needs to start thinking about this problem today and considering it. And it's important to note that blockchains have faced existential threats before. I mean, in the early days of Bitcoin, Ethereum, there was the Ethereum Classic DAO hack fork. I mean, this is not the first time that blockchains have faced existential threats, but this is kind of a special existential threat because it breaks kind of the very foundation of the cryptography that we use, which means that it's even more important to get started earlier rather than later, and that's basically the name of the game for us at Project 11.
Are there blockchains that are more at risk than others?
I think every single blockchain is at risk in different ways. I think there are, Bitcoin is the one that everyone always talks about, mainly because Satoshi's coins, right? Satoshi is he, she, they are presumed dead, and so what do you do, in a post-quantum era where they may not be able to move their coins, and is that a bounty for a quantum computer, and do you burn them, or do you let the quantum computer take them? So I think Bitcoin kind of has that unique problem. But to be clear, other blockchains have challenges too. Bitcoin has a proof of work consensus algorithm, which is not vulnerable to a quantum computer. The signatures are, but not the proof of work. Whereas proof of stake blockchains have that extra layer of vulnerability. Really, the only chains I would say are like maybe a little bit better off are chains that have privacy, because a quantum attacker doesn't necessarily know which wallet to go after because they can't see the contents.
I want to dig into that a little bit more. So with Bitcoin, we have certain addresses that are very exposed to the Satoshi coins, for example, just because they're very older address type. And then we also have in Web3 this stack problems, which has always been the case, right? We have all these DeFi hacks last month. That's a problem. And now we have this quantum problem where we use so many different layers of infrastructure for Web3. How are you guys thinking about that at Project 11? Who are you talking to? What projects are you pitching on using ours as services or just consulting with them? Where's the, how do we fix that group of problems?
Yeah, look, I mean, two core theses of Project 11 are that blockchains and digital assets are critical financial infrastructure. They're only becoming more that way. We see Bitcoin and issued in ETFs, stablecoin adoption going through the roof, DeFi, finally getting institutional. I mean, blockchains are here to stay. And, but also quantum, the second thesis is that quantum computing is real and is coming. And I think, for blockchains to have a future, ultimately they need to be future-proofed against this threat. And so we work really up and down the stack, so to speak. So the protocols, right? We work with several protocols. We've done some work with Solana in the past. We're doing some work with some other folks that we'll be announcing soon. Helping them basically understand at the protocol level what they need to do to integrate new cryptography. But not just them, the institutions also need to prepare for this, right? Institutions with digital asset exposure, from stablecoin issuers to, ETF issuers to, folks that are just trading or thinking about DeFi or real world assets. I mean, this is a kind of end-to-end problem that affects everyone, because it's not just the protocols can't just fix this, as the Satoshi coins kind of show. Bitcoin core devs can't fix Satoshi's coins. That's how this system was designed, right? And there's important reasons for that. But that means it's got to be kind of a whole of industry effort. It can't be limited to just the protocols or just the apps or just the institutions.
Mm-hmm.
Project 11 recently awarded a 1 Bitcoin Q-Day prize for breaking a small elliptic curve key on public quantum hardware. Talk to us a little bit about why that was an important test.
Yeah, so I want to make sure to frame this correctly. So I think that was basically a moment where we, we're basically trying to help educate the world on the existing quantum capabilities, which, to be very clear, are not cryptographically relevant. So quantum computers that exist today cannot break Bitcoin or any such thing, right? But I think the important thing, the takeaway from that prize, is that what we really need as an industry are tangible benchmarks of quantum computing progress. Because so many times in this conversation, people love to throw out things like, oh, well, it can't factor 21, or oh, it can't do anything. It's all super small. But the reality, because we have advisors that work deeply in quantum computing, the reality is that this pace is moving very quickly in ways that is not obvious to everyone. And it's challenging because, for blockchains and for institutions that need to have, it may potentially make investments and take time to prepare, they need to know when to start. And they also want to make sure they don't throw away what is proven secure for no reason, right? So the Q-Day prize to me the story is really, hey, how can we make better tangible metrics for tracking quantum progress that isn't an academic paper, that's not a resource estimate, that's something tangible that security professionals can really anchor onto?
Understood. So what does that look like in, say, 2 to 3 years? What does a test look like that's better in your mind for kind of proving that? Or do we have to wait?
I mean, it's tough. I in the aftermath of the Q-Day Prize, it kicked off a lot of discussion on this topic. I asked Craig Gidney, he is the Google cryptanalyst who wrote the recent paper that talked about the reduced resource estimates. I asked him point blank. I said, "What's the right tangible metric?" He's like, "I don't really have a good one." And this is the person that's working on breaking these systems potentially, right? So I think it's challenging, but that doesn't mean we should stop basically asking for one, not just from kind of the broader crypto community, but from the quantum community. I think though the next thing to look out for people who are paying attention at home or kind of reading PopSci is, we've created what's called a logical qubit. A logical qubit is a collection of physical qubits that's more resilient, right? So we kind of created a logical qubit in an instant. The next step is to basically run that logical qubit for some length of time. And then if you scale those logical qubits from 1 to 1,000, then you're at Q-Day, right? So the next thing is to go, basically have a continuously operating logical qubit.
Doesn't that get, one more? Doesn't that get to the heart of the problem though? We don't know when Q-Day is going to happen, right? We don't even have a test that seemingly...
Yeah, exactly. I think, this is exactly why this is a problem, right? Is because these are very intangible. Even this concept of a continuously operating logical qubit, people watching this are like, I don't even know what any of that means, right? This is very arcane, this is very intangible. And there's one more important thing. A lot of the quantum computing funding is being done by the government and by intelligence agencies that have a vested interest in keeping progress kind of under wraps, right?
That's great.
And this is, so I think, again, we're not, I'm not helping with your panic, I know. Well, again, though, I think the important thing is that, we don't have to panic, but this is all uncertainty that we just have to prepare for now. Because the worst case, the time for panic will be if we just ignore this problem, pretend it's not real, 5 or 10 years from now, we wake up and we're like, oh no, it's here. That will be disastrous. And so that's what we at Project 11 try and encourage everyone to think through, what we want to avoid.
Well, Will's going to have to take a little break, I think, after this. I have a little bit of anxiety, but Alex, it's okay. We're going to leave it there. Maybe we'll talk to you later and we'll feel a little bit better about where things are heading. Alex, thanks so much for joining us at the desk.
It's always a pleasure. Thank you.
All right, that was Alex Pruden, CEO of Project 11.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Bitcoin holders have historically faced a trade-off: keep Bitcoin in self-custody or hand it to a platform in search of yield. Go Mining and Babylon Labs say they are trying to remove that trade-off with a planned integration that could activate up to 1,000 Bitcoin, or roughly $75 million for native Bitcoin yield through mining rewards. Joining us now is Jeremy Dreyer, Chief Business Development Officer at Go Mining. Hello.
Hi.
How are you enjoying Consensus?
Oh, it's amazing as always.
Yeah. So an announcement yesterday, I kind of teed it up in my intro there, but just talk to us a little bit more about what this means.
Yeah, we have a very exciting partnership with Babylon that we launched yesterday officially, and in essence, the biggest problem one of the biggest problems with Bitcoin is it's not really a productive asset. So, especially if you don't want to lose self-custody. So what Babylon has done is they've created trustless vaults, which allow you to lock your Bitcoin on the layer 1 without losing self-custody, but then in turn use that as collateral to loan against it through Aave. So their partnership is with Aave and Aave's new V4 that's being launched here shortly. And then the stables that you receive from that loan can now be put into different type of vaults. And we are partnering with Babylon to produce the first Bitcoin mining vault, which will allow you to actually produce native Bitcoin yield on self-custody Bitcoin.
Okay, walk that part out for me a little bit more, because there's a lot of integrations and names there, but talk to me about how you're getting Bitcoin native yield through a vault.
So if you kind of take the trail of how it's going to go, you have Bitcoin locked on Babylon, on the layer 1, take that loan in stables through Aave, whatever the LTV is, you can work that out based on the investor. And then on the vault side, those stables are going into a structured product that's going to use our mining infrastructure. So Go Mining, we're the largest provider of Bitcoin mining as a service per se in the world, where we are very good at producing a yield from Bitcoin for our users, investors, and so forth. So this is just a new product on our side that allows that capital that's coming into the vault to produce that yield from mining in a more understandable way for institutions.
I'm curious to hear more about the future you're building towards when it comes to Bitcoin. Like when you wake up in the morning and you think about the milestones you want to hit and that future you're building towards, what is it?
So, I mean, we built Go Mining around mining infrastructure. That was our main product, was our digital miners, which allows anyone in the world to mine Bitcoin more or less directly from their cell phone. And we've grown that immensely. We've now at around 15 exahash of hash rate that's been sold via our digital miners. And we have over 5 million users globally, and that's great. But as Bitcoiners, as Bitcoin maxis per se, we understand that the future of Bitcoin is not just that store of value, not just, okay, we need to mine it and earn as much as possible. We need to help Bitcoin become that medium of exchange. That's the next step in Bitcoin, and we truly believe this. So the transition that we're making on the Go Mining side is we're more or less becoming a full Bitcoin ecosystem, or per se a Bitcoin super app, which allows anyone to not only earn Bitcoin through mining or through other sources, but to earn on that Bitcoin, to borrow against that Bitcoin, to borrow against and use your miners as collateral. So you can now kind of use all the different financial products around Bitcoin so that you can use it in real life. So we've rolled out debit cards. So now you can spend your Bitcoin in real life. We've, this was another major announcement that we had yesterday, and our CEO is going to be on stage here in about 10 minutes to kind of share the details to the world, but we've rolled out our own new payment protocol for Bitcoin, which allows you to pay on the Bitcoin layer 1 without any transaction fees.
Will, you brought this up yesterday, and that was the 21 Capital potential merger, where 21 Capital is looking at doing something similar, having a treasury company, a miner, and a payments infrastructure all under one roof. I mean, you said that's the future that you're also building towards. Do you think we're going to have, a boom of these diversified Bitcoin companies, almost like we did with digital asset treasuries and miners, and then we're going to see some kind of consolidation?
I wouldn't say so much a boom, but the larger players in the space, especially those that are deep believers in Bitcoin, I think we need to move in this direction. We need to provide these services, and it has to be, what we've also done very well on the Go Mining side is we've built products that are easy to understand, easy to use. It's not something complicated. You don't have to really understand, how to bridge funds or send funds. We make it very simple, but also we make it Web3 native. So you're still protected, you still own your own keys, all the stuff that's very important, but through education and through onboarding, we make it as easy as possible for anyone to use those products.
I want to follow up with that thought right there, because the announcement that you have has a lot of parts, right?
Yeah.
Aave, and then you have Babylon, and you guys have the Go Mining side of it. And I think for a normal investor space to kind of glaze over a little bit, they just want to know about Bitcoin mining rewards, and that might even be hard for them to understand. So from the app itself, it's pretty intuitive and simple to use, but how do you guys sort of choose to market around the different parts with the product you're building? You don't talk about the Aave part as much or the Babylon part as much, do you? Or is that part of kind of growing the app?
Yeah, so the partnership with Babylon and Aave on the onset is going to be mainly institutional.
Okay.
And the Go Mining app is mostly retail.
Gotcha.
So that's more of the behind the doors discussions that we're having with institutions that are looking for this type of yield. There is a path where this could become something on the retail side where it's more of a liquid yield product. but that's step 3, step 4 down the road. How we're kind of marketing Go mining to the world is it's still everything comes through our digital miners, everything comes through our main product, and then it's expanding into all the other products around that, so that once you mine that Bitcoin, now you have a way to actually utilize it.
So just a follow up there. I'm thinking of like the whole world of EVM, and that there might be so many people who are familiar with Aave at this point, or familiar with other things. Are you guys going to like push that product to anyone who's like familiar with the EVM world, that they might be interested in a product like this because it has a Bitcoin native part to it that's like a different marketing angle versus all the other pools that are out there?
Yeah, so, I'm sorry, I'm not really following what the question is.
Just to kind of thinking about like all the other pools that you could earn yield on Aave, how does this one differentiate versus those?
Because this is the first time that you actually can receive a real native yield in Bitcoin. The only real yield in Bitcoin is through mining.
Yeah.
And in the past, if you wanted to use your Bitcoin to mine, you had to sell that Bitcoin or borrow it through a third-party custodian or something like that to be able to receive stables or dollars or whatever you want to put into mining infrastructure. Now you're locking in, or you're, more or less if you're an investor, you're taking a tax event on that sell of that Bitcoin. So for large institutions, large holders of Bitcoin, their number one thing is I don't want to sell my Bitcoin. I don't want to lose custody of my Bitcoin. And this is the first time in history that you can now self-custody your Bitcoin and produce a native yield on that asset.
Nice, okay.
Yeah.
Jeremy, thanks so much for joining us at the desk. We look forward to hearing more from Go Mining on stage later.
Thanks,
Pleasure
Jeremy.
to be here. Thanks.
All right, that was Jeremy Dreyer, Chief Business Development Officer at Go Mining.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
Senator Kirsten Gillibrand has been one of the key Democratic voices on crypto legislation in the Senate, working across the aisle on both the Lummis-Gillibrand Digital Asset Framework and the Genius Act stablecoin bill, with stablecoin regulation moving ahead and broader market structure still unresolved. Senator Gillibrand joins us now. Hello.
How are you?
I'm doing well. How are you?
Very well.
Well, in my intro, I said that broader market structure is still unresolved, but we have had some resolution come. Well, just want to get your thoughts, lay a foundation for us, where we are with market structure, and are you optimistic that we will get this to the finish line before midterms?
I am optimistic. We really only have a few outstanding issues, and the different negotiating groups are working in very good faith, and they've made a lot of progress. We have a few more consumer protections that we need to nail down, specifically for the CFTC, but also to make sure states can enforce their consumer protection laws. So that's important. And then we're making sure we have the right balance between protecting coders and builders, but also making sure there's tools to go after illicit finance, particularly terror financing. And then third, we really want an ethics provision to ban all members of Congress, all senior administration officials, president, vice president, from being issuers or promoters, because we don't want people to be getting rich in positions of authority when they're regulating the industry. It's against all ethics laws. It's against campaign finance laws. It's against the Constitution. So we want to make it explicit that we cannot allow this type of participation by lawmakers and people in senior government roles, because they have too much inside information and they have a disproportionate amount of power.
There's two really awesome questions I could ask right there, but I'm going to stick with the first one on the ethics part, or on the second one with the case of like ethics and how you guys are going to approach coders and developers. So we have the Samurai Wallet case where a few people were put in federal prison for their involvement in building that, and then we have the Tornado Cash case, which is ongoing. We had the Defense Counsel for Tornado Cash here yesterday on stage. Will this provisions in the Genius Act change any of that with targeted enforcement of past regulations on developers, or do you see that changing once this bill is passed? Do you see it like loosening up into the future?
So my hope is that we have clarity so that we are protecting coders and developers, and they know that they can build things that are innovative and exciting, but also rely on technology to figure out how to protect against illicit finance and how to protect against terror financing. I think a lot of platforms and a lot of types of digital assets have unique characteristics that can make it easy to have transparent view into participation if it is going in the wrong direction. And working with FinCEN, for example, for any company, just to work directly with FinCEN on a plan about how to keep our market safe is probably a really smart and thoughtful step. So we're just trying to find the right balance, because we definitely want to protect our builders, but we also want to make sure that they can use their good tools to help. And I think we're going to find the solution through the negotiations.
I want to talk about the ethics piece. We had CoinDesk reporter Jesse Hamilton at the desk earlier today talking about a poll that we did at CoinDesk. We surveyed 1,000 voters about their perception on crypto, and more than 70% of voters said that they don't want to see anyone in the administration holding crypto and creating laws about crypto. And I think that kind of bleeds into the conversation that we're having around market structure when it comes to ethics. Do you think that we're going to get a resolution there? And what does it tell you that voters, we did, I believe, equal parts, Democrat and Republican, are feeling this way?
Yeah, people don't want members of Congress and senior administration officials and people in great power to be gaming a system and getting the benefit of it. We have pay-for-play laws for a reason. We don't want people paying off lawmakers or paying off presidents because they're issuing a cryptocurrency or issuing a meme coin and they just throw money at them. That's terrible. So we can do this. It should be the law that we set for now and for the future. And it's common sense. And I really believe there's a bipartisan willingness to do this. So I hope I can get a meeting with the White House in the next week to just directly make the case. This is good for America. This shows leadership, and it shows strength.
Is there almost a tension there between the willingness to get it done and the fact that the president and his family are so involved in the space?
Well, it's not so much about his family, but it's very much about the person who has the authority. So it matters if you are the member of Congress. It matters if you are the senior administration official, the department, like the Secretary of Commerce, or you are the Secretary of the Department of Defense, or you're the president or the vice president. We have all these anti-corruption laws for a reason, and why would you want the industry to be dragged down by allegations of inappropriateness? You just don't need it. So getting that provision is essential to getting a bipartisan bill actually finished.
With the Genius Act, we had some news this week, which was really interesting. I just want to ask you about it. We had sort of a compromise, or perhaps a compromise going forward. I don't think.
On Genius?
On Genius specifically.
On ethics?
On the stablecoin provision.
On Clarity.
On Clarity.
On Clarity. Oh, yeah.
Mixing up my bills, sorry.
No worries. On Clarity, you're asking about which provision, the interest provision?
Yes.
So there is an agreement between Democrats and Republicans that's Senator Angela Alsobrooks and Senator Tillis have agreed on. And nobody's happy with the agreement, so they probably found the sweet spot. That's typically what compromise looks like, and I'm optimistic that we will have a resolution of that provision.
Sticking with banks and turning to the Genius Act, since Will brought it up, we learned recently that the banks are maybe slowing implementation of some of the rulemaking that's happening since the Genius Act has been passed. Just talk to us a little bit about, again, that tension between the banking industry and the crypto industry and how you're viewing that from where you sit.
So, as you know, the Genius Act was about regulating stablecoin, and the bill was a very good consensus bill that gives the United States a huge advantage because we have such a very effectively regulated market. The regulators are now writing the rules, and comments are being received for those rules. So it's proceeding appropriately, and this comment phase is very important, and they will implement what the legislation said.
There's a lot of interest before midterms for something to happen, right? Across all these things. And we go into the summer in DC and people go on recess and things like that. How are you seeing like the next 6 months playing out going into midterms for a few of these different bills that have strategic importance for people who want to get reelected or they want their party to maintain its majority in the House and Senate?
I believe that the Democratic Party is the party of the future. I think we care deeply about innovation, we care about competitiveness, we care about being on the forefront of national security, and cryptocurrency and blockchain are going to play a huge role in democratizing finance. It is addressing huge problems, the fact that 30% of the country is unbanked or underbanked. Cryptocurrency addresses that issue. I met with one builder who's already done $1 billion of loans under $350,000 because his overhead cost is $1,000, not $10,000 that a typical bank would charge. And so we are allowing for Black and brown communities and low-income communities who are disproportionately shut out of the traditional banking industry, getting access to capital without a bank account, without a credit card. So it matters, and I think we are going to continue to show through our leadership and through our candidates and through what we talk about and the work we do that we care deeply about innovation in the future, and we are going to be right alongside this industry to create this market structure bill and then move on and work on AI and work on prediction markets and work on all these areas where you need basic rules of the road. You need to have guardrails. You need to know with certainty what the laws are so you can build your company. And I'm really excited to play a major role in that. I really enjoy this community. I enjoy the excitement when I meet with different founders and builders and innovators, and I think it's something that's really important for the U.S. economy and our long-term national security.
I want to just quickly follow up on, the fact that you also need to be looking at AI and prediction markets, and I look at the process that was applied to crypto, and I look at AI and prediction markets and how quickly they're evolving, and just talk to me about how you think about starting this process all over again for these technologies that are accelerating at a super fast speed, and how we get legislation that can match the speed of innovation.
So I have a bill that I introduced just last week with Dave McCormick on prediction markets, and that's a first stab at, again, making sure members of Congress and senior administration officials are not betting on stuff that they have inside information on. Like, really, come on, guys. We need to make sure that people in positions of power are not getting wealthy off the non-public information that they have. So that's a big cornerstone of this legislation because we really want to make that illegal. Second, on AI, we're just beginning to have conversations, and frankly, the Senate and the Congress have been having conversations for the last several years on this. But we really need to look at, when you look at the future, and if AI is going to enhance the ability of you or anyone to do their job more efficiently, more effectively, and there is a reduction of employees in certain sectors, and how many tens of millions of people may lose their job or the opportunity to go to the job they wanted, how are you going to rebuild the education system? And how are you going to create a future where people are really excited to work and be part of providing for their family and building a strong economy? You're going to need to retool. You're going to need a lot more incentives for people to go into jobs and opportunities that we're desperate for. More doctors, more mental health professionals. These are things that AI is not going to replace. We still need more teachers. We still need more nurses. We still need all first responders. And I think if you look at education, you streamline it, make it shorter. I don't know how many kids are going to want to do a 4-year liberal arts degree and decide later what they're going to do in the era of AI. I think people are going to want to really think early in high school. What do I want to be? What do I want to learn? Do I want to go to this apprenticeship program? Do I want to do a 1-year degree, a 2-year degree? Do I want to go straight into cyber? Do I want to, whatever it is, we need to create the map to do that, and AI has to be part of that conversation. Really retooling the economy for the future. They also have to be part of a conversation about who owns the data. I think it's a hugely important question. People want to be remunerated for their data. If you're a huge content creator, like a famous singer or a movie producer, you already have licensing agreements. But for the rest of us, we don't have that kind of legal protection. So you have to think about how do you extend that type of law so that everyone can be remunerated, whether you're a hospital system and you're going to create amazing cures. That data we want AI to get access to. We want them to find solutions, but how do you receive the benefit of giving that data AI and receiving what it's actually worth. So that's got to be part of the conversation. And these are the big structural ideas that I want to talk to a lot of stakeholders about, because it's exciting to me. And the possibilities of growth and innovation in our economy are endless. The possibility of so many breakthroughs for society are real. And so we just have to know, and that on top of that, then you got to do all the guardrails. And the guardrails is 100 items long, but you can build those, and there's a lot of bipartisan work already being done there on the guardrails.
Senator, we got to leave it there. Thanks so much for joining us at the desk.
Thank you.
Thank you.
That was Senator Kirsten Gillibrand. We'll be right back.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Hey everyone, welcome back to CoinDesk Live. We are coming to you from Consensus 2026 in Miami. Let's take a look at the news this morning. On Strategy's Q1 earnings call, Michael Saylor suggested that the company may sell some Bitcoin to fund dividend payments. That is a reversal of the firm's longstanding never sell stance. Strategy posted a $12.54 billion Q1 net loss as Bitcoin fell from around $87,000 to $68,000 between January and March. The company holds 818,334 Bitcoin and carries roughly $1.5 billion in annual dividend obligations. Multicoin Capital has built a significant position in Zcash. Co-founder Tushar Jain announced at Consensus Miami. Jain argued that public wallets leave holders exposed to surveillance if a government or creditor can connect coins to a person. Zcash's shielded transactions address that risk. ZEC is up more than 1,500% over the past year. The move reverses a 2019 Multicoin essay that called privacy a feature and not a product. And Bitcoin climbed above $82,000 as a report from Axios that Washington and Tehran are close to a peace deal sent oil crashing. WTI crude fell sharply on hopes for normalized flows through the Strait of Hormuz, which Iranian forces have reportedly mined since late February. Under the reported deal, Iran would remove highly enriched uranium from the country, something the U.S. has long pushed for. For all the latest news updates, head on over to CoinDesk.com. All right, welcome back to our program. I'm here with Will Foxley and Zach Seward. Stablecoins are becoming programmable money, and AI agents are becoming programmable users. Midterm Labs says the next big unlock is putting those two together with agents that can remember context, move money, and execute financial workflows quickly on chain. Joining us now is Edini Abiodun, co-founder and chief product officer at Midterm Labs. Hello.
Hi, how are you?
I'm great. Great to see you in
Miami. You got it right, by the way. You got the name.
I got it right. I didn't get it right in Korea. I am just evolving, getting better over time. How's your conference going?
Really good. Looking forward to the next couple of days.
My conference is great.
Yeah, I think we've all been having a really great conference. I want to talk about my intro there, right? Because we talked about agents that can remember context, move money, execute financial workflows. This has been a really big theme at the desk here and in and around the conference. Talk to us about how you're thinking about the agentic future and agentic payments.
Yeah, in the Industrial Revolution, right, we had a finite amount of people that enter the workforce, right? Like only so many people in the world. But with agentic agents coming into the workforce, you're going to have an infinite number of agents that can come into the workforce, right? So we need to build rails that ultimately tailor and cater to what agents need to do. But one of the big problems we have is around memory. Right, like you can use your ChatGPT and then you go to your phone, maybe it doesn't have the same context. You're using Claude and it doesn't have any context of what you're doing elsewhere. So agentic memory is an area that's growing rapidly fast, but there's no solution where you own your own data, but more importantly, you have this element of no vendor lock-in. Like I can have an agentic memory that follows me wherever I go on the internet, and it means you can build actually more richer applications, right? Context is very, very critical. So we've been working on something called Memwall, and the goal for Memwall is really a user-owned, persistent, long-form memory system for AI agents, and that's actually live and running right now. So you can start building really rich applications, integrate with ChatGPT, Claude, OpenAI, you name it, all across the board. It effectively lets you use memory across any form of LLMs that you're building today. Now for payments, that's absolutely critical because we think agents will be moving the majority of the world's money in the future.
Yeah, I want to stay on the agent versus human conversation. Yeah. I think there's been a lot of chatter about, maybe agents are the optimal users of blockchains given some of the technical complexities that we've seen over the years. Yeah. Very curious for your sort of personal opinion on A, that matter, but also B, some of the difficulty that we've seen among consumer use cases of Web3, whether that's gaming or other applications that really haven't clicked at scale. So it's something you've thought long and hard about, I'm sure, and I'm very curious to know what your opinion is of, again, on that.
Yeah, I mean, if you look at it, the majority of internet traffic is largely automated. It's run by automated systems. So we believe in a world, and we've always believed in a world, even when we're at Meta, right? We saw that most transactional systems in the world will be run by automated systems. It just so happens that the medium of automation will be blockchains. So definitely agree with the view that majority of blockchains will be utilized by agents, not humans. The programmability aspect, the speed aspect, all these things really lend itself well to using a global layer for basically agreements to move money and to effectively process payments. So we think it's going to be the future to a large degree. In regards to, crypto's done a really poor job in terms of UX. We've always explained it. I would keep on saying wallets are the worst invention man has ever made, especially for crypto. The idea of a wallet is nonsensical to a user. Like, I already have my bank account, I already have my credit card, let me have another app, yet alone to do transactions. And I think agents will bridge that gap. Agents will be the arbiter between your assets and what you want to do online. Having context matters. Certainly access to a global world of APIs that you can engage with to buy, sell, trade. Agents will be the best navigator for that. Right now, humans are the navigator. They are the coordinator of what you do online. We're going to move to a world where agents will do the majority of that coordination, and blockchains will be that medium by which they execute all the actions for users.
What do you make of some of the other parts of the agentic landscape with marketplaces? There's a lot of talk around, hey, I can have my agent trading for me on-chain. How do you think about that?
Sorry, I missed the question.
How do you think about trading on-chain with agentic payments? Is that going to be part of the ecosystem itself, or is it just really going to be like e-commerce with stablecoins, MIA?
I think all the above, right? Like, so we're the early innings, right, where people are doing all the really gamified stuff, or I want to ask my agent to buy Bitcoin or sell Bitcoin. I think it's really just a precursor to how you're going to deal with investment advisors in the future. Hey, I'm very bearish on the market, buy me stocks that's going to help hedge me in a downturn. You ask that question, agents will have context and make the best investment for you. You're not going to go to an investment advisor that's going to charge you bits or whatever it is to execute that transaction. So I think what we're seeing now are really just the pieces of infrastructure that are needed, but really it's the same context in how humans will interact with machines to get their outcomes done. Agent systems would be outcomes as a service. They offer you an outcome, a business outcome, and you pay them for that outcome ultimately.
I'm going to take us way out to space right now, so if this doesn't make sense, you just tell me and we will move right on. As you're talking, I'm thinking about like all the sci-fi films I've watched, right? I think about The Giver and this idea of a universal memory that is like downloadable at some time in the future. Yeah. Is this the beginning of that?
It absolutely is, right? Like, so the important thing is context is something you hold yourself, and you're going on the internet, and you're going from website to website to make things happen. But that world where agent does it for you, there still needs to be an element of your mind and things that you know, your preferences, your biases, because all these matter because it forms who you are. And agents need to make decisions based on that memory and that context. And it's important that you own that context. And you would hate for some other company, $1 billion company, to be able to farm that context and market to you or know more about you that you'd want. So owning your own memory, owning your own context, and sharing that with apps that you deem worthy of sharing that, or only giving it to your agent, is going to be that future. So I think it's true, like Matrix, downloading memory and being able to do something. And so we're kind of getting there in sense of what's possible.
I got one more question to throw to you. For a L1 chain, what is like the need now going forward for them to build ecosystems around AI? Is that imperative? It has to be part of the mission going forward for any L1 to be successful, or is it a secondary goal still?
I mean, if I look at what we were trying to do at Facebook, the goal at Facebook for us is make moving money as easy as sending messages. That was a goal. And that's something we've done now with Sui, right? Like moving money on Sui is ultimately going to be free. You won't pay for any stablecoin transaction on Sui. But the important thing about that is agents will be the users of blockchains. And in that world, they're going to need faster, cheaper, stable. So you're going to need to, everyone that's building in the crypto space needs to imagine a world where there are trillions of agents, right? We're talking about billions of users, and every user will have a number of agents interacting for them at any given point of time. Whether they're asleep or they're awake, these agents will always be working. So you need to build for that future where there will be way more interactors on the internet than exist today. So yeah, you've got to be very mindful of that.
All right, we got to leave it there. Thank you so much for joining us at the desk. It was a pleasure.
It's a pleasure. Thank you very much.
All right, that was Edeni Abiodun, co-founder and chief product officer at Miston Labs. Let's head to the showroom floor and let's see what JN Silva is up to.
All right, JN Silva here at Consensus 2026 Miami. We're about to enter PitchFest. We're about to hear from 3 amazing builders who will be telling us about their ideas. I'm super excited. Let's check it out.
Hi, my name is Amar. I'm the co-founder and CEO of Tashi Network. We're building the collective autonomy layer for the next evolution of smart devices which basically have intelligence already. So the biggest thing that's missing is all these smart devices like drones, robots, AI agents, they are not connected to each other. Tashi solves that through our proprietary consensus protocol and Deepin, which has 60,000 nodes on there. We've been building this for 4 years and super excited to be at PitchFest.
Pete Lyman, founder and CEO of Coinbacks. We provide the controls that allow people to send and receive stablecoin payments on-chain safely. Not too long ago, a friend of mine lost $140,000 sending a transaction to the wrong wallet. You can imagine when you start working with financial institutions, that's not an option. So you need the right controls and compliance and fraud mitigation tools that help them transact safely. So we believe in the next few years, every bank account, every person will have a wallet address. And when we get there, we need to make sure that the controls exist on-chain to reduce risk and fraud for the parties involved.
My name is Mohammed Salman Anjum. I'm the CEO and founder of DeFi by InvoiceMate. We are a liquidity as a service platform, solving the problems for the liquidity of PayFi and DeFi and TradFi. We are a bridge between legacy finance and the Web3, but we make them work as one. At the same time, we are building the prosperous world for all.
If you're just joining us, this is CoinDesk Live coming to you from Consensus Miami, brought to you by MoonPay. I'm Jen Sanasi here with Will Foxley and Zach Seward. Hello again to both of you. Zach, you took a little break.
Took a little break, but now I'm back. I'm back. I'm ready to go.
Yeah, we just saw some of the PitchFest contestants, and I always love to guess what topic or narrative is going to win at the Consensus PitchFest. And I wonder if you guys have a guess. I could go first if you want.
You're going to take it.
I mean, I'll take the easy one. I think agentic payments.
That's what I was going to do first.
On the board up there.
I was going to say prediction market.
All right.
I feel like PayFi is sort of an emerging term that I'm hearing more of these days. Like PayFi, we heard that in our clip there. PayFi sort of seems to be emergent as a category, I guess. So maybe that.
Okay.
What do you think?
I also was going to say agentic payments.
Okay. All right.
Yeah.
I was going to as well.
You were. Okay, so there we go. We have consensus.
I was like,
that the winner of PitchFest is going to be building something that has to do with agentic payments.
Okay. I mean, I feel like that's pretty funny that we just all had like the midwit take there.
Yeah.
Like, we're just like, yeah.
That's what we're coming with.
Is it the midwit take? I mean, it's probably what's happening over there. It's just like they're building. It's like you got to build
Maybe.
where the stream's going.
Yeah.
Okay,
I guess that's right.
Give us not a midwit take,
Yeah,
Zach.
give us like the super smart.
Goodness, you're looking at the wrong guy for that one. I mean, I do feel like kind of the meta narrative of this gathering is what's next, right? I think a lot of the asymmetric upside that crypto has seen over the past few years is sort of going to other sectors of the economy, whether that's AI, whether that's energy, you name it, right? So I think a lot of the conversations that I'm sort of having on the sidelines with people who've been around for a long time, again, Consensus has been around since 2015, they're thinking about what's that next thing in which there's asymmetric upside, should I want to invest my time and money in that space? And I'm not sure if there's a consensus opinion in terms of what's next, but certainly AI, Agentic, we're hearing a ton of conversation about.
Yeah, Will and I were talking to Senator Gillibrand, and she'd mentioned, you know, once market structure is squared away, if it gets squared away, the next big focus is AI and prediction markets, and it brought me back to the conversations we would have on the hash about like what it takes to bring new legislation and what it takes for lawmakers to understand technology that's accelerating at the pace that these technologies are. And it made me think about, I'm sorry to do it,
No.
the metaverse. And I don't know if you remember the legal questions that were being asked around the metaverse.
Billions.
A lot of similar legal questions being asked about AI and AI agents.
That's a fair point. Like a lot of the stuff with metaverse was IP, using your person there. What was that going to entail? Are they taking your data when you're doing that? This is like that 10x, right? Like I'm putting all my personal information to a chat log and it's able to read it and use it and train on top of it. We're already seeing a lot of court cases where people are pulling up their old logs, a lot of lawyers kind of getting like their whole systems thrown out into the wild. So bigger problem definitely going forward. The payments part of it, I do wonder if people are going to start caring about blockchain privacy more now because of the AI privacy problem. So maybe there's like a little wheel back there, which would be kind of nice.
Yeah, this is my question to you, Jen. I mean, do you think that the agentic future is actually going to pan out this time? Or do you think it will be more similar to the metaverse in which we were making all these bold pronouncements about our online lives?
Not all of us were making bold pronouncements.
Okay,
Not all of us.
I just want to say,
one person was.
This is what I want to say. In a way, this agentic future, the agentic reality and the future that we are talking about, I think is the metaverse that we always wanted.
Oh, no.
I think this is the metaverse that we were building towards. It really is a blend of the physical and digital. I think if you guys just were to think, if you guys were to think outside the box, we are in the metaverse that we always wanted, the one that we loved and wanted.
Way to land the plane.
All right. We're going to leave it there. Will Foxley is going to go do some real work now. We're going to take a quick break. When we come back, Zach and I are going to be joined by Kevin O'Leary.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server. Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now, if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today.
Fresh off the Consensus main stage, Kevin O'Leary has a blunt message for crypto investors. Most tokens won't survive, but Bitcoin, Ethereum, infrastructure, and tokenized real-world assets may define the next investable phase. Joining us now is chairman of O'Leary Ventures, Kevin O'Leary, hello.
Great to be here, thank you.
Yeah, great to have you here. We got to talk about the bling before
Yeah.
we get to anything.
Yeah.
I mean, you brought one of your collectibles. I'm not going to steal your thunder. Tell me what's around your neck and we'll try and get a close-up of it.
Well, this whole thing started on the red carpet at the Oscars where I wore one of our cards. I've been getting into the alternative asset classes, and about 4 years ago, Michael Ruman, the CEO of Fanatics, said to me, he was a guest shark, and we were just sitting around backstage. He said, have you ever thought about investing in collectible sports cards? I said, no, they're a piece of cardboard. Why would I do that? That's crazy. He said, you really should start thinking about it because you should start thinking about it as contemporary or modern art. And it's going to have the same capital appreciation as a Warhol did in the 60s or Picasso did in the 50s. I didn't buy into it. He was right, I was wrong. And so I started my journey in with a syndicate of other investors last August where we paid $12.93 million for the Kobe Jordan dual auto man. We just got offered $21 million for it. That's since August, hasn't even been a year. So that's better than I've done in crypto, better than I've done the S&P, better than I've done in private equity. And it's liquid, I could sell it right now. And so I would argue to you this is no different than building a portfolio of modern art.
Talk about some of the other pieces in the collection, right? This is a rare Michael Jordan. You have some other rare pieces as well. You mentioned the other one.
Yeah.
What are some other ones that really speak to you in terms of whether it resonates as a fan or just something that you value?
Well, I've got 3 partners. One of them is Shine, in the hobby as it's called. He's a legend. He curates for us. And so he decides which card next. And if you look at the data, and this is what's so interesting, go back 20 years and go look at every single trade, which you can do in AI now very easily, and say where is the majority of the capital appreciation occurred on which card specifically. And what you find out is 90% of the returns come from a fraction of the cards that are piece uniques. The ones that trade for 5, 10, 20, $30 million, even 40 million now. Because they're so rare, they're so coveted, they're so well known, they're so liquid. The rest do not get those kind of returns. So this card is 2 of 9. We also control another one. This is, I think, a 6.8 PSA rating, 1997 Jordan. It's a grail piece. It would trade today around 4.7, 5.2 million. Had you bought it on its issue in 97, you've outperformed every market. I mean, that's what's so interesting about it. So the strategy I'm using here is to build a portfolio. We're well over 100 million now in cards, but only the piece unique. Same as the watch market.
So Kevin, are you a sports guy more generally, or is it simply, here's an alternative investment class that I see an opportunity in, and I'm going to go headlong into it?
No, I like sports, but I'm not as crazy as some people are. I'm more interested in this because my analyst showed me how this outperformed many other alternative asset classes. I challenged him, for example, look at my watch collection. Let's compare it against that because I've spent a lot of money there. And he said, sorry, boss, this thing wiped you out. This is such a broad interest. 150 million people are in the hobby in America with sons and daughters, and so it's become part of culture. But I prefer the living legends or the legends that have passed. Kobe right now, a signed auto Kobe. Kobe's gone. You won't be signing any more cards. So those are very, very valuable. Versus, let's say, a Pokemon, which never really lived anyways. And so for me, I'm steering my say in the syndicate away from the fictitious stuff. I want living or, historic legends.
I want to bring back a narrative, I guess, from the past and ask you how you're thinking about tokenization. You mentioned that you're investing in some of these assets with others, like Shine. And so how are you thinking about tokenization when it comes to fractional ownership of collectibles and art? And then also tokenization on the other side. I mean, we look at the art market and the collectible market, historically very opaque. When it comes to opening that up and making it more transparent, how are you thinking about that?
Yeah, you're making a good point here because what we've learned through the NFT debacle versus tokenization is something interesting. If there is a physical asset in a vault and you want fractional ownership, that has worked. It's worked in modern and contemporary art, and it's appreciated along with the market. And your fractional ownership backed by a hard asset worked. The stuff that was fictionally created out of digital images did not work because there was no hard asset underneath it. So we went through the whole monkeys and all that stuff, and look, I think it was fun, but it wasn't investable. It wasn't institutionalized. It was just poo-poo. But it was fun poo-poo. But it's gone. And so if we're going to do tokenization, and it will work on stocks, for example, because if you can tokenize a stock and make it compliant, it's very, very, very efficient. It's completely liquid, completely transportable in terms of know your client, cheaper to own, faster transactions in many cases, thinner spreads. I get it all, except it's not legal yet. When I say legal, I mean it hasn't been adopted inside of the Infrastructure Act. And so if I'm an institution and you offer me to buy a stock on the New York Stock Exchange, which I know I'm compliant when I buy it, versus a token which my compliance officer upstairs is going to yell at me, I'm never going to buy the token. So we're again at the cutting edge of this, but it's nowhere until it gets compliant.
So you mentioned trading cards, you mentioned watches, of which you're wearing two, very nice mixes, by the way. Open our eyes to some other emerging alternative asset classes that you're interested in. What are the things that you're also looking at? Is it energy? Is it infrastructure? Yeah. What are those emerging fields that may not be the next trading card boom, but maybe something that provides significant returns in the long run?
It's really interesting. We're sitting here at Consensus. It was probably a year ago at this very conference when I was going between all the presentations, which I like to do, just listen. Every single one talked about the constraint of energy availability for AI, for crypto, for digital payment systems, for everything. And the more I heard that, the more I said to myself, wait a second. The real investment theme at this conference is energy. It's not tied to crypto. It's not tied to anything. It's just you can't do anything without it. And we've tapped out on the grid. So that's what got me sort of into a new mode of investing where I've said, let me invest in the picks and shovels. Let me invest in energy, data centers, energy contracts, permits, dark fiber, that is agnostic to which tenant it is or whether it's mining Bitcoin or whether it's AI compute or cloud compute. I don't care. If I own the land and I own the power contract and I own the fiber contract, I'm in the right place. And that was where I went to in this last year, and that's what I've done. I've purchased or have under contract 12,000 acres in Alberta, Canada, near 6 trillion cubes of stranded nat gas. Just announced the Utah deal, 40,000 acres, MITA designated, special designation, just cleared the county vote on Friday, very contentious, but now we have the opportunity to do something really amazing in Utah, and I'm agnostic to which tenant. I mean, I'm the landlord. That's the way I look at it. I'm very comfortable with this investment theme.
It seems like the conversation, I think your points are spot on, right? The conversation around hard assets, around real things, is really ramping up for some of the early crypto believers. You have Meltem Demir's of Crucible Capital, for instance, really touting that energy thesis, right? So I think a lot of people who had been early to Bitcoin, early to crypto, are similarly shifting to where you may be shifting, where it's energy, it's the real world, as opposed to the world of, say, alt L1s that may not provide long-term value for investors.
Yeah, that's a good point. I mean, I remember sitting at this conference last year and we were talking about all the altcoins and which one would emerge, as part of an index if you were going to own crypto. And then along comes October and all the poo-poo gets scraped off the table. I mean, they got slaughtered and they never came back because institutions figured out they only needed to own BTC and Ethereum. So Bitcoin and Ethereum, you get 97%. But this conference, I think, the new idea that I think is emerging, I'm certainly going to be looking for this. Who is going to emerge as the chain that gets adopted into the S&P 500? We've been talking about blockchain adoption into enterprise for 15 years. 15 years. It's like this. and nobody standardized on anything. I mean, you could argue that Ethereum is being used for transactions, certainly for stablecoin it is. It's the only blockchain owned by anybody that cares about owning a blockchain because it's liquid and you can get in and out of it. But it's not widely adopted within the S&P 500 for contract management, inventory management, logistics management, which is essentially software when you think about it. Now, software stocks got killed by AI this year. That's a big theme. So all of the chains got pushed down by the thesis that they too will be replaced by AI in one way or another as it rewrites. Whether that's true or not, we'll wait and see. But somebody out there, and I'm going to mark my words at this conference, someone's going to come out and say, hi, I'm XYZ chain. I just closed this S&P 500 company. I just closed this one in this sector. This is a real estate company in the real estate sector. I just closed them. And slowly standardizing on a chain. That's valuable. Now, if you're an investor that's willing to speculate there, because adoption into enterprise is the next big thing for blockchain, because we've been talking about it for 15 years. I feel with the adoption of the Infrastructure Act, that will push enterprise over the edge into blockchain. They'll feel comfortable. But whom? Which one? That's the question.
Before Consensus started, HederaCon was happening in Miami. I know that you used to be involved in the Hedera ecosystem. You told me in a previous interview that you made a bet on HBAR. You told me after that you sold almost all your crypto positions.
Not all.
Almost all.
Yeah, no, that's 27 down to 3.
Okay.
I own a stablecoin, I own BTC, I own ETH, and I own infrastructure.
Right.
But you're right. I did.
And I just want to get your perception on Hedera now, because I was at HederaCon, and they really do have an enterprise narrative. There are companies like McLaren, Toyota, FedEx, all operating in the Hedera ecosystem.
No, look, I think that's great, but imagine this challenge. Nobody knows, nobody cares. And so here's why. You turn on any Fox Business, put on CNBC, put on Al Jazeera, put on BBC, put on anything. In the business reports, you're going to get the BTC ticker about every 60 seconds. Every 10th time the ticker shows up, it's ETH. So 1 in 10. They pay nothing. The foundations there pay nothing for that free multi-million-dollar exposure that's on the mind of every investor watching business television. So when they think about taking a position in crypto, they see the ticker, they buy the name. They can buy it in an ETF, they can buy the actual holding in a wallet, but that is, what's that worth to that, to those foundations? Somewhere between 200 and 350 million. If they were just going to buy that space, if they're just going to buy it on just 3 or 4 networks worldwide. So whoever you are, and you've got a great story, who cares? How are you going to get it out there? You and I can talk about it, but you have to have a strategy for multiple years of getting that story out so that it gets adopted at the institutional level. And that's what's changed in the last 2 years. Because all of the other tickers and this story, that story, this coin, that coin, nobody cares.
You mentioned the AI thing, and I really want to drill down on your AI thesis and whether or not it informed some of your recent investments in real things, cards, watches, etc. You mentioned also that AI just slaughtered SaaS stocks earlier this year. Do you have an AI thesis for how you approach this current market? And is it informing some of your investments in more real world things?
Yeah, so here's my thesis as to why the stock market, stateside, our indices in the US have performed so well in the front of huge input cost increase on energy and the volatility of a war in the Middle East. Why? The reason is the earnings are spectacular. And why are the earnings spectacular? Because every single one of the 11 sectors of the S&P have adopted AI for pure processing power in some cases, compliance in others, financial services, risk management and insurance, real estate, drone technology to see properties, all of it, all of it, all of it. And so it's starting to show up in margin enhancement, up to 1.5%, 2% margin enhancement, and also productivity. Less CapEx required for the same sales dollar because AI is able to forecast where inventory should be beside customer drawdown. And that's only in the last 18 months. So how would I invest based on that? It goes back to what we talked about earlier. You can't keep pace with the Chinese. I mean, think about what just happened a couple hours ago. The Anthropic CEO went on somewhere and said, DeepSeek is 6 months away from beating us on all of our stacks in the US. That is a wake-up call for the government. That's the Chinese who are building power at the rate of 400 gigawatts every 24 months versus 0 for us because of the permitting problems, and kicking our butts on data center development so they can actually advance DeepSeek. So here's an investment theme. I think the administration is going to say, okay, enough of that. We're going to start accelerating adoption of new power, whether it be, probably it's going to be nat gas turbine because that's what we have abundance of in North America that's the cleanest. Obviously nuclear is 15 years away, but also interesting. But they're going to start permitting data centers to catch up with the Chinese because we're in a war with the Chinese on the economy. They want to be the largest economy on earth. But really what they want is to fight wars of the future with highly specified ordnance, which you see we're using in the Middle East, and robotics. If we let them do that, we're screwed. So everybody's got to wake up and say, look, we're in a competition, we have to compete, and we got to get on this AI thing. Listen to the leaders who are developing the AI themselves. DeepSeek is only 18 months on the scene, and they're catching up with us. That's a warning call, it's a wake-up call.
All right, we started the interview with the card. I want to finish it with the watches.
Yes.
Talk to us about the watches.
Okay, now you know I love watches, so we could talk for another hour about watches, but what happened in this particular combination? So I wear 2 watches, 6 a day, 2 in the morning, 2 at lunch, 2 at night, and I pair them. And I put, what I do is I might take 60 or 80 out of the vault, and then it's a bit of a ritual for me. I put them out on a big, spare bedroom we have on a white sheet, and I put them all out for the day, and I feel the watches. I feel the vibe of the watches, and I say, which 2 for the morning? Which 2 you guys for the morning? And then what am I going to take with me for lunch, and what do I got for dinner? And each combination is unique, and it's in the moment. Is it raining outside? Is it sunny? What am I wearing? I mean, it's fantastic. And I don't use winders, so I spend time winding them. My wife leaves me alone because I'm in the zone. She thinks I'm crazy, but I'm doing it anyways. So the dilemma I faced with, we knew Tiffany's was going to make the one-of-a-kind, basically this is a necklace. Mm-hmm. It's almost 2 pounds of white gold and 110 carats of diamonds and rubies. But the dilemma for me was, I know I'm going to wear it on the Marty Supreme red carpet. Dolce was dressing me with that crazy jacket, which I bought, by the way. I don't wear rented clothing. And so, but the dilemma was, what watch to wear with this? I knew Rolex made a ruby, diamond, white gold to match white gold. I called up the CEO and I begged. I said, I know you make a ruby, I know it's off catalog. Would you even consider letting me purchase one to wear on the red carpet? And here it is. Here is the Rolex Ruby, a perfect pairing with the necklace, right? With one covenant that he forced me into. He said, Kevin, we've allowed you to put red bands on all your watches for decades, but that piece can never be altered in your lifetime. It's not a contract, it's a handshake. And with the Swiss, that's a big deal. I mean, you don't mess with the Swiss. So I agreed to that, and that we flew the watch to LA, I wore it on the red carpet. I am in love with this watch because of the pairing. On the right, coming in, on the right wrist, is the FP Jordan one-of-a-kind resonance. FP made for me with 2 12 dials and my name on the back. This is a piece unique extraordinaire, one in the world. What a pairing. I mean, do I not look fabulous or what?
I mean, yeah. What a pairing.
It's pretty good.
I mean,
I'm
yeah.
just having fun.
It accentuates the jerseys, down to
just all really goes
the
together.
classic Jordan wristband. I mean, it's perfect.
Every one of these assets has appreciated faster than the S&P in the last 12 months.
What was the consensus vibe that inspired this? I mean, you're going through your ritual. You're like, I'm going to consensus. I'm going to speak.
Well, you know, what I love about consensus is it's kind of like 18 months ahead. And you want to be there with ideas. It's where the puck is going. That's what I really believe about it and why I like it. And it's not just stuck in one asset class. It's saying, where's capital flowing? So capital is flowing into collectibles in a big way. Certainly the watch market's multi-billions now. Look at these auctions that Phillips with Sotheby's has. But certainly the collectibles on what's going on in sports cards. And I thought, well, why don't we put it on a holder? This is a one-of-a-kind Tiffany they made for us. And so there'll never be another one of these. And we're able to unscrew the back, put in different cards for different events. And I've never shown this card, and I thought, let's celebrate it at Consensus. And here we are, we're having a great time. But if you can invest in something that is actually fun, that you enjoy doing, isn't that great? What's wrong with that? I mean, I don't hang around with too many stocks or bonds, but I certainly love wearing watches and holding this around my neck.
All right, Kevin, we got to leave it there. Thanks so much for joining us at the
You
desk.
got it.
Thanks for bringing the card and showing it off.
Thanks, everybody.
That was
Thanks, Kevin.
O'Leary Ventures Chairman Kevin O'Leary.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today.
Bermuda was early to digital asset regulation with its 2018 Digital Asset Business Act, and now Premier David Burt wants to move from regulating crypto companies to putting parts of Bermuda's own economy on chain with support from Coinbase and Circle. Premier Burt joins us now. Hello.
Hey, Jen. Hey, Zach. Good to be back.
Yeah, well, you were just telling me that your first consensus was in 2018.
2018, New York Hilton, the zoo, the Lambos outside. It was incredible. But at that point in time, I announced the Digital Asset Business Act. We tabled it that Friday after leaving consensus, and the rest, as they say, is history.
That was the famously chaotic consensus with Arthur Hayes parking the Lambo up front, all sorts of like oversubscribed, hard to get in. Any reflections on how far this event has come?
Well, consensus is something the Bermuda government has partnered with CoinDesk on consensus since that time in 2018, and it's just been great to see the continued development of the industry. And so for us, the relationships that we made there still continue to this day, and we just continue to share our vision for knowing that financial services innovation can happen in a regulated manner that can work and that can bring innovation to the globe.
Got it. So what's the focus in Bermuda right now? Is it stablecoins? Is it payments? I know you're a long time sort of historically strong in insurance. The industry has a major presence there. As it relates to the digital asset world though, what's the current focus of your initiatives?
Well, the current focus right now is that in 2018, we had the Digital Asset Business Act. Lots of the major companies are running their international operations from Bermuda, whether it's Coinbase, Circle, Kraken, et cetera. So a number of things there. So we've gotten that part done, and now it's about demonstrating adoption locally. Bermuda is never going to the place where big companies come to make money off our small market. But what it is a place where big companies can come, can test, demonstrate services, and then scale them to the rest of the world. So our on-chain economy initiative, in partnership with Coinbase and Circle, allows us to basically make sure that we are equipping persons with the tools. The cabinet has now legislated that the government can now accept and invest in digital assets, so we're progressing that, and we're making more announcements next week at our own Digital Finance Forum talking about these facts, and also making sure that we airdrop digital assets into the hands of persons while also equipping small businesses to make sure they can accept stablecoins and payments.
I was going to say, like, the equipping small businesses part, right? Like, what does this actually look like if you're building a fully on-chain economy? You're going door to door to mom and pop shops, making sure that they understand the point of sale systems with stablecoins as opposed to credit cards. Is that pretty much it?
Literally, you have to knock on doors. So our Bermuda Economic Development Corporation, which is the version of in the U.S. will be the Small Business Association or Small Business Administration. They are literally going door to door, hosting workshops, handing out terminals, showing people how to accept money, running through, and it is that. So we did it last year with a few vendors. This year we're scaling up to about 25 vendors. At the same point in time, we're trying to get larger vendors like supermarkets and others, because the reality is, when, someone will just say, I'm fine with my credit card. That works, that's fine, but of course you have those fees. The beauty of this is that it allows not only for you not to have those fees, but because of all the regulated assets that we have in Bermuda, right now, last year, the airdrop automatically cleared and put people's money that they got in the airdrop into USYC, where they're earning yield off of regulated tokenized money market funds. And then they can do other types of investments. So it's demonstrating the full gamut to say that not only can you invest, but rather than that money just sitting there in an account where you don't have anything, you can put it somewhere else and you can earn these type of things. And so it's that type of innovation that we're demonstrating.
I remember when Bitcoin became legal tender in El Salvador, there were small mom and pop shops who were like, I don't really know how to use this. It's kind of difficult. Like, I'm just going to stick to what I know. And so I'm curious, when your team is out there knocking on doors, educating Bermudans about this new on-chain economy for them. What are you hearing, and is there some skepticism?
There's clearly going to be skepticism, but in anything new, because you're replacing something that works. You have to demonstrate the benefits, but also show that it's easy. And when you compare even last year to this year, the technology is better. It's more simple, it's more intuitive. There's more on-ramps, there's more off-ramps, and it's easier for persons to make sure they can participate in that economy. So it's the constant work. But again, we've been talking about this stuff for the last 8 years, and we're beginning to see the promise of what this offers. The real regulated products, the real investments, the real tokenized items. You were talking about insurance. In Bermuda, we have tokenized insurance contracts. We have all those things which are actually happening. We're launching many tokenized funds out of Bermuda as well. So persons who are packing groceries, kids who are packing groceries, having a QR code around their neck, getting their tips and able to invest that money into regulated digital assets. That's the future. That is what we're trying to make sure we show that can actually work at scale in Bermuda.
8 years, man. That's a long time in crypto. I mean, that's
really
ages. You've been doing this forever.
When I came into office, I was not trying to be someone who was, I wasn't orange pill when I came to office.
Yeah.
But smart leaders will listen to advice. And persons had said that there is an opportunity for Bermuda to leverage its reputation as a global space or well-regulated regulator to go ahead and to do this. And so we have stuck with our strategy. We said no to some companies who wanted to come through from our door, and we waved through to the points in time where we are recognized as the top digital asset regulator, where countries around the world are coming to us, ask for expertise. We've shared those particular matters with the US. We hope they're able to continue to grow and to generate and to build on what it is, because innovation is a cycle. It doesn't happen just one time. You have to learn from mistakes, keep on updating your regulations and making sure things work.
Are there other governments that have reached out to you that want to learn from what you're doing?
Absolutely. I mean, we do things in the European Union. We have official relationships with the Middle East. Last year at the Wyoming Blockchain Summit, I was certainly there, and my technical team was meeting with the new SEC team, meeting with the new Federal Reserve team as well, persons from Treasury. We want to share our information expertise. The President of the United States has given a directive that his agencies need to learn how to do this type of regulation, and from our perspective, we have had long relationships with the US government, and we are showing them that this is how we do it, and to share that expertise at technical level.
I feel like 8 years in, right? The crypto CEO coming to Bermuda and posing in the suit shorts with you, that's an iconic moment, right? So 8 years in, I'm curious how you're thinking about potential partners. Are you tightening that circle in terms of due diligence, or what does it mean to be welcoming but also selective, given some of the foibles that we've seen from some crypto companies?
Well, what I would say from the Bermuda perspective, yes, you're right. There was a time in 2017, 2018, it would be all of that, photo ops, hype, different things like that. Where's this overhype?
Get the panels.
I got it.
Was it overhyped?
Well, it was early. But the reality is that we stuck with our strategy, and now it's not, I'm just basically not allowed to take photos with anyone who's not regulated by the BMA. Just like that. And our regulator is very, very selective. They have tough standards, and so that is the reason why. But companies appreciate that because our regulator will ask the tough questions, will say, have you considered this, have you considered that? And the reality for companies that are trying to institutionalize, to attract institutional investment, if you go through the BMA process, if you go through the sandbox, you go through Innovation Hub, if you get a license, it is a seal of approval to say that you have gone through one of the toughest regulators on the planet, and yes, your product is something that investors have confidence in investing in.
All right, Premier, we got to leave it there. Thanks so much for joining us at the desk.
It's an absolute pleasure. This will be my last Consensus Premier as I'm stepping down in October, but it's been a thrill, and hopefully I'll see you in another capacity. Take care.
Great, thanks so much.
Thank you.
That was Bermuda Premier David Bird.
David,
markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
All right, we're moving on over to Gibraltar, one of the first jurisdictions to regulate digital assets back in 2018, and now it's moving early again, licensing prediction markets and preparing tokenization legislation designed to let new financial products develop inside a structured regulatory environment. Joining us now is Nigel Feetham, Gibraltar's Minister for Justice, Trade and Industry. Hello, Nigel.
Hello, Jennifer.
Great to see you.
Great to see you again.
How's your consensus going?
My goodness, I love it. This is my second consensus. As you know, I was here in Hong Kong in February, Consensus Hong Kong. We had a great team there. We've learned a lot from coming to these conferences, and we're here again and wanted to contribute to the debate.
Well, now, before we dive into what we're going to talk about, curious to hear what kind of conversations you're having. I mean, you mentioned contributing to the debate, talking to a lot of people on the floor. What are you talking to folks about?
Okay, so the one of the main topics of conversation for us in this conference, and we had a discussion in Hong Kong on the margins of the conference then, when I said to a number of participants that what was going to be big over the next few months was prediction markets. In other words, what jurisdiction would emerge as the first jurisdiction to license and regulate prediction markets? And I said that we in Gibraltar were looking at doing something in this space. So in this conference, I'm very happy to say that we've passed legislation in Gibraltar to license and regulate prediction market operations. And we already, since we last were at the Hong Kong Consensus event, we've already licensed our first operation. It's a company that is owned by the Sovereign Wealth Fund of Abu Dhabi. We're very pleased that we have the first mover advantage. I think it's important for a jurisdiction such as Gibraltar that has always been at the cutting edge in the sort of innovative products that we develop, that we continue to do so. So we had some conversations here yesterday. In fact, in the meeting room on my left yesterday, there was a 1 hour and 50-minute session dedicated to prediction markets.
What do you learn from the US right now with the CFTC looking to regulate this space more aggressively? Are you taking lessons from Chair Selig and his comments on the matter? And how do you see perhaps the two regimes differing?
Okay, so we've avoided to have that kind of dispute in Gibraltar. In other words, I took a policy decision that we wanted to license and regulate the space in a manner which was attractive for operators you've rightly highlighted that in the States there's a dispute as to whether it constitutes gambling and therefore you ought to be licensed and regulated as a gambling service, or whether it's regulated and licensed as a financial services product. We've established a framework in Gibraltar where we say that this is a peer-to-peer exchange. To the extent that almost 70 to 80% of all services provided by prediction markets, we are told, is in the sports events area. To that extent, that really does fit neatly into a betting exchange scenario. Let me say that this is not new. In other words, 20 years ago, Betfair were regulated as the first betting exchange. To that extent, what we're seeing is a reinvention of what was already there through a technology, and indeed bringing together the blockchain community, the crypto community, with the more traditional financial services space.
Yeah, you stole my follow-up, because I know Gibraltar has long been a hub for iGaming, online gambling services. I guess my question is, and maybe you've already answered it with your response there, but do you see prediction markets in the same bucket, and therefore it's easier for you to roll out this framework relative to other countries?
What we are now proposing to do, and I think other jurisdictions should also perhaps consider doing something similar, is to have a dedicated regime only for prediction markets and move away from labels. In other words, right now, the dispute and the argument is it gambling versus financial services, or is it something else? What we're proposing to do, and I've got a policy team that are here with me today, what we are doing now is we are drafting legislation that moves away from that label. It will neutralize the argument. Now, obviously, there will still be views as to whether or not it constitutes one or the other, depending on what territories you're operating in. That cannot be avoided. You can't avoid that argument. Now, the reason why we've been able to move very quickly with what we've done is under the relevant regulatory regime that I implemented in Parliament only a month ago, under the new gambling legislation, a gaming legislation. The Minister with responsibility of financial services, myself, I am the licensing authority. So we've divided licensing responsibilities from ongoing regulation and supervision that has a dedicated regulator. To that extent, the Minister, on behalf of the government of Gibraltar, takes a policy view on what we want to license and regulate, and indeed the policy parameters. That has allowed us to move very, very quickly. What we see in other jurisdictions is that regulators, and indeed financial services regulators in particular, they take a long time and they grapple with the legal and regulatory issues so much that it'll take years before questions of the sort that you have highlighted are settled. The opportunity is the here and now. We were the first European jurisdiction to license and regulate this space. What we now want to do is we want to improve the regulatory framework to ensure that we remain at the cutting edge of what we're doing.
All right, we got to leave it there, Minister. Thanks so much for joining us at the desk, and we hope you enjoyed the rest of Consensus.
Thank you very much indeed.
That was Nigel Feetham, Gibraltar's Minister of Justice, Trade and Industry. All right, Zach, we are moving along swimmingly.
We're swimming.
We are swimming through the content. I think Raja Chakravorty is coming up next.
Oh, nice.
I love having Raja at the desk. Yeah.
That'll be great.
Yeah, thank you so much.
Thank you. Great to meet you. Yeah.
What are you looking forward to?
Oh, well, the A-Rod interview looms large. So
It's true.
I might need to go and maybe hit the batting machine, hit the cages a little bit.
All right, maybe he can
get
give you
loose,
some advice.
throw, just get in the baseball mindset.
Yeah, well, you know that I love sports.
We know that you love sports.
You know, I love a good sports ball conversation.
Yeah. Oh yeah.
And so we'll see what we get
Sports
up to
ball. Wow.
there.
Sports desk.
Sports desk.
Should be fun. But yeah, a lot of interesting stuff there. I like how we jump between two forward-thinking jurisdictions as it relates to digital assets. Very interesting to hear sort of the differences in approach. Things are looking lively. I'm sort of keeping an eye on the crowd out here, people milling around by the expo floor. And
crowded.
Honestly, day two vibes are looking pretty strong out here. So just enjoying that, gonna float around, and I'll be back here a bit later.
Yeah, all right. We're gonna take a quick break. When we come back, more from the CoinDesk Live Desk.
What's your first move going to be?
Honestly,
I've been thinking about this all morning. Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Stellar has spent years making the case that stablecoins are not just for trading. They can move money across borders into cash and into the hands of people who still rely on local financial rails. Now Figure is launching yields on Stellar, bringing a regulated yield-bearing dollar product to fintechs, neobanks, and users across Latin America and beyond. Joining us now is Raja Chakravorty, Chief Business Officer at the Stellar Development Foundation. Hello, Raja.
Hey, it's so great to be back. Thanks for having me.
Well, we love having you at the Consensus Desk.
It's the best.
We should just jump into the game. I mean, let's jump into
those paddles.
overhyped and underrated.
Get those paddles.
And I want your take on this one because it's timely and there's a lot of buzz about it.
Okay.
Agentic payments. What's the verdict?
Overhyped.
Overhyped. Interesting. Yeah. So you're in the stablecoin and the payments business. So I'm very curious, as an informed observer of this space, why is it overhyped?
You're the only one who said overhyped for agentic payments, by the way.
Well, I'm trying to be controversial, and I promised that I would be. Look, I am really excited about the promise of agentic payments. The reality is, for an agentic payment to happen, there's actually so many different parameters that actually have to get solved. And so, though there's been a lot of innovation, there's some core ideas around identity, authenticating who the user is, and then authorizing that payment to happen. And the parameters really haven't been set. Now, imagine I might be able to have an agent where I authorize my payment structure, and that makes a lot of sense, but what about your agent, who my agent is interacting with? Mine is optimized for one thing, yours is optimized for another. When they start talking to each other, you might actually have a battle royale where everything just kind of blows apart. And so you have to create those structures. You've got to create a framework to make that happen. And ultimately, I think that's something that's going to push out for a number of years.
So where does that framework get hammered out? Is that a technical framework? Is that a regulatory framework? What are the parties that are making sure that these systems can interoperate at scale if we're talking about trillions and trillions of agents doing all sorts of crazy things?
Yeah, I think it's both. And I think the regulatory framework is absolutely critical here. Ultimately, when we start talking about agents actually managing our finances and moving them, the parameters around those really need to be set, because in the event of a dispute, God forbid that happens, what is actually going to happen? Who wins? Let's think about different jurisdictions. Obviously, we're in the stablecoin and blockchain space, and one of the primary things we focus on is the growth of payments moving across borders in a borderless capacity. But when you move across borders, you have different regulatory regimes. So what is going to happen there? So that's, I think, the first basis that needs to be covered. And then there's the full technical stack that has to make sure it follows. And so it's super exciting to see things like X402, MPP, and all these advances that start to build that underlying construct. But boy, do we have some work to do to make this actually scale.
Okay, I got a topic for you now.
Okay.
Bitcoin payments. All right, give it to us.
Spicy takes.
Well, hey, look, I think when I think about payments and I think about what we've been doing from a stablecoin perspective, I think we all have generally agreed that stablecoins have real product market fit. And that product market fit we see is in this idea that, hey, look, let's say I'm an emerging economy. I want to have a dollar-backed savings account because that helps me protect against things like currency volatility, against inflation risk, these types of elements where something that is the dollar that does not fluctuate actually allows me to be able to be confident in what that payment looks like and be able to hold something. Now, when I think about leveraging a different type of digital asset, like Bitcoin, for example, or frankly, any other alternative coin, you now actually are introducing a lot of volatility in the mix. And though that might work from a peer-to-peer basis, imagine you are a business that relies on ensuring that you are getting the funds necessary, and then you have to go pay a supplier in a different global region. While it's great to think that these currencies can go up and up, the reality is we see tremendous volatility. And so if you have a certain amount of funds in your wallet and then that drops and now you're on the hook to pay your suppliers, that puts tremendous amount of risk in terms of what your business is going to be able to operate at. And so from my perspective, I think there's been this real fit that we're seeing within the stablecoin space that doesn't yet translate into Bitcoin or other currencies.
Okay, I love this. Jen, I'll let you formulate another spicy topic. But I
Oh,
want to
okay,
pivot.
no pressure.
I'm always curious because I feel like Stellar, perhaps of the bigger blockchains, always has an interesting sort of regional lens through which it does its work. So I wanted your sort of current understanding of where opportunity lies in payments and in stablecoins, whether that's Latin America, Southeast Asia, or other. Curious, again, for that regional perspective that I feel like Stellar uniquely brings to the table.
Yeah, well, Stellar has had a tremendous year and an even better Q1. The growth trajectory has been really phenomenal. I think one place that we've seen really significant growth is in real world asset tokenization. So Stellar just surpassed $2.5 billion of assets tokenized on the blockchain, which is 4x since last year this time. I mean, that's really significant, and it's showing that institutions are starting to come on board, and this is important as we start thinking about quarter-to-quarter transmission. The other piece has been payment volume. So payment volume last year was about $55.6 billion on the Stellar network. In Q1, stablecoin payment volume increased 72% on the Stellar network. And the primary places we're seeing those kind of quarters really drive, I think Latin America has been just really, really significant because as we were talking about, we're seeing stablecoins start to be leveraged in commerce use cases for small businesses. It goes beyond the remittance use case that was kind of early on, and now we're starting to see all of those incremental B2B use cases, which is super phenomenal. But certainly from our perspective, we're starting to invest much more globally at scale in Asia Pacific and the African continent, which has all of this capital that is just kind of locked in that we want to really be able to unlock.
All right, I got one. It's a layup because I want to hit the news. Stablecoin yields.
Yes. Well, this. Yeah.
Okay, tell us.
So it was, we're very excited to have announced that Figure's yields product, YLDS, is now live on Stellar, and that is a tremendous product. So it's the first SEC-regulated stablecoin that is able to earn yield, and that is really because it brings together the best of a stablecoin with the value of a money market fund. And why, I think what was really exciting about when we were chatting with Figure is we've spent 12 plus years working on ensuring that we're able to build out these corridors really well. One of the biggest focus areas for us has always been on the last mile. How do we make sure that when a digital asset moves from one country to another domicile, that digital asset can then be used, whether it be off-ramping within like a MoneyGram location, whether it be connecting to local payment rails, whether it be off-ramping into banks. All of that is really exciting. We spent a lot of time building that. And I think this is where there was so much synergy between us and Figure, because when you think about this product, we talked about having a dollar-backed savings account. Now imagine being able to earn yield and basically getting exposed to risk-free rates within an economy. Oh my goodness, the unlock for that is just incredible. Now you have money that is no longer dead capital, actually earning and being productive within these wallets, and that creates a lot of opportunity for people in the region. It starts to create opportunities for businesses to create incremental ways to finance, and now you have this really, really amazing product that actually brings together kind of that regulatory nature with the upside that I think we've always wanted. And so I think this will be just an absolute boon for the way in which emerging economies are able to actually function with digital assets.
Raja, thanks so much for joining us at the desk. I'm sure we'll see you later.
Can't wait.
Thanks for playing.
That was Raja Chakravorty, the Chief Business Officer at Stellar's Development Foundation.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust,
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
Hey everyone, welcome back to CoinDesk Live, brought to you by MoonPay. I'm Jen Sanasi, Zach Seward, James Seyfert, and Sam Ewan are all here with me, guys. We are halfway through day 2. The vibes are vibing. You guys are new to the desk, so James, I'm going to start with you. What's been going on?
I mean, like you said, the vibes are high. I was walking around. There's like 15 different podcast setups, interviews going on all over the place, stages all over the place. Energy is high. Yeah, I don't know. Everything seems good. And obviously prices are up right now, so.
Everything does seem good, James. Everything has been great. Sam?
Yeah, it's been a busy day. Just got off stage with Reid Hoffman. I know he's going to pop over here in a bit. Spoke to Kevin O'Leary this morning. I think you guys were...
We did as well.
Did you see his...
Oh, yes. I
saw
you can't miss it.
I saw the Jordan $5.9 million around his neck. Yeah, I mean, it was incredible. I'm a big believer in the rise of collectibles as a continuing asset class, so I was excited to have that conversation with him. We got Charles Hoskinson on right now.
He's going to be at the desk later, I believe.
Yeah. Things are happening. It's a great day.
All right, we're going to play a little game. James, we're going to start with you. Get the paddles out. I think by now the audience knows the game. Overhyped, underrated. You ready? Prediction markets.
I'm going to say underrated.
Okay.
Here we go.
Well,
all right.
Disagreement.
All right, we have disagreement.
Perfect.
James, why do you think it's
it depends if you're talking about prices, because I think the idea that, so much of the revenue right now is coming from sports, and I don't think that's going to stick around, so I'm skeptical of that. But I think there's going to be a lot of demand for using these things. I mean, I wrote this week about prediction market ETFs. They're coming probably this month to U.S. exchanges. The first ones are just betting on who's going to win the Senate, the Dem or the Republicans, or the House, or the 2028 election. I think for people being able to, one, do that in ETF wrapper on their brokerage platform, I think there's going to be a lot of demand for these products. I think there's going to be a lot of ETFs that are going to do this. And the benefit is, like, you don't have to worry about second, third, fourth, fifth order thinking about what's going to happen to the underlying asset. It's a binary outcome. There are going to be more trading vehicles. I think there's going to be a lot of demand for doing this. I don't think it's going to completely unseat anything else that's going on, though. So I guess I'm more like almost properly rated, but I would say underrated. I think there's a lot of demand.
All right, Sam thinks they're overhyped.
I think they're overhyped for a few reasons. One, I think they are very popular right now, as they should be. This is a great meta. People are very interested in kind of putting their knowledge to the test. I think it was yesterday, the day before, we saw that, it's 0.1, 0.2% of all of the winning accounts on Polymarket, 67% of the winnings going to the smallest amount of people, all the accusations of insider trading. I think there's something broken in that system that reminds me very much of meme coins. It reminds me of some of the ICO days. I just think that it's hot right now, but in the same way that sneaker markets have cooled, I think prediction markets will cool.
This is the man that says NFTs are coming back.
Well, that's a perfect segue. That was going to be my question. It was a perfect segue to the NFT question, because I think, in talking to Kevin O'Leary, right, he's very bullish on physical collectibles, obviously. He seemed quite bearish on NFTs, digital collectibles, right? So I think parsing that out is part of this question to you. But I guess the question in terms of the paddle game is, NFTs are coming back. Underrated take? Overrated take. We have another disagreement.
We love that at the desk.
Sam, since James did the last one, I'm going to let you start off and he will rebut.
Yeah, what I think is interesting about NFTs is two things. One is, the thing that always excited me was the wrapper, not the thing inside the wrapper. And so the wrapper as a non-fungible source of provenance, of origination, of tradable opportunity, that I think is something that really is just a tokenization conversation, and I think that's working really well. Whether that's going to be, a monkey, whether that's going to be a penguin, I don't think that matters as much to me. I also will say that we have a lot of younger people who have a lot of money. these days, especially in rooms like this. And for them who grew up in video games, they grew up on the internet, the idea of owning a digital piece of land, a digital car, a digital piece of art, I think is still something that will excite them. And we have been seeing at Art Basel Hong Kong, Art Basel New York, or sorry, Miami down here, people are still spending tons of money on these products. And at some point, just like with the Impressionists, we're going to see 5 or 6 artists that are going to break out of that and just be considered artists, not NFT artists.
Yeah, I'll be quick. I mean, I never was somebody that got behind the NFT craze. I didn't understand it. It's just not my vibe. I'm not somebody that collects things. That said, I do see a lot of like potential around the technology of NFTs. Like it can be used for more than just like art on the blockchain, right? Ticket sales, anything along those lines that can be used going forward, that can be collectibles in a sense, but not necessarily like artwork or some image of an ape or a CryptoPunk or what have you. So I guess like I think we're very early in NFT technology actually being used in the real world. I think there's possibility of that happening. I'm just bearish, the art side of it, I guess.
I mean, when Kevin O'Leary was here, I asked him about that. I said, you are investing in these collectibles with groups of people. Like, what do you think about NFTs being used to show fractional ownership of art, maybe even show the history of how that art has traveled? The art space has been historically a very opaque market, and he agreed that NFTs could be used in this way. And so I think you guys brought the full story to the desk here, and I really appreciate you showing both sides.
I got one more. I mean, let's just go big. All right.
Okay. You got
maybe an emerging sentiment at Consensus and beyond. Crypto is cooked, overhyped or underrated. Interesting.
Okay.
James, lead us off.
I mean, that's Pomp has been shouting that from the rooftops. I interviewed him on the main stage yesterday. I tend to agree. I think 80% of this market is probably going to go nowhere, mostly from the tokens. And I think there are subsections that we found actual product market fit.
I think 80% of all markets go nowhere.
Agreed, yeah.
Right? So whether it's a new restaurant opening or it's a new security, it doesn't really matter. I think crypto is just going to continue to fade into the background, which is where we always needed it to be. So I think it's going to help reimagine financial systems, provenance systems. I think there's a lot of places that crypto will be there, but I just don't think you're going to care about it in the same way. And I think you're going to see that, in fact, it just permeated.
Good answers all around.
Yeah, great answers all around. I think you guys really set it up. These two are going to be taking you through the next block of interviews. You're in much better hands than you were previously. Zach, thank you so much for joining me at the desk. All right, we're going to head to the showroom floor and see what Jay and Silva's up to.
Carnival here, it's an exclusive membership to a lifestyle brand that gets you access to different events. So you get your Digital Spenders Club card and you tap and you get to play the Carnival games. So if you see every game, it's inspired down to the T to crypto. We got 6 different Carnival games. We got the Ferris wheel you can ride. We have really cool surprises happening over the next 3 days.
I'm a big fan of the NFT space, so it's really cool to see like companies like Pudgies and Clayno have toys that they're giving away to people playing the Carnival games, and got a gift for my daughter, so I'm happy.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast, crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Welcome back to CoinDesk Live. I'm Sam Ewan, taking over the lead chair. James Seifert from Bloomberg with me. James, how's your show going?
It's going great. I just had fun up here with Zach and Jen, and I'm looking forward to getting to some more interviews.
We're going to have some great conversations. We are joined by Billy Miller, Chief Operating Officer at Securitize, Ian DeBode, President, Ondo Finance. Gentlemen, tokenization is being discussed literally at every corner of this room. We've spoken about it before. Why does it feel like it just is a wave that continues to rise?
I mean, I think if you just look at the numbers speak for themselves. For the first time, we had the Genius Act, more stablecoin flows coming in. Stablecoins just tokenized cash. People look at the growth in other categories. We've got treasuries as a category, now $15 billion and growing rapidly. Tokenized stocks really taking off. So I think it's just the numbers speaking for themselves, and then the traditional financial companies looking at that and saying, well, I need to get involved. Market structure hopefully will pass pretty soon. So it's just a confluence of factors of everyone coming together, combined with some announcements in the public markets as well, people getting involved. So everything's kind of happening at once.
And Billy, what are you seeing and hearing when you have these conversations out on the show floor?
I mean, we've been at it a long time, right? Tokenization is not new, so it's very good for us that this is now top of mind, top of discussion. Every single panel that you're seeing, tokenization is mentioned. So similar to what Ian said, it's institutional participation. There are banners and sponsors here that many people in the room never would have expected are coming into the space. It's also a proliferation of new asset classes, right? It's not just treasuries, it's yield bearing, it's speculative, it's equities, and everything else is finding its way on chain in a regulated tokenized infrastructure.
Yeah, so I guess my question to you guys, you're sort of frenemies in a way, right? Like that's the way I would describe how you guys interact, right? Like you co-work on some things, you guys are competing against each other in other things. I guess, can you just talk about the differences between what you guys are doing and the things where you guys fully align on and maybe where you differ, and exactly what you're trying to accomplish?
Yeah, it's a fun framing, like frenemies. I agree. It's very early still in the arena of tokenization, right? So I think at this point, everyone's kind of focused on growing the pie, growing the category as a whole. But obviously there's some healthy competition between us and some others. I think Ondo has really carved itself out as the market leader for tokenizing securities, what they call in a wrapper model. Yep. Right? So we issue our products outside of the US. We do it in a permissionless way. So our tokens, when you hold them, they give you full economic exposure of the underlying. This could be Tesla, this could be an ETF, this could be treasury products. But it is a new product that is issued offshore that you can hold in any type of crypto wallet that you want and use it permissionlessly in DeFi, just like a stablecoin, right? So we follow the model. We looked at stablecoins. We said this is a very interesting way to tokenize. A stablecoin is just a wrapper around cash where the cash is sitting in a traditional bank account, but you issue a new instrument that represents economic exposure that you can always redeem against the underlying, and we follow that same model for treasuries, stocks, and ETFs. And when you look at the numbers, that is the category of tokenization that is growing the most rapid with significant distribution offshore into all of the crypto exchange platforms. There is another way to tokenize where you say the token you hold on chain is the actual stock, right? It's not a wrapper, it's the same thing as you would hold in a brokerage account, and that is the model that Securitize is really going after, particularly in the US. It has some benefits, I promise I won't speak for you, but there's pros and cons to these different things, right? With the native model, the reason, I'll just speak for Ondo, that we don't focus on it as much, but to be clear, we have the licenses to also do it if we wanted to, But the reason we don't focus as much on it is because if you do it that way, you need the issuer approval to put the stock on chain, right? You need the public company to come to you and say, I want to put my stock on chain, and actually give you permission to do so. Not a lot of companies have said that, so your selection is pretty few. On top of that, people then have to onboard with the TA, hold the asset in their wallet, but they can't transfer it around. They can't use it in DeFi. It looks a little bit more like a brokerage account, but just with less stocks in it. And so we don't really see the transformative potential of that model in this moment, but it doesn't mean that it's not relevant. We believe all these models should coexist, and then you let the market decide on which model they prefer. Right now, the market is deciding, and it's going for the wrapper model.
I will caveat, we're still early, right? Like, there are multiple different approaches based on the time and based on the velocity of what people are consuming on chain. I think the securitized approach for a long time has been a very regulated vendor type approach. I come from transfer agency background, which is a hot topic this week. But we do work directly with issuers. Transfer agents are hired by the issuer to be the official books and records to represent and convey all the rights that you have owning these securities. So by seeing the movement like Computershare, the world's largest transfer agent, partnering with Securitize to enable this quickly to issuers, we're now lowering the barrier to entry for them. It's not a confusing thing for an issuer to say, I'd like to tokenize my stock. We're now enabling that in a regulated way that they're used to interacting with today to get to that scale over time. So for us, we love having the support of the issuer and the issuer's involvement, because you've seen the things on X where CEOs say, that's not my security, be careful what you're buying. Some CEOs may not care. So I think both can exist, but there is a differentiating experience holding one versus the other and what that conveys and the rights you can use it. And also our objective is, these are still securities, right? So you can't just make them permissionless bearer assets that you can trade in OFAC sanctioned jurisdictions. These are securities. They need a level of permissioning that is necessary at the transfer agent or broker-dealer level. So,
I mean, to be clear, our wrapper tokens are not being traded in OFAC sanctions.
Wasn't specifically talking about us. We're talking in general.
As with the stablecoin, right? Our assets have full compliance controls. We can freeze any asset globally whenever we want to, just like you can with the stablecoin. The wrappers that are available, you can use them in DeFi freely available. We only do it on public market assets, right? And everything is fully backed. We have public attestations on these things. And again, I think I just draw the parallel back to stablecoins, right? What we're doing right now is tokenizing things in a stablecoin-like fashion. And if you look at how tokenized assets scaled, it's all like stablecoins. It wasn't with tokenized bank deposits, right? That's the equivalent of the native model, is that you start tokenizing bank deposits and the like. That has not scaled, and there's a good reason for it. So we focus on the wrapper model. We believe they're fully compliant. In fact, the European Union also agrees with us. They have an approved prospectus in the European Union. This whole concept of a wrapper that moves permissionlessly and is a security is not a foreign concept in other jurisdictions. The European Union has approved it. We're classified under MiFID as transferable securities. Same thing with Abu Dhabi. So it is a novel concept in the US, and we agree with that. That is why our products are not available in the US. But on a global basis, I think there's no question about what product market fit looks like for tokenized securities, and it's the wrapper.
All right, gentlemen, we're going to have to leave it there. Hopefully we can continue this discussion on a stage soon. This is Billy Miller of Securitize, Ian DeBoat of Ondo Finance. We're going to take a quick break.
Thank you.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
All right, crypto ETFs opened the front door for mainstream investors, and now Bitwise CEO Hunter Horsley says the next phase is making crypto so normal inside that advisor portfolios, it stops being interesting. James and I were actually just talking about that before you came on, Hunter. So has crypto matured when we stop thinking of it as sort of like going to the moon and in sort of degen fashion, and really it's just like the infrastructure of finance?
I think that's right. I mean, you've heard people discuss this before. I think there was a time when people called companies internet companies, and now you just call them whatever the name of the company is. And you don't think about whether or not a financial services app that you're using is an internet company or not. You just assume that that's embedded. So I think more and more, as we're entering this mainstream chapter for crypto, it becomes less and less of a controversial or focal point topic and just more a natural course of business. And we're definitely seeing that over the last 12 months where it's ceased to be a taboo topic and more just a question of whether it makes sense for people.
Yeah, I mean, I've heard from people like during the FTX collapse, like you couldn't get people couldn't get meetings to talk to people, and now during this price collapse, which is fairly severe depending on which asset you owned, no one has had problems getting meetings. Everyone's kind of like still interested in adding this to their portfolio. Can you just talk about like what those conversations are going like?
Sure, yeah, so Bitwise is 200 people today. We manage ETFs, we do vault curation. We'll have our first tokenization announcement tomorrow, I think. We provide staking services. We do a lot of things as an asset management partner to help family offices, institutions, banks, wealth managers participate in the opportunities in this space. And a key element of that is that we have 50 people who manage relationships with clients. We've been around for 8 years, and the interesting data point maybe to share is that in the first quarter of this year, the market was of course down. It was down in the fourth quarter of last year, down again in the first quarter of this year. And we had more inflows from the wealth management channel in the US than in any prior quarter in 8 years. Said differently, it was the best quarter of financial advisors in the wealth channel investing in Bitwise products in the first quarter of this year versus any prior quarter.
So they bought the dip.
They bought the dip, and I think it reflects, in some ways, the mindset of the investment professional who is a newer participant in the space. They like to buy dips, and they're trained to buy dips, and they like to build positions at a lower cost basis, and they see opportunity there. Of course, that's a concept that everyone's familiar with, but different types of investors have different amounts of time and practice doing that. So I think that they're an amazing new constituent in the market. And then I think it also reflects that the Bitcoin ETFs, which James, you and I talked about a lot over the years, launched in 2024. It's been 2 years. It takes a little bit of time for those things to gestate, for them to get diligenced, for them to get approved, for people to watch them, get familiar with how they move. And I think it's on a lot of people's to-do lists. And finally making it, above the fold to a place where they can take action on it.
Hunter, we hopefully will have clarity soon and sign into law. The Genius Act was signed. Tell us about the mindset of the financial advisor. Are they really looking at this and saying, this is approachable finally, this is something that doesn't feel like a legal currency over here, this is something that you should really be thinking about for your 401k, for your investment strategy, for your treasury? How are they thinking about it?
Absolutely. It has become remarkably less controversial. I said that we've been around for 8 years. There was a time when Bitwise was persona non grata in a room. There was a time when the conversation was about tulip bubbles. There was a time when the conversation was about crypto getting banned in America. The conversation is none of those things now. The conversation now is really about whether they have the time in their schedule in the month coming up to focus some attention on figuring out what they want to do. Do they want to buy the Bitwise 10 crypto index ETF and put an index exposure in the portfolio? We now have model portfolios. Do they want to create a crypto sleeve? Do they want to just put a little Bitcoin in the portfolio? How much size across all clients or just a few? Those types of conventional questions that they might have about investing in semiconductor companies or AI that just take some time to develop the thought, that is really the obstacle now. It's not a question about, is it going to become illegal in America? Is it a tulip bubble? Those things have faded away. So I think it's in a much more productive place. Having said that, I think it's always important to remember, people are busy. You two are busy, I'm busy. You can be sure as heck that a wealth manager is busy. They have 100 clients with different things going on. They're invested in 100 asset classes. Crypto still has to compete for that precious time and attention. And I will say that it's competing very well. In just the last 9 months, we've had $5 trillion wealth platforms approve Bitwise products. And that's just last, again, 6 to 9 months, 2 of them in January amidst a bear market. So it's competing well for attention, but it does have to compete for people's scarce time and attention.
So when they're asking those questions, but what are they actually doing? Are they like, all right, we want crypto, I'm just going to buy Bitcoin? You mentioned the Bitwise 10. I'm of the opinion that those basket products, whether active or passive, are going to be the way that people get exposure, because people are busy. They don't necessarily have due diligence to figure out which token they want. Like, what are you seeing the most demand, or what are you most bullish on, on like getting that wealth manager or institutional buy-in to get exposure?
Yes. There are 3 patterns that we see. The first is they say, we want to take a step forward. We haven't developed a view on Solana, on Ethereum, on XRP. Let's just start with figuring out Bitcoin, where it goes in the asset allocation. Is it a commodity? Is it a real asset? Is it an alternative? Is it in our risk bucket? And let's start there. That's very common. That's probably the most common thing, in fact. I don't think that's the end of the journey for those individuals. They often then go on to expand. The second approach is they buy BITW, the top 10 index. It's the largest top 10 index in the world for crypto, or BITQ, which is an index of equities. And they say, this is going to give us diversification. It's more future-proof. We don't run the risk of having bought the wrong coin and looking stupid in front of our clients in 4 months. And then the third, which is newer, is last year people said, there's so much going on. Can you just design models for us? And we'll introduce that as a crypto sleeve. And that way it'll be scalable into the future, whatever happens. If this hyperliquid thing ends up being a big deal, we're not going to have to go redo portfolios. And so we now have model delivery live with, I think we've announced a few of the, but there's tens of billions of dollars managed by firms that use our models now. And that is a different approach where people often at the home office level are really interested in furnishing a future-proof, this is going to work as a go-forward solution. So we see all 3 of those, but the theme between them is everyone wants to take steps forward. And then it's just a matter of their constraints, what they have access to. But I have to say, maybe just to say it explicitly, in 8 years, this is by far the best, most exciting time in crypto that Bitwise has ever been a part of, from the perspective of it becoming a mainstream asset class.
All right, we're going to let that be your mic drop moment. We're going to leave it there. That was, thank you, Hunter. That was Bitwise CEO Hunter Horsley. We will be right back.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
All right, if there's anything that you see here at Consensus, you can see that the US market infrastructure is going on chain. NASDAQ has received SEC approval to support tokenized securities trading. DTCC is preparing for a tokenization service for its custodied assets. It's a long day, James. All right, joining us now with more, Tal Cohen, president of NASDAQ, Frank LaSala, president, CEO, and director of DTCC. Gentlemen, welcome.
Yeah, thanks for having us.
I'm just fascinated, you know, this is my 7th Consensus, and if 3 years ago I said, hey, I'd be sitting down with both of you, people would have said, never happened. Here we are, we have NASDAQ, DTCC, both of you are just in the news constantly talking about tokenization, the future of finance. Tal, I'll start with you. What does this moment mean for NASDAQ?
Yeah, so this is part of a greater theme that you hear at the conference today, which is always on. Always on market infrastructure, always on markets. And when we think about that, the defining features for us is obviously the market's going 23/5 or 24/7, but it is also about collateral mobility, collateral velocity, which is why we're working so closely with DTCC. It's about the faster movement of money and securities. It's also about accelerated settlement times. So when you take all of that together, we're at a moment in time here, and we're also against a really constructive regulatory backdrop. The technology is advanced, the use cases are clear, the benefits are deliverable, and so I think it's really unique, and I'm so happy to be here today and happy to be working with Frank and DTCC.
Yeah.
Frank?
No, look, it's a great question, and just to pick up on what Tal has said, you know, if you really look at the securities industry, there's always been this symbiotic relationship between technology and the securities market. They're just so inextricably linked, and I think the securities industry in general, financial services, has always embraced technology in a very unique way, and I would argue even ahead of its time in many ways. I think about the paper crisis in the 70s, what we transformed ourselves into in the 80s, 90s, and now into the 2000s. We currently run on a pretty elaborate messaging system. But at the end of the day, what we do, whether it's the NASDAQ as an exchange, DTCC as a clearing and settlement hub, we're moving bits and bytes. That's what we do. And what we've seen is blockchain is just a new transformative technology that is very consistent what exchanges and clearinghouses have done all along. Embrace the new technology and help it transform. And so for us, this is a very natural place to be. It's not binary where you've got the new technology and the new players with the old technology and the old players. It's a confluence. I find that when organizations like ourselves and exchanges embrace that technology, it's just a win-win for everybody. So we're excited about being in the middle of it. I think the possibilities are incredible. And the more we learn about the technology and how it could be used, will only benefit the industry and ultimately end investors, which is really what we're about and what we need to be focused on.
So one of the things that Sam and I have been talking about, and pretty much everything, is like blockchain is coming into the background. Like it's not front and center anymore, which is kind of what you guys are talking about doing. Obviously, we're here talking about the pros of tokenization and atomic settlement and all these things. I'm curious to hear about like some of the cons that you're worried about. Like, you know, right now we have T+ settlement system. There is netting that happens, and there's some compliance things that happen. If you go to atomic settlement, like what are some of the cons you're worried about from tokenization, and how are you addressing them in the way that you're building this out?
Yeah, I mean, you want to go or should I?
You can start and I'll go.
So let me give you a couple of stats. And by the way, every new technology has its challenges, and I'm ideologically, I believe we will sort it all out. It may not happen today or tomorrow. This is a mega trend that's going to take years to sort out. But let me give you a couple of stats. At DTCC, we hold $115 trillion of assets. The U.S. capital markets, the value is about 140, 145, depending on the day. We've got 115 of it. The rest of it, the other 30-odd trillion, is with the Fed, because the rest are only treasuries. We've got everything else. At DTCC, we settle and clear $14 trillion a day in treasuries and $7 trillion a day in stocks and corporate bonds. That's rough math, $20 trillion a day. We clear and settle $20 trillion a day, which is 2/3 of the US GDP. The value of the US GDP settles that much, 2/3 of it every day through DTCC. The numbers are staggering. We clear 185 million trades a day in NSCC and another 2.2 million at DTC. One of the challenges with blockchain is scale. It cannot handle that kind of throughput. Corporate actions. There is no L1 blockchain out there right now that could process a corporate action in an hour or a minute, which is what we do now. It would take days. That has got to be solved for. The other thing is netting. Tal and I have talked about, we were talking about it on Friday actually. Think about the numbers that I just threw at you, 20 trillion, we net that. We have to figure out netting on the blockchain. You know why? There's not enough cash in the universe to settle gross. It doesn't exist. So these are some of the challenges that we have to deal with. And that's okay, we will, and DTCC, NASDAQ, all of it, we're working together to solve that for the industry, and that's where we add value. When we think about how we can help evolve this really transformative, powerful technology.
Yeah, just to add a couple of things. When we think about delivering on the promise of blockchain technology, three things come to mind. One is we're going to need convergence of the different rails. You do not want to have separate rails and make it more complicated, add friction to what already is a complicated process. So to the extent that we can see convergence across the technology of existing and new technologies, and they become seamless, and we submerge that, we abstract all of that from the user experience, we're going to win. The second thing is we need interoperability. We need to make sure there's interoperability so we can move seamlessly across chains, across technologies in a way, again, that you don't have to have a PhD to understand what is underlying the markets. And the last thing we all need to do is develop standards. So if you've looked at any market over the last 100 years that's really launched, seen adoption, and the trajectory of that take off, it's because there are standards in place. And there are standards in our markets, whether it's FIX or whether it's SWIFT, and these standards and these players have really catapulted these markets. So if we can think about the convergence of the technology, drive interoperability, make sure we adopt standards, we have an opportunity to really unleash the power of the technology.
Could I put a finer point on what Tao said?
We have 30 seconds.
Crucial, right?
Yes.
Blockchain is decentral by its nature, but the financial markets work optimally when you don't disaggregate assets and you don't disaggregate liquidity. We're trying to figure out how we can reconcile the two, take advantage of decentralized technology, but keep the important part of financial services together, again, for liquidity, capital efficiency, and end investor price discovery.
Tal, Frank, I'm sure James and I could spend literally an hour talking with you guys about these details. It's so fascinating. It's all the time we have. That was NASDAQ President Tal Cohen and DTCC CEO and Director Frank LaSala.
Thank you.
We'll be right back.
Guys.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
All right, guys, AI agents are starting to transact on chain. The Solana Foundation says the network has already processed millions of agent-driven payments. Fresh off Accelerate, Vibhu Norby from Solana, I'm really excited to hear just how it went. We were seeing buzz all around the show yesterday. So tell us about Accelerate and what you're excited about.
Accelerate was incredible. It was our biggest event ever in the US, which is new. We didn't used to have events here. We had 4 senators. We had Tom Emmer, we had DTCC, we had a major announcement with Google around AI. Yeah, it was a banger all around.
Tell us about some of those announcements. What were people talking about?
Yeah, this was a very, I would say, like institutional focused event. We had State Street announcing a tokenized fund on Solana. It was kind of we like to think about Solana as the home of internet capital markets. And that puts Solana at the center of conversations across not just finance, but across industries. So yeah, we had the institutional side. We had a lot of policy discussions. We had some alpha on the Clarity Act. Yesterday was announced on stage that they're going to writing next week, which is pretty cool. And then the Solana Foundation actually announced a agentic payments product called Pay.sh with Google on stage. That was pretty cool.
We just had NASDAQ and DTCC here. Out in the show floor, we have JP Morgan, we have a lot of the big banks. internet capital markets on Solana sounds like a pretty big deal. And I'm just wondering, how are institutions coming to Solana and utilizing the blockchain?
Right. I mean, we're seeing a ton of issuance. So Solana has grown RWAs on chain 1,000% since January last year. So we're right up in the top couple chains in terms of TVL. We're seeing everything from JP Morgan, who's starting to settle some transaction on Solana, Visa, Western Union just launched a stablecoin. We're also seeing neobanks and fintechs and technology companies starting to do things on Solana. Last week, Meta announced creator payouts would be in stablecoins, and those stablecoins are Solana-based in Colombia and the Philippines. So yeah, I think you're seeing payments traction, you're seeing RWAs, Treasury funds on chain. Solana is really the home for everything, every asset that you can imagine.
One of the critiques that people have said, on social I've seen is, all the suits are here, all the banks are here. I feel like crypto's wanted this for years. It finally comes, and you guys have done everything from, again, stablecoins to Western Union to really being kind of the source of the meme coin craze a few years ago. So I'm just interested in what gets you excited when you think about the future of blockchain.
Right now, I'm really excited about AI. I think there's basically this very large AI story, and then crypto is like this tiny little speck inside of that broader context. But I feel like we were given a gift with AI in some ways, because a lot of the tech that we've been building for so long is finding product market fit with agents and with LLMs. And that's a very exciting moment for us. This year, we've seen over 15 million payments coming from agents on chain. We've seen tremendous amount of growth on trading agents. So imagine giving your ChatGPT equivalent system $500 and a Solana wallet and asking it to do a strategy for you. We're seeing these kind of things play out. We have about 65% market share of agentic transactions are happening on Solana. So yeah, my goal right now is to make Solana the chain for AI.
When you think about the agentic economy that's coming, are you thinking about it more of agent to agent payments? Are you thinking it like, hey, you just want to give the financial management of your home to your agent who can also just pay your bills? Like, how do you see that evolving?
I think where crypto is most interesting is in paying for software-based products. There is an angle to paying with e-commerce, but we have the biggest opportunity, and some of the biggest problems in payments exists natively on the internet. And I'll give you a couple examples. One is, I don't know if CoinDesk has a paywall. Do you have a paywall?
Not yet.
Okay. But certainly everyone's had this experience where a friend sends them an article, they click the link, they read the first 2 sentences, and then they can't get past without paying. The reason those paywalls exist, to be honest with you, is because of how credit card processing systems work. You basically have a 30-cent minimum plus 3% exchange fee in order to just do any kind of payment, no matter how small it is. Crypto doesn't have that problem. You can pay for something with 1 cent and make it profitable. So we're starting to imagine these frontier experiences where users can, in their browser, browse the web with no paywalls, nothing in between, and their browser just paying 1 cent, 2 cent for access. There's kind of new monetization models there. We're also really excited about developer experience, because developers, when they're building software today, they might be using 30 to 50 different API providers to deliver that product experience. And every single one of those requires a billing account, maybe KYC, credit card, all these things that agents really don't have. Like, they don't have a home, they don't have an identity. And so yesterday with Google, we announced Pay.sh. It's the first way to pay for inference, which is basically like the way that it's like the prompts that you put into AI, and pay for cloud infrastructure with stablecoins on Solana. And basically, you brew, install, pay in your terminal, and you give your terminal a wallet, and now you can start paying per cent for API requests with one of the biggest API providers in the world. This is, I think the frontier is software payments, not the consumer stuff as much. That's where we're focused, at least.
We had Yatsu from Animoca on yesterday. One of the things that he has said recently is we are quickly approaching a moment in time where we have more agents than humans on the planet. And I'm just wondering, from what you're seeing on the Solana side, just how exciting. How many people are spinning up agents? How many are they spinning up? What are they using them for?
Yeah, and it's not only that there's going to be more agents than humans. Agents do things differently than us.
Yeah.
They're not afraid to make hundreds of trades a week. Like, if you give them a strategy, that's what they'll do. I have a trading bot right now on Solana. It's called Milo, and Milo is the name of the product, and it's making a couple hundred trades every single week on Solana, DeFi tokens and meme coins and other things like that. If I'm doing that myself, I might be doing one a month, two a month, something like that. So they kind of use the blockchain differently, and that's why we're so excited about this category, because I think it's not only product market fit for crypto in a unique way, but it's really proving the usefulness of Solana specifically, which is very scalable and can process thousands of transactions per second.
All right, well, you guys were with us in Hong Kong. You're here with us in Miami. So first of all, just thank you for aligning Solana Accelerate with Consensus, and we're going to see you again.
Yeah.
All right, thanks. That was Vibhu Norby, Chief Product Officer at Solana Foundation. Let's go to the showroom floor now and see what Jay and Silva is up to.
Thank you, man.
Thanks, man. Pleasure.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today.
All right, we are back with CoinDesk Live from Consensus Miami. I'm Sam Ewan. I'm now joined by the one and only Zach Guzman and our head of social, Martin SM. Guys, how is it going out here on the floor?
Yeah, this is a great conference. I gotta say, Sam, I mean, this is the energy in this building is very good. There are dogs walking around as well, which I didn't know was allowed. I would have brought my own if I knew that was allowed. But no, this is a good one. The vibes are high right now.
Yeah, I'd agree. It still feels like day one, if I'm completely honest. We've got a lot of amazing speakers today, and I think that's what people are most excited for, is the headline.
Have you seen any good sessions so far?
Yes, I've seen a couple. Kevin was great. I absolutely love the chain. That's my kind of style. And the two watches as well. But also just what he was talking about was quite serious, about collectibles and the future of tokenization and where all that's going. So yeah, great stuff.
Zach, you've been coming to these for a long time.
I have, yeah.
People are talking about the institutions, they're talking about kind of blockchains as really running financial infrastructure. Do you think there's some part of the crypto sort of world that is missing kind of the degen, like missing the kind of fun and the weird?
So there is that here, which is nice. Again, shout out to kind of the buffet of options you've got at a Consensus to really see and explore here. I think, we've been talking about that a lot, just in terms of what are the real core beliefs left in the space if all of a sudden it's more suits than weirdos, I guess, at conferences. But I think that, a lot of this is still, even as all of the infrastructure becomes, behind the scenes, there's still a lot of those kind of core principles when you actually get into the conversations with the builders in the space about, hey, does it matter if we're kind of allowing permissionlessness to enable ownership for people who might not have had access to a lot of these funds before, a lot of these opportunities? And once you dig into that, it doesn't really matter if someone's in a suit or a hoodie, they're still pushing for kind of the core beliefs, I think, are still in the space.
All right, Martin, you've been paying attention to our socials. You are seeing everyone else, I think, talk about being here in Miami. Are there any themes you're seeing sort of bubble up on X?
I think it's kind of what you mentioned, really. It seems that this year there's a lot less noise and a lot more kind of infrastructure seems to be kind of really solidifying. The institutions and the big players are really coming in and kind of setting the groundwork for how they're going to move forward in the space. And I think that's something that we kind of spoke about in previous years as the goal, or kind of what we were trying to reach, and we're here now. So I think a lot of the talk is about that and how serious crypto's coming, and that yes, we are still early, but we're maturing and the space is maturing as we go. So yeah.
All right, well, Martin, thank you for giving us your insights. Zach, you're going to hang around. We're going to go to a quick break. We'll be right back.
Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today.
What's your first move going to be?
Honestly,
I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
All right, well, welcome back. He helped build PayPal. He co-founded LinkedIn. He's an early investor in so many of the companies you've heard about. We're here to talk about AI, crypto, all things happening in this space. Reid Hoffman, welcome to the show.
Thank you. Thanks for having me.
Reid, you and I were just on stage, and we talked about a lot of different things. One of the things I didn't ask you then that I want to talk to you now about is you were one of the earliest investors in OpenAI. And I'm just interested in what you were seeing way back then that really made you think this was going to be the future.
So one of the benefits of being a venture investor is you invest in a portfolio, a number of things. So it isn't pick the one thing in the future, but you can see as possible. And the thing that I had seen with OpenAI was that the technology was going to create magic, right? So it wasn't that you necessarily knew exactly when the ChatGPT moment would happen, when the coding inflection moment would happen. You didn't, but you're like, I can see that those kinds of things are going to come out of this. So I led the very first, economic round. I'd also been a philanthropic donor before, and part of the reason that they had moved in that direction was that they were going, okay, we know that we're going to need billions of dollars. We're not going to be able to get that philanthropically, but we're still dedicated to our AI for humanity mission. And the real revolution that everyone should see is what's going on here is that we're learning how to turn scale compute and scale learning into amazing systems. And those amazing systems are going to be able to do work themselves. They're going to be able to amplify us. And right now, we don't really know what the limits of that amplification are, right, in terms of capability. Now, there's ultimately going to be only a certain amount of compute that you can apply, only a certain amount of electricity you can apply, but we actually even haven't started tuning efficiency that much yet either.
As someone who's also kind of built out one of the most trusted, I think it's fair to say, one of the most trusted social media networks in LinkedIn, I'm curious to kind of get your take on where you see the AI revolution in content moving, because trust, I mean, I saw a Master of Scale, you interviewed yourself using an AI version of yourself. Yes. I mean, how do you see that kind of changing the idea of how we as humans kind of coalesce around truth?
Well, is one of the things I talked to Sam about on stage is actually, in fact, one of the things that the whole crypto area really plays an important role in is, okay, is this really Reid versus Reid AI? Because for a lot of our listeners, this could be Reid AI if we were orchestrating that way. And then if you're talking to my agent, is it really my agent? Can it make those kind of commitments, et cetera? And then crypto is the right environment for all that. Now, that being said, part of the question when we get to information ecosystems, and part of the reason why LinkedIn in many ways functions a lot better than the other ecosystems is because it's real people with their identities, with something at stake, because your professional identity is something that's at stake in terms of doing this, precisely the same kind of patterns that you see in crypto. And so I think that one of the things that becomes all the more important in an AI universe is having this notion of trust, having this notion of what is the real identity. And these are like, a lot of people talk about crypto because you need trust and identity in order to do financial. But they talk about the financial. Well, the trust and identity is that central loop that makes all of this stuff go. And an AI universe is going to make that even much more. And also, of course, there's things that LinkedIn's working on, but I can't pre-announce their work.
Sure, fair enough.
We'll get there soon enough, exactly. Let's talk about the AI universe. You mentioned magic, back in the day when you were sort of first getting involved. A quote I love is Colin Farrell's character in Minority Report. At some point says, "Science has stolen most of our miracles." I think about the first time you used Codex the first time you use some of these agents, and you're just like, I can be a superhero now. And I'm just wondering your thoughts on technology's role to really fuel the human imagination.
Yes. So part of what's happening with AI now is it's redrawing the land, and I'm using my possible podcast, possible,
Yes.
Deliberate, but that's why we call it possible. What is possible is now redrawn, and what is superpowers, right? Is redrawn. And so, for example, like anyone can actually code now, given Codex, given Claude Code, et cetera, for us, and that is amazing. Like the software transformation of the world, and so I think that this, and by the way, that's part of the reason why everyone should go and use these tools to do some research. Words, easy. Everyone should create some images, right? Easy. Everyone should create some music, easy, right? And this is part of that expression. So I think you've seen the Pi Day video that I did, which is to show that, hey, I'm one of those people you'd pay not to sing, but I can actually, in fact, make something that's fun and interesting. And I've actually always been like pi is this really unique number, the ratio of a line to a circle, and what does that mean? And we should all reimagine what is possible now, and that's what AI brings. And I think we're not even at the first inning. We're the teams are heading into the dugout. That's how early we are for what's coming.
I think the other thing too, by the way, Pi reference at a conference, this might be one of the few conferences you could do that too. When it comes to talking to people who are still very excited about, I guess, abundance and what AI can offer, merging with this idea of scarcity that crypto is kind of, I guess, famous for, how do you see the world's kind of combining in capturing the value? And I'll go back to kind of the network effects of LinkedIn. It's it finally allowed people to see the network effects of oh, I know that guy, this guy's doing, and build on that. We've been experimenting that, and what my startup's doing is kind of tokenizing creator network effects, letting their fans co-own the future upside in them, kind of like IPOing for creators. But if we are seeing a world where content will be as easy as a button, how do you look at the world of IP or personal brands?
Well, it obviously gets amplified because as people attach to brands as something that they find reliable in a sea of noise, which is in a sense always what brands have been, right? And that's part of the reason why a branded thing versus a generic thing, et cetera. I think that will amplify its importance, right? Because the question is, okay, so I now have 50 different things or 5 million different things talking about AI. Oh, I'll trust the fact that what Reed's doing, whether it's Reed or Reed AI, etc. So I think brands actually get amplified in this environment. Now, that being said, for example, I've talked to a bunch of creators who are oh my God, do we all go out of work because of AI?
Yes.
And the answer is probably every creator who's not using AI will be replaced by creators using AI, right? Because the amplification factor is just too great. But for example, when I look at writing scripts, for example, the writing function right now, and you go to AI, and I've seen a lot of people try to prompt AI with it. It's not very good, right? Maybe it'll get better, but a good way to understand kind of current function AIs, that maybe they'll change, and maybe evolve, and all those changes. But is this what would a consensus of 10 experts talking to each other give you? That's actually, in fact, very interesting from a medical thing. That, if you said, I'd like to pick one thing, that's the right thing from a medical perspective. But if you're okay, I'm looking for an interesting, edgy story, that's actually not the way a dialogue and other kinds of things work. And what's more, even when I'm producing AI work, it's still producing hundreds of versions and then picking, these 3, and let's use this element, this one, and refine it. And I think that's what the amplification moment for creators is. The amplification moment for creators is not, oh my God, it now can do all these things I could do before. Of course it can, but now I can get much faster to the kinds of things I'm doing. And I think we'll be there for a fairly long time, wherever AI is going.
Yeah.
Reed, we talked about you were an early investor in OpenAI. You also were a very early investor in Coinbase, in Sapo.
Yep.
You have really dabbled in the crypto space, and now you're continually learning in this space. As an investor, what are you looking for? If you were going to deploy some capital, what kinds of crypto companies would you be focused on?
So I tend to like to do. I'm one of those when people are going one direction, go a different direction, and so that was part of like back in 2014, bought my first Bitcoin, did Zappo, Coinbase, etc. I wouldn't call it dabbling because it was in serious intent for those things. But then once it was like, okay, everyone else is beginning to recognize the amazing thing that's coming here, that's when I headed to 2015 into AI as an example. Now, part of the reason why I bought my first CryptoPunk last year, started thinking about NFTs, we had our conversation 6 months ago. Part of the thinking of this was, no, actually, in fact, crypto is going to come back and intersect with AI. And so I've been thinking a lot about, what are the question of identity systems. There's interesting questions around, like, both of them involve massive growths in compute. Where does that, kind of play into? I would say right now I'm taking an AI primary lens to everything, but that has a lot of zone within the crypto space. But generally speaking, it's kind of like, oh, would you want to do, this, a level X, chain for da-da-da? It's like, no, there's lots of things going on there. That people can do those well, other people tend to do those. I tend to look at the stranger corners.
I love it. Reed, you have two paddles under you right here.
Right.
One says underrated.
Okay,
one
got
says
it.
Overhyped. Zach, I'm going to challenge you to think of
I like this.
of a question to ask Reed. I will start. So, Reed, my question is either underrated or overhyped that we are all going to be working for our AI overlords in the future.
So that's overhyped. In part because while I think the actual future, as opposed to working for our AI overlords, is I think we're actually going to be, there's going to be no such thing as an individual contributor anymore. All of us are going to be managers, like almost think of like AI organizational management, orchestrating AIs and what we're doing. So that's not our AI overlords. You might say they're working, like that's like you working for your iPhone. You're not actually working for your iPhone.
I kind of do work for my
Yeah, it may feel like that, but it's because you're doing your work with your iPhone.
I think one of the things, coming from CNBC, Yahoo Finance, now here working with the CoinDesk squad, we were always looking at kind of valuations and things. My overhyped, underrated would be bubble talk right now in AI land, data centers. Very costly.
So I will also go for overhyped.
Okay.
And then the reason is because, look, the valuations may be a little bit out of whack, but what we know is, like, if you look at for example, the kind of financials about how, like, OpenAI and Anthropic are working, their inference workloads are actually, in fact, even in this thing, profitable things. So it's the training, and obviously an exponential training thing. But what that means is the fundamental provision of intelligence at the scale and breadth of electricity is a very valuable thing and is transformative. So data centers, we'll want as many of them as we can. It's never at any price, but you kind of think at the early phase, these can't be too crazy prices yet, and also, even if some of them are overpriced, the overall provision of inference workloads in AI, I mean, think about all the things we can apply intelligence to now. So that's the reason I go overhyped.
All right, well, we're going to have to wrap right there. That was Reed Hoffman. Reed, thank you so much for spending time with us. Breaking news from our main stage. CoinDesk just announced the dates for Consensus 2027 here in Miami. Maybe we'll get Reed to come back again. 2028 in New York City. So we'll be back, and we'll be back in a minute.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
All right, welcome back. Dan Tapiero built 10T around the idea that digital assets could become a $10 trillion ecosystem. Now he says that target was too small. He's rebranded to 50T. He joins us now to explain it. So Dan, at 10 trillion, people were like, this is a lot.
Right.
Now you've rebranded 50 trillion. What changed?
Right. Well, oh wait, a lot's changed. I thought we'd do a little bit on the 10T part. In the middle of 2019, I was looking out at the space and I'm thinking, how big could it actually be? The total value at the time was 300 billion. And the way we computed the value of Bitcoin, the value of all the other alts, plus all the equity value in the space at the time was only 300 billion. So I thought, okay, what's my view? Looking out 10 years, the value of the digital asset ecosystem, as we've called it since then, could get to 10 trillion. That was my view. I come from the old investment world, the old macro hedge fund business. And I thought, wow, I've never made a 30x call, right? 300 billion to 10 trillion, a 30x call. I said, never made that kind of call in any investment that I'd ever made before. So I said, I'm going to put my view into the name of my fund, right? As a way to stamp that for everyone to see. Because I thought there's no chance anyone, if we actually get to 10T, no one will believe that I actually called it, years before. So that was sort of the original idea. And then about a year and a half ago, Bitcoin was up at 120. The space had gotten to around 5 trillion in terms of how we measured. So it went from that 300 billion to 5 trillion in about 5 years. And I thought we're launching our fifth fund, Fund 5, which we just had our first close for. And I'm thinking, this is crazy. We can't stay with 10T because we're 5T. What do we really think the value of this space can get to over the next 10 years? And that's, we think, $1 million, so 10 years from now, $1 million on Bitcoin, that would be 20 trillion. 10 trillion for ETH, Solana, and the rest of the space, and then another 20 trillion for the equity. And I think that the proliferation of blockchain throughout our economy, I think is going to touch everything. I think you could play with that 20 trillion equity number, but look, we had 6 realizations last year. We owned Circle and Figure. Deribit got purchased by Coinbase. And so we really come at the space from an equity mindset. We don't own cryptocurrency. In fact, we're the only growth stage investor in the world exclusively focused on crypto, blockchain, Web3, digital assets. And we're investing in companies that are a little more developed, not venture. Lots of the other investors in the space tend to be venture. And so, when I think about total value, that 50 trillion, 20 trillion of it we think is going to be businesses and companies that are interacting with, yes, Bitcoin, ETH, but also all the various iterations, within the blockchain world, stablecoins, RWAs, et cetera, et cetera.
As you kind of think about 10 trillion to 50 trillion, I guess maybe a fair metaphor would be kind of a founder, and then a lot of times PE firms have someone else come in and take over the company, get it to the next stage. If you're thinking about the difference between 10 trillion and 50 trillion, what has surprised you in terms of kind of the evolution of the space? For me,
that's an easy one.
It's kind of interesting to see all TradFi and crypto coming together.
Yes, well, the original idea always, I think, even in the 2019s, was that institutional adoption was going to come.
Yeah.
And I think in some ways, I think, what is it, be careful what you wish for? It's upon us, it's arrived. And there's an integration that's happening now. And I think even this conference today feels a little less crypto than it did 2 years ago, 3, 4 years ago. And I think that's a wonderful thing. It's mainly led by, of course, stablecoins. 5 years ago, and we invested in Circle years ago, thankfully. But Circle, in 21, there was zero stablecoin in terms of volume. It was tiny. And last year, of course, we did $33 trillion of volume. And I think, it took a little while for people like Larry Fink, in the middle of 23 to change his mind, the launching of the ETFs in early 24. But really, I think it's the volume of stable coins that really, I think surprised the traditional world. Something could go from 0 to 33 trillion in 5 years.
Yeah.
And then, of course, you have Scott Bessent, now Warsh, and you have this administration really understanding that they want the dollar to be digitized, and they want to be the lead country in the digitization of fiat currency. Of course, 99% of all stables are in dollars today.
Yeah.
If you look out 5-10 years from now, a big trend that we're looking at to invest in are, we think that it's not going to be 90%. You're going to have all the countries around the world, euro and yen and Indonesian rupiah, et cetera, will all be sitting eventually on a blockchain.
Dan, do you think 50T could even be too small? Like, I think about it through the lens of Google.
Got a name change again. They
right,
just
Google,
fixed the signs.
Microsoft, Amazon, Meta, they're all playing. And so is there a world where this starts to become, frankly, just all like eating up all of equities?
Yeah, I thought I was conservative when I had my 10T view, but I thought 30x, that's enough. Yes, I think it is conservative. I mean, we especially, I know we don't have that much longer to talk, but when you start to think about agentic finance, we think that there are going to be thousands of trillions, not tens of trillions or hundreds, thousands of trillions of transactions done by autonomous agents within the next 5 to 10 years. And so, depending upon how you calculate it, 50T, of course, is too small a number, knock on wood, because all of our investors will be in a very good position if we actually do get to 50T. That's a 10x from where we are today based on the way we calculate things. So it's very exciting next 10 years. And we've made some great progress to 10. We're halfway there. Maybe we get to chat again when we get to 25.
Yeah.
And I might need to.
We will definitely do that. Dan Tapiero, thank you for joining us here at the desk. We are going to go to the main stage right now and hear from American Bitcoin.
Okay.
Of course not. You know what that's going to do? It's all going to become digitized. And the banks have fought like hell to keep that from happening, and we've broken the banks. We've broken the banks because of everybody in this room and because we're right. And it's taken this much time, and now all of a sudden you see the institutional adoption that I started talking about before. Guys, we've won this race. I mean, we've already won this race, but the speed of which you're going to see growth over the next couple of years is going to be just monumental. And so I think Asher and I and Mike and everybody else, we nailed the timing. We nailed the timing of American Bitcoin, and we're not just at that. Name another industry where you can mine a product for roughly 50% of the value of the product. Go do that with diamonds. Go try and do that with gold. Guys, good luck. Most of those companies are making all their margin, selling futures, selling complicated derivatives on the actual asset class. Go talk to any farmer around the country. You think they're making 50% profit margins? Not a chance. And so, I've always said that there's two races that we're fighting. One is the race to get the most Bitcoin. And Michael Saylor, he's a friend of mine. He's done an unbelievable freaking job, and I doubt anybody ever catches that. You have the second race, which is who can do it the cheapest. And I can tell you, American Bitcoin, we are hell-bent. We are hell-bent on doing it the cheapest, and we have the platform to do it the cheapest. And that's why we mine every single day, and that's why we increase our Satoshis per share every single day. That's the fundamental business of American Bitcoin, and I truly believe we're going to win that race.
All right. So, final question, I'm going to ask you guys to be a little reflective on this one. It does feel like every year we kind of get to this point where we're on the cusp of something. We're about to have this escape velocity. I want you guys to think about it. 5 years from now, you're reflecting on where we are today. How would you describe this moment? What is happening right now in the context of American Bitcoin, this industry, what's happening in this nation. Walk us through kind of how we should be thinking about this moment, and maybe a little bit of what we should be expecting going forward.
I think 5 years from today, people would have said, shit, I should have bought American Bitcoin at that time. No, but in all seriousness, building when other people aren't has been kind of the undertone of the success that we've had at Hut 8 and as we're building American Bitcoin as well, is when folks aren't paying attention and if you have conviction, that's when you build. And at American Bitcoin, we've been building every single day. And I think, especially when building a public company, you have to start thinking about the business and not the stock price. And you say, the stock price will eventually go wherever it deserves to go. If we build a great business, the value of the business will continue to grow. And we are continuously focused on building the business every day, not just on the Bitcoin mining business, but on the treasury strategy, on the ecosystem strategy. And I think 5 years from today, American Bitcoin will be the Bitcoin company, and people will look at the story and the build and say, wow, they really focus on building when people didn't have as strong as conviction as they had 18 months ago, and they stuck through regardless because they had the long-term perspective.
Well, America's done something great. America, unlike the last administration, actually embraced the technology that they were otherwise throwing people in jail for even thinking about. And America had enough backbone and had enough fortitude that said, listen, we're going to win this race, and we're going to win it decisively. Asia's not going to win it. Sorry to my friends in the front row, because SJ is one of my best friends, and she's from, you're doing great over there, SJ, but America's going to win that race, all right? We're hell-bent on winning that race. And what's happening is, as we create clarity, and in fact, they're probably the greatest kind of attributes of this in a certain way, but as America has gotten clarity, as America has embraced it, every country around the world has noticed, and every country around the world is starting to follow. And so you're not putting this genie back in the bottle. This genie's out of the bottle, and it's going to stay out of the bottle. But what's happening is the speed of adaption right now, and the speed that people are building on these respective networks is unbelievable. And that's going to continue. Second of all, you see what Asher is doing every day. And by the way, this guy needs to be congratulated. His stock price today, they made a big announcement last night. His stock price was up 34% last night. It hit $107 today. About 3 years ago, I think it was $6, right? 2 years ago, it was at $6. It hit $107 today. So this guy's he wore a tie for the first time when I saw him in the green room. And I go, Asher, what the hell? Your stock hits $107. It breaks 100 for the first time, and all of a sudden you put on a tie for the first time ever. But joking aside, what they're doing in AI, and what everybody's doing in AI, and what America is leading the world in AI, how do you think payments are going to flow through AI? You think that's going to flow through paper currency? Do you think that's going to flow through the use of gold? And what are you going to do? You're going to have AI go smelt gold and transfer it around the world? Of course not, right? I mean, you know how it's going to flow? It's going to flow through digital currencies. It's going to flow through cryptocurrency. It's going to flow through Bitcoin, right? There's just no question about this. So you have two things that are happening. Well, you really have three things that are happening. I mean, first of all, governments all over the world, led by the greatest economy that the world has ever seen, America, is embracing it. Second of all, you almost have the greatest technology boom that's ever happened, which is AI. And the only way to actually flow money through AI, is the use of digital assets. And third, the financial institutions all realize that they've lost, and they can no longer push back. And so instead of actually fighting against the tide, you know what they're doing? They're swimming with it for the first time. So now all of a sudden you have hundreds of billions, trillions and trillions of dollars that are coming into these because they realize that the BlackRock ETF, Bitcoin ETF, was the most successful in history, made them a fortune. And guess what they're doing? Every day you have another person popping up another ETF. And every day you have another private wealth manager who made a lot of money in Bitcoin recommending that his clients put a more significant stake of their net income into Bitcoin. And all of a sudden you have legislation going through which gives people more of an optionality for 401ks and retirement plans to have cryptocurrency allocation. This is all happening at the same time. The AI boom, the institutions, the retirement plans, the companies, all of you out there every single day that are building products on top of the system, being able to custody it. The biggest banks in the country with the vast majority of accounts, the Charles Schwab's that have 30% of the retirement accounts in this country. They're allowing the custody of Bitcoin. They're allowing people to borrow against their BTC holdings. Guys, what this does, the way this propels this industry is absolutely monumental. And so, I always get killed. I believe Bitcoin is going to go to $1 million. I believe Bitcoin is going to go to more than $1 million. I've said that over and over and over. And I've never had more conviction than right now. So we're in the heyday of this industry. It's wholly apparent, Michael, based on the fact that how many people you have here? 25,000 people over the couple days?
People here with us.
People love it. And this is happening all over the world. So kind of congratulate all of you for being on the forefront of all of this and believing before it became mainstream. We're all going to be the ultimate winners of this incredible technology and this incredible boom.
Well, with that, Eric, Asher, thank you so much for joining us here at Consensus. Thank you so much, everybody.
How was that? Day 2 is just heating up. Wow, it is packed in here. We have some great panels coming up. Right up next, please welcome Tyler Spalding and Tom Farley for Locked In, How Anvil and Bullish are forging the future on payment using on-chain letters of credit.
Michael. See everyone. Good to see everyone. Tyler Spalding, as you've heard, very excited to be up here for a whole bunch of reasons. But before we get into it, let's learn a little bit more about him. The usual path to this stage: NASA, Air Force, 50 patents, 2 MBAs, the largest baseball bat collection in the world. Makes perfect sense. How did you end up in crypto? How did you end up on this stage?
Man, it's hard to say that quickly, but well, first off, I've been to every single consensus from back in, what was it, 2016 maybe? Yeah. So this is really cool to see. I mean, this crowd here is probably 3 times bigger than it was in the New York Times building in the entire first consensus. So that's really cool. So to see the growth of the space. And I've been in crypto now since January 2011. So I mean, it seems like almost my whole life at this point. But I had been in payments and just technology and found out about it, and thought Bitcoin and crypto is going to be this like really revolutionary thing. And it's really cool to go through like all these people saying you're crazy, this is stupid, and now like kind of what it's become is really cool.
Well, great. We welcome you, and excited to have him up here. Really, kind of for a personal reason or a personal business reason. Bullish is the only public company in the world using DeFi in its everyday operations, and it's using the Anvil platform as you're about to hear. And we just thought that was cool. That was a message that needed to be shared, because I think a lot of us have been looking for the real use cases for DeFi that could be used in companies, and we can tell you we found it here. So tell them what we're using and what you've built.
Yeah, really that's the whole thing. And even it's really about approachability. It's about usability. We're even behind at the Acronym Foundation, that ridiculous carnival over there. And the big part about that is just to show that you can have a little bit of fun, right? It doesn't have to be just completely serious, and also trying to shill you stuff and sell you something and buy something, right? It's about a little bit more kind of embracing, encompassing, have people come and have fun. So thank you, and all the community members are behind all of that, by the way. So every single person there. So thank you to the community folks. Also, thank you for Consensus for putting up with a lot of these things. It turns out bringing in a 12-foot Pepe balloon and a working Ferris wheel is not necessarily on the standard operating agenda. So that was really cool. So thank you, Consensus, as well, for enabling all of that. But no, so Anvil and the protocol we're working on is really just about how can you use DeFi and crypto in a meaningful way, right? Real world usage. Everyone talks about this all the time. I was a previous co-founder of Flexo, which is now the largest digital payments network in the world. And so it's about what is the everyday usage? How can people actually get value from this stuff? And so rather than some of the more exotic, perp dexes or some of these other exotic instruments that maybe are a little more challenging for people to understand, or the technology that are maybe a little more vulnerable, we just built a boring protocol that allows for collateral management, and we wanted TradFi to use it. And crypto is not good at many things, right? It's slow, it's sometimes hard, the UX isn't there, there's a lot of challenges, but it provides transparent assets. You know what you have, it's a decentralized database. You can see all the assets, you know the conditions of the assets, they're not rehypothecated, you know exactly what you're getting. That works out being perfect for collateral, and so it's very boring, but it turns out that collateralized transactions are one of the biggest markets in the entire world. And large, TradFi organizations, like Bullish, are collateralizing transactions all the time. And so if we could now bring something with all the efficiencies of DeFi for a forward-looking company like Bullish to now use this and incorporate it into its operations, that to us is really the whole ideal of how do you get this stuff just really used? This isn't like a theory. This isn't us just talking about, someone could use this stuff. You need X, Y, Z, all these other things. It's literally live right now in practice by a public company, which we just think it's taken a long time, but we're here and we're excited now to be really a part of it.
Yeah, in our case, just using it for payables financing or receivables factoring. I mean, we at Bullish, we have a lot of Bitcoin on the balance sheet, but we don't always run a real hefty cash balance. So we're able to use it for letters of credit to extend our payment terms or what have you. So very functional, very practical. Congratulations to you for building something with such utility. So can I go back for a second? I'm just curious, this certainly wasn't in our list of questions, but take me back to 2016. How did you end up at the first Consensus?
Man, it was hard to even find information at that point. So it was really just kind of this, you're talking to everyone you can about crypto, and this is Ethereum was new, and no one wants to listen to you, and they just call you crazy. So when you find this little network of people, I was in New York, and there's hey, we heard about this thing going on, in the basement of this office. We can go get tickets here. And CoinDesk was a known thing, so CoinDesk is definitely one of the pioneers in the space. That's where all the news was at that point. There weren't any of these other sites. It was CoinDesk, and that was really it. And they've been around since the very beginning. And so when they had this, conference get created, we said, wow, that's the only one, and we had to go. So I went with probably 5 or 6 people, and it was all. I remember the convention hall maybe had 6 sponsors, all in the basement. So yeah, getting to now actually see just new people, that was really, really exciting.
Just see what's going on here. That's pretty cool. Thanks for coming to I guess 10 consecutive minus COVID time, right?
Yeah. We were there digitally.
Yeah. Oh, so 10. 10. While we have you, there's been a lot of talk about payments at this conference. So AI, agentic payments, will those be in stablecoins? Will those be on traditional fiat rails? We heard yesterday from Brad Garlinghouse, they're processing 13 trillion in annual payments, all fiat, nothing digital, but optimistic and hopeful that it is going to move kind of more digital. What do you and there's a company called Bullish that acquired Equinity, announced it acquired Equinity, which processes 500 billion of payments every year, and we're certainly interested in the answer to this question. Are we going to see more digital asset payments, stablecoin payments? I mean, you're somebody who understands both sides, fiat, stablecoins. Are there benefits one versus the other that you see things changing, or do you think it's going to be a lot of the same?
No, it's going to change rapidly. It's going to be one of those things that, like an overnight change that takes 10 years or something. But it's so incredibly inevitable. Even when you just go back to the architecture of just like how modern electronic payments work, or even the internet, right? It's this whole famous story. You listen to Andreessen's like podcast or A16Z podcast talk about pioneering the internet. The cardinal sin of the internet was that it didn't include native payments. So you couldn't actually make a payment within the web or within the internet itself, because that's a stateless system. So there's really no way to transfer value within the internet itself. Whereas now these new networks, all being stateful networks, now can transfer assets, can transfer value, can transfer money. So to me, it's just 100% inevitable in no uncertain terms. We're going to get to the majority of all payments being made through, whether it's Agentic or other software or even people, all just having digital payments now natively is just 100% happening. It'll happen very quickly.
At the end of dinner last night, I spoke to Jeff from Trade XYZ. I said, "How was dinner?" He said, "I sat across from Tyler. He's the most interesting person I've ever met." So it gives you a sense of some of his range. I want to go back to the one I find the most interesting. I was a baseball player growing up and a bit of a nut, and I told you he has the largest baseball bat collection. And as a bridge to our next speaker here, I asked him last night, "Do you own any A-Rod bats?" What's the answer to that question?
A lot of them. I probably have maybe like 20 or 25, but they're all home run bats. But the cool one, and I was just chatting with him briefly about it, I have his 500th home run bat, which is neat.
That's really cool. That's really cool. Well, look, thank you for being up here. Bullish loves partnering with Anvil. We're actually listing the token on Bullish. We may have done so already. Proud to be using it. Like I said, first public company using DeFi in the wild for a real operational use case. Incredible entrepreneur and a fun guy to be up here talking to. Please give it up for Tyler.
Thanks, Tyler.
Thanks, bud. Yeah, of course.
All right. Our speaker today is a true powerhouse in both sports and business. Alex Rodriguez, best known for his legendary MLB career, Alex has seamlessly transitioned from athlete to entrepreneur. Today, he's the chairman and CEO of A-Rod Corp, an investment firm that backs brands across real estate, sports, and entertainment. He's also the co-chairman of the Minnesota Timberwolves and Lynx, an Emmy Award-winning MLB analyst for Fox Sports, a former investor on Shark Tank, and the co-host of The Deal, a Bloomberg original series where he interviews icons in sports and business. And now let's watch this short trailer.
How do you think most people view you?
I mean, I would just say it's complicated.
There's clearly two personalities. There's A-Rod and there's Alex. Alex is my brother, a sensitive person, and A-Rod is the killer.
Right center, and Rodriguez is the hero.
A-Rod is a Shakespearean figure.
Alex Rodriguez with a grand slam.
He's one of the greatest players who ever played. But he also was an incredibly flawed individual.
I think he's someone who is fixated on how he comes across to the world.
The guy truly was obsessed with the game. That's all he talked about.
When you join the Yankees, you have to be anything but a winner. You can be the worst person in the world, but if you could play, then you're fulfilling your obligation.
I felt like pressure to produce and play at a really high level at all costs.
Breaking news tonight, we are learning that baseball is about to announce its most sweeping set of suspensions for use of performance-enhancing drugs.
Why rich and powerful people cheat, part 1. There's an arrogance that often comes with power. There's a sense I won't get caught because you actually think you are better than other people. There's nothing more stupid than that. I learned that the hard way. I'm on a journey of being a man with integrity and character and someone that you can bet on and you can trust. I'm sure there's people watching this, and no matter what I say, they're gonna spin it to why they're gonna hate me more. And that's fine.
Is this Alex or A-Rod we're talking to right now?
Whew. All right, please join me in welcoming Alex Rodriguez and Tom Varley.
Yeah, I'm out at Brooklyn. Now I'm down in Tribeca, right next to the Narrow. But I'll be hood forever. I'm the new Sinatra. Since I made it here, I can make it.
17-year-old me in Bowie, Maryland, in Prince George's County, who woke up and all he did all day, every day, was either think or play or train for baseball, and aspired to be like my contemporary Alex Rodriguez from Westminster Christian High School. Cannot believe that I get to sit here. I scraped for every bit of information that I could. I knew his whole life story and was absolutely fascinated and continue to be to this day. So when I had the opportunity to moderate this panel, it took me about 1 second to say yes. It's great to be here with you.
Great to be here. Hello, everyone.
For my money, the most excited I've gotten about professional sports, at least since I was a little kid, in the last 25 years, were those Red Sox-Yankees games. There was nothing more exciting than Pedro on the hill. Yeah. And man, the time went by so slowly, just waiting for those games to start. What many of you may not know is Alex Rodriguez, the mortal enemy of the Red Sox for those series, was actually traded to the Red Sox. In 2003, I think it was. Yeah. He was traded, and the trade got DQ'd. And he ends up on the Yankees, and the rest is history. But my question after that long preamble is, Alex, last week on Polymarket, a digital asset prediction market, you had a 13% probability of being the next manager of the Boston Red Sox.
Really?
True story. And today you're back down to 1%. So there was some rumor there. Do you want to break news here at Consensus? Are you in the running to be the manager of the Boston Red Sox?
Polymarkets are wrong. We know that now. No, there's no chance of that. Although, you know, Sam Kennedy's a good buddy, and they've done a terrific job. I mean, to think that the Red Sox went almost 90 years without winning a title, and 4 over the last 20 is pretty awesome.
What was that like to be in those series, those games? Could you feel how important it was to people like me who love competition, love sport? Did it feel like, holy crap, this is something special?
Yeah, you felt it. I mean, you feel it in the moment. I mean, whether it's, you know, for us who grew up here in Miami, Florida State against Florida, or Lakers, Celtics back in the day, there is some magic in the air. And what people don't realize, in 2004, I hate to talk about 04 because that's the year we were up 3-0 and they came back and beat us. There was 40 to 45 million people watching games 6 and 7. I mean, those are great NFL numbers. And that was just the ALCS. So there was a heat around it. Tickets would go for $10,000, $15,000, $20,000 right at Fenway Park. It was just, you felt the gravity of the moment. And although last year we had a great World Series where we had 53 million people watch, when you include domestically Canada and Japan because of Ohtani, it was a great World Series. And I think this is the most important, little bit here, Tom, going a little bit off sidebar. The single most important year in baseball history is this year because the CBA, the collective bargaining agreement, is due. That means that on December 1st, there is no collective bargaining.
which puts the league on a threat to walk away and have a work stoppage, which would be an absolute bloodbath.
I want to switch. I want to ultimately progress into your business career because I'm fascinated by your success there. But very topical. I've become a bit of an NBA nut in my older age, and have followed the Minnesota Timberwolves this year. Those of you who aren't aware, Alex owns the Minnesota Timberwolves. Really important game tonight, and Alex is going to head to the game against the Spurs, Game 2 in San Antonio. Just tell us what's it been like to be an NBA owner after your long baseball career?
Yeah, I often get asked, Tom, why basketball when you played baseball? What do you know about basketball? And the truth is not much. But I have an opportunity to hire great people that do know a lot about basketball and could educate me and my partner, Mark Laurie. The inspiration came around, I took a run with our good friend Mario Dose from JP Morgan to buy the Mets around the COVID era. And when that deal fell apart and we were the second winners to Steve Cohen, it was a blessing in disguise. And once that door shut, the phone started ringing off the hook because our bid for the Mets was around $2.3 billion. And I think the number that was bought was around $2.45 billion. So I looked at Magic Johnson, who's a longtime mentor, and he played basketball, and he was having a lot of success with the Dodgers. And the world doesn't have to be like your own idea. You can copy and paste. And that kind of made me think, it doesn't have to be baseball. There's not a mandate that it has to be baseball. And then when we looked at the economics of the game of basketball, it was quite telling that we thought it was a better deal, and the acquisition price was $1 billion less. So we did a lot of work, we were prepped, and then we were able to plug and play. And just to share a little bit about the NBA and how popular the sport is, as we speak today, Tom and I here today, there's 400 million people playing basketball in China. There's 300 million people playing basketball in India. In Europe is the second most popular sport, right? And we only have 1% of a $45 billion annual business. Soccer's obviously 1, but the NBA is second. But we're second, but we only have 1% of the pie. So when you think about Europe, NBA, and growth all over the world, I think NBA is well positioned.
I want to editorialize for a minute here. You may think of buying a pro sports team, it's a vanity project. I find it interesting that people who can buy it and improve it as a business, they have done a fabulous job. First of all, they bought it right and have improved the franchise in the short time they've owned it. His partner, Mark Laurie, incredibly impressive guy. It shows you how dumb I am with these things. I remember getting asked, hey, I'm thinking about starting this business to sell diapers on the internet. And I said, that's the dumbest thing I've ever heard. He then sold it like a couple years later to Amazon for $500 million, and then started Jet.com and sold that for $4 billion. And so I can see how the two of you together are a super team. What have you done to improve the Timberwolves as an organization in the short time you've owned it?
Yeah, I think anytime you buy a business, the way that Mark and I think about it is we call it VCP. And if it has all three letters, you're on the money. First of all, you have to have the vision and be able to articulate it in very short terms, very clear vision. As you think about to consumers, your fan base, people you're trying to recruit to come on this great mission with you. Our V is vision, capital is C, and then obviously the hardest part is always the people. And you need to you have the vision, you have the capital to support that vision, and then the hardest part, as you guys know, is always finding the right people to get on the boat, and then you have to have that alignment with them. But Tom, when we bought it, it was a bit of an LBO situation where we bought it around COVID time. You had the sad times with George Floyd. The city was shut down, basically. Mark and I show up to our first game against the New Jersey Nets, Brooklyn Nets, and we get a note from one of our executives that says the game's been canceled. We looked at each other, we go, uh-oh. And we paid $1.5 billion, and everyone thought we were nuts. It was COVID, as you can remember, there was no sports, and then we had the bubble in Disney, and people were saying, like, why would you pay that much money when basketball and sports will never come back? And I would say, never? I mean, even someone who has played baseball his whole life, I actually started doubting because COVID brought so much uncertainty, and it was such a crisis. So then we show up to our first game, it was like 2,500 people. I was like, that's how many people I had at Westminster Christian watching our basketball games. So when we got there, just to give you a few numbers, we had one game on national TV over 5 years. So one game in 5 years. on national TV. This year we'll have over 35 games. We had 2,000 season tickets. This year we're up to almost 14,000 season ticket holders. And we've done a lot of improvements. We brought in what we think is a top, if not one of the top general managers in the game, and Tim Conley. He was the architect for the Denver Nuggets. And now we've been able to play the Denver Nuggets and beat them twice in the playoffs. And then we brought in a world-class CEO to run the business side, and Matt Caldwell, who turned around the Florida Panthers here. Florida Panthers were non-existent under the leadership of Vinny Viola. They've gone through 3 Stanley Cups in a row and won the last 2. And then Vinny, who's a great friend and a mentor, who knows talent better than anyone, said, Alex, I think Matt's outgrown this job. Maybe you take a run at him, and I did, and the rest is history.
And what have you guys done in terms of just knowing Mark Lowry's background as well? What have you done to apply technology?
Yeah, we started this platform called Jump. So really trying to take Ticketmaster and the broker out and basically have a relationship one-on-one with you. So no fees, no nothing. We pay all the tax, we pay it, just make it very, very friendly to the fan base, as we're obsessed with customer service. And there's an opportunity, for example, if you buy seats in the upper deck and they cost $20, and Tom him and his family has 4 tickets on the floor, and he paid $1,000. Well, if he decides to check out in the third quarter and go home and take his family early, like Uber, he would say, my 4 tickets are now available. So in your Jump app, Tom's 4 tickets blow up green, and if it's a blowout, you might be able to buy those tickets for $200 and bring your whole family, take your selfie, real time, no fees, no nothing. So that's one example that we came up with, because Mark and I were the kids that sat in the upper deck, and we would look down and all these empty seats behind home plate were empty, and we're like, what a waste. Now, we were clever enough that we would, the old ushers didn't have a quick first step, and we would kind of move ourselves, but it'd take us 5 innings to kind of sneak down there, and then ultimately we'll get kicked out. So there's an opportunity to upgrade in real time. When you upgrade, we'll bring you a Coke, we might bring you a drink. You say, hey, you're passing by the memorabilia store, you want to buy something there? That's one. And then we've leaned into AI in a way. Our players tonight, each player will have a chip, right? And that chip will tell us how fast they're running, how much energy they're wasting, how their nutrition is, what they need, what they don't need, are they sleeping enough? But ultimately, it can also predict injuries. If someone is running, 20 miles an hour versus, 22, we can get ahead of that data and maybe hopefully prevent some injuries.
So I have a bone to pick with the Minnesota Timberwolves. As managers in this room, you really try to cajole and inspire your fellow colleagues, your employees to show up every day and deliver every day. Not every day is the playoffs, and you get that. You hit 700 bombs or something. I don't remember. How many home runs do you hit?
696.
Oh, who's counting? 696. You should have played another week. Could have gotten there.
That's what my mom said.
Holy smokes. But the Minnesota Timberwolves drive me nuts. They're perfectly average all season long. And then they just show up and go to the NBA Finals. The NBA Finals, who did they just beat? They were underdogs. They knocked out Denver, right? You guys knocked. What the hell's going on during the regular season?
You must be talking to my coach, Chris Finch, because Coach Finch says the same thing. We have a very special group. They've been together for 6 years. Anthony Edwards is going to play his 47th game today in the postseason. He's only 24 years old. Now, it doesn't sound like a lot, but for a franchise that didn't go to the playoffs at all, basically for 20 years, to go 5 years in a row is really, really cool. And he's a transformational type player. He has Jordan-esque type qualities. Came out of Georgia as a freshman. But I do think there's a toughness. I think this team has won a lot. And I think when it comes to the playoffs, they really enjoy being underdogs. And for San Antonio, as an example, most people said that it would sweep us. And I think our team gets really fired up about that.
I think, rewinding my comments, I think I said NBA Finals. They went to the Western Conference Finals
right.
2 years. And for my money, they're going back this year, especially after that Game 1 win. So congratulations on that. One more kind of wonky basketball question. Again, with employees, you want people that are good at everything. But you have to respect somebody who's really great at something, and maybe they're not good at someone else, and find a spot for them. I think of Rudy Gobert. He's not good offensively. He is a freak defensively. Unbelievable. So how do you take something like that and make sure you have the right pieces around it to set up a team that's cohesive?
So Rudy Gobert, just for some of you guys that don't know, he's from France. He's 7'2". He can arguably be the best modern-day defensive player of our generation with four defensive players of the year. Now, I think with Rudy, he's such a smart guy. He's one of my favorite players of all time. Because when we traded him, we traded a bunch of first-round picks and we got ridiculed. But what Tim Connolly, our president, saw was that we needed an identity. And what better way to have an identity than with someone who's like a Ray Lewis, linebacker. In our case, that's Rudy Gobert, right? And, Tom says that he's not good offensively, but there's so many little things that he does offensively that don't show up on the, whether it's setting screens, whether it's offensive rebounding, whether it's being a decoy. I would say his misses are very loud and his incredible assets are very quiet.
Right, they're
but
hidden.
you have to have an expert eye to say, wow, that guy makes a difference. And by the way, any game that Rudy's on, or any team that he's on, automatically you're a top 5 defense in the game. Because if you see our numbers with Rudy versus without, that's where data really helps you kind of make material decisions.
So, for those of you who aren't aware, there's a new documentary, newish, I don't know, it was new to me 2 weeks ago, Alex vs. A-Rod. It is so well done, highly recommended, HBO Max. You'll laugh, if you're like me and you're a softie, you'll cry. But one of the bittersweet elements is you see a young Alex with a great relationship with his old man, loved baseball, watching baseball games together, and then time passed and his old man was no longer part of his life. I'm just curious, what is the importance of family in your life today? And can you tell us a little bit about that experience and how it's impacted the role you have now as a father?
Yeah, I mean, look, we're all here talking about, digital and what's going on and AI and kind of what's happening next. I mean, to me, there's nothing more important than my faith, my health, and my family. And far beyond business, because what's made Warren Buffett the greatest investor of all time, this country's been around 250 years, there's not been one person that's been a better investor than Warren Buffett. Part of it is he's made 99.5% of his net worth after he turned 50. You think about that for a minute.
That's
right.
Great.
That's incredible.
That's a great stat.
So the point is, compounding
There's
works.
hope for you and me.
No, please, for all of us, for all of us, great health. But the biggest part that people don't talk about is you got to be around for the compounding to work, because if you die before it, then the estate, everything starts getting divided. So if you can think about goal number one about being a great investor, be in great shape, take care of your health, go and get in those MRI machines and figure out what's going on. Right? I've had some people die in my life that they could have avoided if they just went and got X-rated or MRI'd or whatever. So that's important. And I teach the same thing to my daughter. I have 2 daughters. One's a junior at the University of Michigan doing musical theater, and my youngest is going to be a freshman at Chapel Hill next year in North Carolina. And
congratulations.
Thank you. Usually there's a picture up there, but yeah, my daughters are everything. They're my inspiration. Because my dad left at the age of 10, I remember, Tom, I was 12 years old and I got down on my knees and I said, my mom then had to take on 2 jobs, and she had to be a waitress at nighttime. She was a secretary in the morning. And we had to pay the rent every month. And it's why I got into the real estate business, because it's what I understood. We had to move every 18 months because the rents kept going up too high. And I remember praying, and I got down to my knees, and I said, dear Lord, please slow time down, because every 30 days, it feels like every 3 days, because I saw the pressure that she had to come up with the $800 to pay the rent for me and my 2 siblings. And I said, so slow time down, and if I ever get an opportunity to be a father, that's going to be the main responsibility in my life, to raise kids with high self-esteem and the attention that a dad should be giving their children. And if you just think about that, we think about all the problems that we have in the world, all the nonsense around politics and this or that, whatever side, doesn't really matter. 80% of our issues can be home if fathers are home with their kids, taking care of those little ones. And it starts at home.
as a father of daughters the same age. In fact, between the two of us, we have 3 daughters born in April 2008. Are you pretty strong on Taylor?
You have twins. He has twins.
Twins, and I have an older daughter.
How old is your oldest?
My oldest is a junior.
In high school or college?
College. And then I have 2 going to college next year. I love them all. They're wonderful. I love one of them the most, but mostly because she likes the Knicks. And the others don't care.
Okay.
I was kind of wondering while I was walking over here, if I'm honest, I was a little bit jealous because this is a guy that now I've had to idolize in baseball because he was 10 times better than me, and now business. He owns the friggin' Timberwolves. And he's handsome and the suit and the whole deal. And backstage he said for him, it was about mentors. Which in a moment, like when you said that, you caught me off guard. That's why I had to ask you, who did you say was a mentor? In the moment, I thought to myself, wow, it's been similar for me, but I don't give it enough acknowledgement. And then the next thing you said was even more powerful, which is, and you strive to mentor the next generation. I had this tinge of guilt, like I'm too worried in my own thing, wrapped up in my own thing. But who were your biggest mentors? And then how do you force yourself, or maybe it doesn't require forcing, maybe you're just that empathetic and giving, to make sure that you're giving back to the next generation?
Yeah, I'm really a product of my mentors. And I really believe, Tom, that we're an average of the 5 people you surround yourself with. Usually your salary is an average of the 5 people you spend the most time with. So I tell young people that I mentor today, really be very protective of who you bring into your inner circle, for energy, for habits. Successful people like you, Tom, you're a winner. You guys move differently, you talk differently, you dress differently, you father differently. And losers do things a certain way, which might be cutting corners, not being accountable, playing the victim, and you want to stay away from that. Because if you're not careful, it's a matter of who you're with. You're either going to move in the direction of this way or there. So be very selective on who you pick. So for me, just a few, I've had Warren Buffett, who's mentored me for the last 25 years. It's been the blessing of my life from the business perspective. Mary Doze, our mutual friend, who's CEO of wealth management at JP Morgan, who's tremendous, went to Georgetown, as Tom did. And then I would say Magic Johnson was really kind of the watershed moment for me, where 25 years ago, I asked him for a 30-minute coffee, and we had a 3.5-hour dinner. And it was in that dinner that he had to call Cookie and say, hey, I'm not coming home. I'm going to stay a couple of hours with Alex. And I was just a young buck, and that changed my life. And I knew then the power of mentorship. And the reason why is, with Tom, even though he has a great swing and he loves baseball, Tom is not very relatable to young Alex, because he's a good-looking white guy who's like very successful, who went to a great...
Hey everyone, welcome back to CoinDesk Live from Consensus Miami, presented by MoonPay. I'm Jen Stanasi, joined at the desk by Sam Ewan, Leah Callan-Butler, and Eleanor Terrett. Hello, hello, hello.
Hello.
Good afternoon. Hi. GM.
GM. It is the afternoon, I have to say, but I know in this industry we say GM at any time of day. Leah, what have you been up to today?
Well, I've had some really interesting interviews on the conference floor. So we've been kind of going around to some of the booths and meeting the people who are manning them, usually the CEO or founder. And the thing that has struck me is that enterprise blockchain has arrived.
Yes. Well, it never really went anywhere.
Well, yeah, but in 2018, I feel like it was really kind of eye roll. It was very theoretical. There was a lot of like press releases and partnerships that just never like actually went anywhere. But like there was 2 interviews that I've had that really struck me. I was like, wow, like people are actually using blockchain to solve real world problems. The first one was Realm Insurance. So they are basically insuring the uninsurable in blockchain. Their whole thing is like, why are we using backward-looking historical actuarial models to apply to an incredibly innovative industry? So they're building this new sector from the ground up. And the old saying is, if you can't insure it, you can't do it. So I think they're removing blockages to growth there. And the other one was Rise. They're a payroll company. And they have processed like over 1.5 billion in payroll through stablecoins to people in more than 100 countries. And they've got Web 2 companies doing this, like they're not even crypto companies. I was like, wow, blockchain solves problems. This is wild.
It really does. The real world use cases are here. Eleanor, you were on the desk with us this morning. I think you probably wanted to jump in. I saw your lips moving.
No, just saying that I feel like it really has sort of ramped up. I think maybe we can attribute some of that to the friendlier regulatory environment, that people who were building behind the scenes maybe felt like they had to stall in the last couple of years just due to some of those frictions. Now feel like they can start building again, and if they were building behind the scenes, they can start talking about building.
We can talk about it now.
Exactly. But yeah, that is really interesting, and so many companies are doing things that aren't necessarily being broadcast on the public stage, but there's, to your point, there's so much going on out there. It's great to be able to talk about it here at the live desk.
I think that's absolutely right. I know Sam and I have had so many conversations with TradFi firms and like huge corporations who said, you know what, like we've been thinking about this and we've been building since 2017, but the regulatory environment has made it so that we can accelerate this now. We can talk about it publicly. We can launch publicly. We're not just in a test net anymore. And so I think that you're absolutely right.
Yeah.
I earlier was at the desk and we had Tal Cohen from NASDAQ and we had Frank LaSalle from DTCC. And I think just to what both of you are saying, you look at DTCC, $115 trillion a year goes through their rails from a clearing and settlement perspective. Wow. And they are saying we need to be part of the future. Now they're saying it's super complex and current blockchains can't yet do it, but that's really why they're building. They're saying there is an opening here, and to do things at the speed and scale we need to put really the entire American economy on these rails would be possible as long as we develop forward. I don't think we would have had that conversation 2 years ago.
Yeah, well, we're going to continue having these conversations at the desk right after this.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server. Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter. I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today.
After years of crypto speculation, Eric Bassini of Hashgraph is making the case from the enterprise corner. The industry survives by proving real utility, not by chasing the next narrative. Eric Bassini joins us now. Hello again.
Hello.
Long time no see.
Hey, right? Yeah.
All right. The last time we saw you was at HederaCon, your event. Now we're seeing you at our event, Consensus. Yeah. You have a long history with Consensus. Talk to us about how you're experiencing the event this year.
It's a new phase for the industry, and you can tell, you feel it here. More institutions, more banks, more serious people, right, than the years before, and finally enterprise blockchain is coming, right? It's here. We've been working on it for a decade. I remember in 2016, I was with Deloitte, and I was one of the big sponsors of Consensus at that time. That was 10 years ago, and we were already talking about enterprise blockchain. So you have to be patient in this industry.
Eric, I'm going to be honest. Probably 3 years ago, no one wanted to talk about enterprise blockchain. When we would go out to people and say, what are the topics you're interested in? That turned. And here we are at Consensus, literally the segment right before this, Leah was saying, I had just had such great conversations on the floor about enterprise blockchain. Why do you think, is it about the regulatory framing? Is it about the fact that big finance recognizes the opportunity here? What do you think changed in the industry?
I think it's a mix of things. I think regulatory was a trigger, right? The trigger was now you have the right as a bank, as a financial institution, to finally engage with that technology. Before that, it was a risk that you were taking to engage. Now it's not. And that trigger was very, very important. And then now, because the right people are in the room, now you can talk about tokenization of securities and commodities and treasuries and collateral efficiency and settlement time, which is not new to us, the old crypto guys, but it's very, very relevant now because they have the right to do it and they have the right business cases.
We talk so much about what's going on here in the United States, especially off the back of the regulatory developments we've had over the past year and a half. But curious to hear from you on a geographical level, how enterprises are looking at blockchain, not only here in the US and in North America, but elsewhere.
Yeah, for sure. And the regulatory changes happened before, actually, in Europe, right, with MiCA, and in the Middle East with VARA and with MAS in Singapore. So that wave of changes from a regulatory point of view is happening all over the planet. And it's good because most of the financial institutions we talk to are global companies. So they need global certainty on a global scale, not just in the US. Obviously the US has so much influence on the rest of the world that this is very, very critical. But now we have clarity, pockets of clarity from a regulatory point of view everywhere on the planet. This is the time. This is the right time.
Eric, we spent a lot of time with your team on Monday, and there was some really vibrant conversation. The thing that stuck with me, and I've been telling people since then, was about Clipper.
Yeah.
And this idea that you can swap asset to asset without needing a bridge is something that really feels like the holy grail of crypto. And I talked about it with the Solana team, and we talked about the Hedera team, and everyone is just waiting for that moment, really because of all the exploits and the failures of current bridges. When we talked to Lehman, he was saying that they've been working on this since 2015 or something like that.
Yeah.
And so we're finally at a point where we're starting to see it come to a reality. Explain Clipper a little bit and just how big of a movement that is once it hits.
Yeah, we tend to think of Clipper as one of the biggest innovations in blockchain and crypto since the beginning of the industry, right? Of course, the Bitcoin white paper was one. We believe that Hashgraph was a big innovation, and it is. I think Clipper is the next evolution. And Clipper, very simply, Clipper is the ability for an asset to be accessible and visible from any other blockchain, right? So if you have assets on Solana, on Ethereum, on Polygon, and on Hedera, those assets now are visible in real time between the different chains. And Clipper, to us, is the realization of a dream that we had from the beginning of this industry. And Dr. Lehman Baird, worked on that in 2017. And it's not an easy feat to deliver. That's why it took us a decade to get there. But now we are finally here. And we see that not as much as a technology play, to meet a feature of blockchain that's going to enable an unlimited access to liquidity, unlimited access to real-world assets, unlimited access to any kind of asset we are going to tokenize on some blockchain. So it's a big change. I think we don't even realize how big of a change it is yet. I think we kind of know what it is, but I can't wait to see how we are going to bring that to market with others.
You were on stage before you joined us here at the desk, I believe, and your session was called Tokenized Treasuries and Commodities. For all of our audience that's watching at home that couldn't be here in person at Consensus, what's one takeaway you want them to know about tokenized treasuries and commodities?
Oh, one. Ooh, that's a tough question. No, I think it's the tokenization is going to unlock access to treasuries and commodities, not just for financial institutions, but pretty much to everybody. And the next level of products, we're going to see financial products for financial institutions, but also for individuals. And I think where it's going to be interesting, right? So you can buy $100 worth of gold on Monday, sell it on Tuesday, buy silver the next day, and then treasury bill on Thursday. That today you can't do that, right? With tokenization of treasuries and commodities, you will be able to do this. You will be able to hold on those tokens and collateralize those tokens to buy a home, right, or a car, and that really is going to change the way we operate with money as humans and as countries.
I mean, when you explain it like that, it makes a lot of sense. When you think about timeline, right, for people who are watching at home, how much time do you think it's going to take for that to be a reality for the everyday American?
I think, yeah. So I think in the US it's going to come in the next 2 to 3 years, right, at scale. I think it's already starting to happen outside of the US because the regulatory environment is a little bit more advanced. But yeah, at the consumer level, I would predict 2 to 3 years before we can engage with those tokens at scale.
Eric, we're going to have to leave it there. Thank you so much for joining us. It was wonderful seeing you again.
Thank you. Thank you for having me.
That was Eric Bassini, CEO of Hashgraph. We are going to take a quick break. When we come back, Raoul Paul and Blondie join the desk.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server. Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter. I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
It went through the boom, the crash, and the ridicule, but Raoul Pal and Blondie argue the culture survived, the collector base matured, and the next phase is about patronage, provenance, and actually living with the art. Joining us now are Raoul Pal of Real Vision and XPAM, and Blondie, founder of White Walls. Hello.
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 Okay, we're here at Consensus. Sam has been really flying the NFT flag for the full day and a half. I think he's going to continue doing it until the end of the conference. I want to start here with just a very direct question for both of you. Are NFTs back?
They never went away.
Okay.
So people look at things like prices are down 90%. You forget that you've got parts of the art market making all-time highs. Mm-hmm. It's the digital art market that's been the big thing here, not the kind of tale of all of the 1,000 of repeat projects we saw. Things like CryptoPunks have been incredible. Even though the price is down somewhat, the collector base is growing, the number of people actively involved, the number of museums involved. It's huge what's going on. So no, not gone away.
But
and they are back.
I think they're back. I don't think they ever went away, but I think a lot of it was about the culture, and we got to weed out a lot of the garbage of stuff that maybe we didn't need in this, what we would say, the downturn. But I agree. I would say that they're back. They weren't ever really gone. But yeah, if you look at price point, which is important for those of us that don't know how to sell anything anyway, I'm never looking at that anyway. I'm just saying I still have great, beautiful pictures in my wallet.
You know, I was on the main stage with Reid Hoffman before, and we talked about him buying his first CryptoPunk. And he said he really bought it because he wanted to understand the mechanism of what that meant, both from a community perspective and a technology perspective. I think a lot of us have been talking still about the technological infrastructure is still so interesting and innovative when you can wrap almost anything in one of these assets. Raoul, I'm interested, like I know Blondie's story, but I'm interested what sort of was your red pill moment getting interested in the digital art space?
Digital art space, obviously like everybody, I made some mistakes back in 2021. I have a wallet of shame.
We all do.
Including ticking Bored Apes.
Yeah.
I really, literally by the day, I think. But what really got me involved in thinking this through much further, that's much bigger, was Punk 6529. Those amazing threads back in 2020 and 2021 that made me understand that this technology was more societal level importance than just storing art. People forget that the most valuable piece of block space that exists on Earth is Beeple's Everyday that sold for $69 million. And what it's proving is that this technology can store value with provenance over extended periods of time. It's immutable, but it's also, everybody can see where that lies on the blockchain. That technology is the same technology that will work for derivative contracts, OTC derivative contracts, as it will for tickets, as it will for pretty much any contract. Individual unique contracts are all NFTs are. It so happens it's a perfect medium for a new art movement as well, because art loves technology, it loves trying new things, it loves provenance, it loves to be able to create new liquidity, and that's why it's kind of acquiesced around this.
And Blondie, years ago I met you, and I just saw how well you navigated the space, both at your conviction as a collector, but also how you were really trying to connect the dots for a lot of everyday people. What's the thing you tell them when they say, what do you mean you're buying, a Sam Spratt skull and that's going to be, part of your estate?
I think I try to find where they're at. So, for example, how I came in, we talk about this a lot. I came in as a collector of other things, art, handbags, sneakers, right?
A hoarder.
Hoarding, as he likes to say.
He's a professional hoarder.
I'm a professional hoarder. High-end hoarding for sure. So I try to meet them where they're at. So like right now, a great reference that's back in the news everywhere you're hearing about Pokemon cards. Everybody's seeing that. Well, how great is it to collect something that you can see where that Pokemon card has been and everywhere it's traded or where it came from. You can see authenticity. You can see, was it stolen? Was it all these different things? That's what we can do. We've had some projects recently that are really highlighting the technology of that. So I think I try to meet people where they're at. We see like I say, the collectors, the Pokemon cards, you can go there. Some people just like the enjoyment of the beautiful art. That's an easy sell for me. Look at this is beautiful. We see it with the Rafik piece at MoMA taking all that attention. That was an easy meet for people that were already into the art market. So I think you just try to figure out where those people are at and identify, because there's something for everybody.
Raul, it's easy to look at the Bored Ape yacht collection and look at the price decline and say, NFTs aren't going anywhere. But then on the other hand, you look at a brand like Pudgy Penguins that's really been able to leverage the IP in so many different ways that resonate with people who don't even know that they're interacting with a crypto project. I'm curious to hear about that future that you're thinking towards when you think about projects like that. How are NFTs going to build the future of IP?
So, yeah, I'm mainly focused on the art market, but the IP part is important. Decentralized IP will create networks around brands. And now whether it's Pudgy Penguins or whether it's any brand, and we've seen lots of people experimenting with this space. Some of it's really worked. It's not yet been fully persistent, but it will do over time. I actually think Bored Apes will build an IP brand that's persistent over time.
They're coming back a little bit, I think.
They've started to do that.
There's hope for me yet.
Well, I don't like to admit it because I love giving him so much garbage over it, but I think that there has been an uptick lately, for sure.
Yeah, because I think...
And they're focusing on community. Yeah, they really are. That's what I feel like, and they've done a really good job. They've switched around some leadership, and I think that's where they're making the moves. And we see that with Pudgy Penguins. Their leadership is phenomenal.
That's right. And NFT in that respect is like your identifier of you being part of a community. And it gives you certain rights. You're a super fan. Like that structure works throughout music, works throughout sports, works throughout everything, films, the whole lot. So it will work. I think part of it's the regulatory clarity to make larger companies be able to experiment in more interesting ways, and I think that's about to come.
And Raul, I want to start with you, and Blondie, I want you to answer the same question. I think any art movement, there's only a few people that actually get known, right? We know Picasso, maybe we know Brock, in the Cubist movement. There aren't that many others. There are some foundational digital artists that are going to come out of the NFT space and will be in museums all around the world. It's already starting, right? So I love that you guys also seem to focus much more on the digital art side. But I think what you said earlier, Raul, is so fascinating, which is, I think of someone like Beeple or Xcopy. These are people who are creating for those who grew up on the internet. right? Who want to transact at the speed of light. They want to move money and assets around the world. They value things, whether they're digital or physical. And some people look at people's stuff and say, that's not art, right? But you guys get to look and say, no, these are foundational people who are looking at a different paradigm. So, who are the people, the X-copies, the peoples that really inspire you?
So, for myself and my own collecting, I split the art market into two areas of interest for me. One is culture, and if you go back and look at all art in history, it's cultural art that actually is the most persistent. Some fine art movements do. The other side is art and technology, so that's the generative art side. So I really focus on the two extremes of those, and X-copy really, since 2017, has been commenting on internet culture and the culture that we live in, and created a digitally native imagery around that, and it's persistent. People talk about it, they understand it, they feel it, even though he's anonymous. Beeple every day shows up, does a piece of art, and at the end of the day, when I see Beeple's work, it's like he's tied a bow around the internet at the end of every day and say, here's the best of the internet. That's cataloging culture. So we see a lot of culture artists. Die with the Most Likes is incredible at cataloging the middle American culture, the decline of that, but also the fondness for it. Extraordinary stuff. Coldy is documenting this nexus of technology with culture and what's happening with the tech overlords and fiat currency. So there's a lot of culturally relevant artists that I think are very persistent and will continue to grow over time because they're telling the stories of our lifetime. Don't forget, this is the most extreme thing we've ever gone through in all of humanity. We go through COVID,
small statement.
Straight into,
what a thing to say.
Straight into AI,
He's full of these.
And straight into humans aren't apex intelligence. This has never happened in the history of humanity. We're going through it now. It gets catalogued in art. That becomes value. The other side is the other AI side is seeing incredible people like Kim Assendorf creating extraordinary things with technology. And so those are the kind of two areas that I'm really focused on that I think are going to be really important. Rafiq, as Blondie mentioned earlier, so important. It had the most attention of any single piece of art in the history of MoMA, and it's a piece of digital art.
And Blondie, I mean, I've seen your wallet, it's very colorful. There's some beautiful stuff in there. And again, as Raul was saying, yeah, there's this generative piece, and then, but I feel like you also dove deep into the PFP side for a while. So what is it that inspires you these days as you're thinking about who to collect?
Twofold. One, a lot of what he said definitely applies to me. The culture side of it, the highlighting, the marking of the time of when we collected this piece, or marking that day is very important to me. Also, we have one of the luxuries that we have in this space is being a part of a community, and also often being able to communicate with the artists themselves. And so that's exciting. And so I often, when I meet people and I understand what they're doing and how they're building and how they're creating, then I'm like, okay, now I really want a piece. Otherwise, and Kim Assendorf's a great example. If you look at his piece, you're like, oh, this is cool at base level. This is pretty. I like it. It's got great colors. But then when you listen to Kim's story and when he talks about what he's actually doing here and how all the pixels work separately, that's amazing. And so I think when I'm collecting now, Nice Day Jewels just dropped an amazing project with birds, and you can observe. So you can participate for free. You can participate as an owner of a sanctuary. You can watch all these different birds doing all these different things. Those are the things now that are really capturing my attention, as well as these amazing people, trying to support the amazing people that we have and get them to be able to stick around.
So much when we talk about crypto comes down to accessibility. I'm curious how both of you are thinking about how blockchain technology is making art more accessible, and how you think it's going to change an industry that really for a long time was just for the uber wealthy.
It's really important, firstly for artists themselves, to be able, I interviewed Coldy 2 days ago, it's not out yet, but he talked about, him selling his first pieces for $10. And he was like, wow, I can sell stuff. Because where else do you go? You have to find a local gallery in a local town and hope somebody buys it. How do you get into a big gallery? All of that, we're now got an equal playing field, right? It's the internet, you show your art, and if it appeals to people, you can create value in your art. I mean, that's incredibly egalitarian. For collectors, there's almost every price point. It's very simple to do. But if you are collecting seriously at the higher end of the market, you've got visibility. It's not, I wouldn't go into one of the big galleries in New York or London, and you feel awkward, Are they going to judge me? I don't know what I'm doing. How much is the real value of this thing? Well, the internet takes that all away. It's like you, the art, and the buy button or the sell button, and that's it. And so it's so much easier to get over the hump of collecting art without being told what you should be collecting. You can do whatever you want.
I think a lot of what he said, again, I agree with, but also the accessibility of just being able to move pieces, right? If you wanted to move the Mona Lisa somewhere, that would require, I don't know, a ridiculous amount of infrastructure of vaults and all these different things. Now museums are able to turn over an exhibition in seconds or in minutes, and just being able to switch something, and that's giving more people more attention, which is good for museums long term. More things, you can get more people in to see more variety of things. So I think that's the other part of it, is digital assets move quite easily.
Raul Blondy, thanks so much for joining us at the desk. It was a pleasure having you here.
Thank you so much.
All right, that was Real Vision CEO Raul Paul and White Walls founder Blondy.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now, if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter. I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
OpenC became synonymous with NFTs during the last cycle, but the company is now trying to redefine itself as a broader on-chain marketplace for tokens, collectibles, and digital ownership across chains. Joining us now is Adam Hollander, Chief Marketing Officer at OpenC. Hey, Adam.
Hey, how you doing?
We're doing fantastic. We have been speaking a lot this block about art, NFTs, maybe the resurgence of NFTs.
Heck yeah.
And for a long time, like I said in my introduction, OpenC was synonymous with NFTs. So just lay a foundation for us. Talk to us about where OpenC stands today.
Yeah, so look, when you talk to most people at the conference and you ask them who's OpenC, they're going to say world's largest NFT marketplace. And we are that. And that's great, but we've spent the last year really evolving. And you can now go to OpenC, you can trade major crypto, you can trade meme coins across 26 chains seamlessly. We're adding perps, we have our new mobile app coming out. And so what we really are positioning ourselves towards is being the single best place where if you are looking to discover, own, or trade anything on chain and you want to have non-custodial ownership over your own assets and your own tokens, then OpenC is the place to do that. And we also are very focused at the moment in removing a lot of the complexity and barriers and friction that are making it difficult for the next 100 million people to come into our space. And I think that people in the last few years have found the onboarding experience into crypto to be very challenging and very fragmented, and whether that's setting up a wallet or learning about security and seed phrases, bridging amongst different chains, learning about different asset types, and our new mobile app that we're building is really going to solve for all of that. It's going to put people in a position where they can install the app within seconds and get a provisioned wallet, double-click Apple Pay, they can buy any crypto they want, and they can have all of their assets, their major crypto, their meme coins, perps, and a number of other things we've built Rails for, all in one place in one portfolio.
Adam, as I was talking about NFTs in the old days, I really focused on talking to people about really what became tokenization, right? Sure. That you can have something that proves ownership, proves transferability, it proves provenance of who created it, and to me that can be a stablecoin, it can be a token, a financial token, or it can be a piece of art, or it can be a game piece, it doesn't really matter. And I think to some degree, OpenC got that earlier than a lot of people did. Like, you guys saw that was where the world was going. You had the unfortunate reality of, sure, the NFT market tanks a little bit. So it makes you probably think quick, hey, how do we widen out and think about the reimagination of what we are. But I wonder if that core ethos of just the ownership economy needs the right platforms has ever gone away.
No, it's definitely never gone away. And the creator economy, as I would call it, I think is really thriving. And with the advent of AI, I think is really on the precipice of becoming something very revolutionary. I think it's becoming easier and easier for anybody to be able to build amazing art experiences, video content, video games, digital worlds, and people are going to need the right marketplace and the right rails to be able to interact and engage with their customer base and take real ownership over their IP and their projects and their art. And so I think what we've recognized at OpenC is that there are dozens of different ways that people are going to interact on chain. I mean, even in the context of NFTs, you have people that care about NFTs for digital art, and you saw, as Raul was, just mentioning, what we saw at, Basel with, Beeple's robot dogs, and, millions of people starting to really pay attention to what's happening in the world of digital ownership and digital art. You have tokenized Pokemon cards, as Blondie was just talking about, and so, people are finding different ways to use the technology and the real value underneath the NFTs. And if you look back to 2021, 2022, the reality, if we're being honest with ourselves, is that the majority of people that were buying NFTs were not buying them because they actually wanted the thing. They were not buying the art because they wanted the art for the most part. They weren't buying the collectible because they wanted it. They weren't buying it for the utility or the community. A lot of people were buying it because they wanted to speculate and gamble. And there's plenty of reasons in the world to go out and speculate and gamble, and there's plenty of mechanisms for it. But just because people were using it that way didn't mean that that was the real value of it. Because having true, provable digital ownership on chain has profound impacts for digital assets across a variety of different markets and industries. And we've talked about art, and then you have collectibles, you have gaming, you have real estate, I could go on. And so I think that we will see a resurgence of people caring about digital ownership, digital assets, NFTs. I think it will look different from 2021 and 2022. I think that we'll see more people buying these things because they actually want them and because they really understand the digital value and the provenance of it. And that's something that we are really setting ourselves up for as OpenC, to be the marketplace of record for all of that happening on chain, regardless of whether it's major crypto, whether it's meme coins, whether it's NFTs, tokenized assets, perps prediction markets, or maybe the next dozen things that haven't been invented yet.
I think that's exactly right. I think digital ownership is still a really important narrative as we move into the future. And Sam, you brought this up earlier. If we just look at how young people are interacting today, how they're interacting in virtual worlds, in video games, digital ownership is obviously where that use case is going to play out. Now, Sam, you mentioned, unfortunately, the NFT market tanked a little bit after 2021. We talked about how OpenC was synonymous with NFTs at one point. From a marketing perspective, how do you think about retelling that story to be more of an umbrella story for tokenization, like you've been explaining to us?
Yeah, look, we're doing a lot of different things. And so, over the last year alone, we've conducted more than 100 interviews with artists and project founders and, token founders. And we use that to really support the community that sits underneath everything that we do. We go to events like this. I'm out evangelizing these concepts and talking about them. AI has become a really powerful tool for everyone at OpenC, but especially our marketing team. Might have seen, the 100+ digital videos that we've put out over the course of the last year that we're now able to create, very quickly, very easily. We're able to put IP from, the world's best digital artists and, IP from the communities that people care about into this content. I think the reality in terms of where we are going as a company is that we need to start marketing outside of our bubble. And so there's everybody that's here, and there's all the people that are used to the complexity and have been here for the last several years, and we want to build powerful tools for those people to be able to use and to be able to interact on chain in the way that they're used to and to be able to get what they want out of it. But the thing that I say we're most focused on is how do you bring the next 100 million people on chain? And the way that we believe to do that in a world where we also believe that people should care about having real non-custodial ownership over their assets, over their art, their collectibles, their crypto, their meme coins. If you want to do that, we need to remove a lot of the complexity and barriers that make it very challenging for the majority of people in the world to actually come on chain. You think about provisioning, a wallet and teaching them about security. As I talked about earlier, it's very hard in a lot of cases to even turn your fiat into your first crypto. Then you're taking that crypto, you're having to bridge it to dozens of different chains, and maybe you want to buy an NFT or a tokenized Pokemon card, but it's on the wrong chain. What do you do? And so what we're doing with OpenC Mobile is we're removing all of that. We're abstracting all the complexity away. And if you look at the hundreds of people that have provided feedback from our beta in OpenC Mobile, the general response is, this is what we have been waiting for years to have in our pocket. We've never had a place where we could take all of our wallets, all of our assets, all of our chains, and be able to have everything all in one consolidated portfolio. We've never been able to decide that we want to buy a token with any other token across any other chain and be able to do it seamlessly without worrying about all of this complexity that sits in the middle. And I think that we have finally gotten it right. And I think we're building products now that people are going to be surprised and delighted to use. And I think that's really the number one way we're going to change people's perception, is that they will start using OpenC Mobile. They'll start using OpenC for a lot of these things that we've talked about. And they're going to raise an eyebrow and say, wow, like, those guys have been cooking. Like, this is something that is really special. It's different from anything that I've experienced today. And it solves a lot of the problems that I think have been very difficult for other companies to solve in our space today.
All right, Adam, we're going to have to leave it there. Thanks so much for joining us at the desk.
Thanks for having me.
Thanks, Adam.
That was OpenC Chief Marketing Officer, Adam Hollander.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server. Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter. I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Welcome back to CoinDesk Live from Consensus Miami, brought to you by MoonPay. I'm Jen Sanasi here with Sam Ewan and Zach Seward. Our next guest built one of the greatest careers in baseball, but he started investing while he was still playing, first in real estate, then in startups. Now is co-chairman of Minnesota Timberwolves and Lynx. Joining us now is Alex Rodriguez, CEO of A-Rod Corp. Hello.
Hello, thank you for having me.
Thanks for being here. I did see you on the main stage earlier with Bullish CEO Tom Farley. If you're going to give us the one hot takeaway from your session up there, what was it?
Well, he was trying to make me blush that I was his favorite player and all of that. Then we share 5 girls. He has 3, I have 2. And he was really thoughtful. I mean, I thought we could have gone on for another hour. He was really interesting to talk to.
Alex, you were performing at the highest level of athletics. You've been investing, you're involved with the Timberwolves and try to bring them to where they can be. I'm interested in just how you manage failure. When you have a bad day, when you know, whether it's in the market or on the field, psychologically, what gets you to the next day?
Well, I think, Sam, this is where we have an incredible competitive advantage. Being a baseball player is like the perfect kind of undergrad degree that you need to be fierce in business, because if you think about baseball, if you fail 70% of the time, you go to the Hall of Fame, right? So as a young entrepreneur, you're going to be said no a lot, usually 9 out of 10 times. And what I tell young people is you just can't give up. You just got to stay cool and keep on going and never give up and keep trying and keep learning and keep reinventing.
I just want to follow up on Sam's question there. There are these events all over the world. They're called, excuse the language, fuck-up nights, where people get up on stage and they talk about their biggest failure, what they learned from that, and how they became successful in whatever their career is. When I say that, can you tell us about a time where you had something that you considered at the time a big failure, and what you learned from that, what kind of successes came out of that?
Well, they compare me to Michael Jackson. I have like the greatest hits of greatest failures. A lot of them very public. One of them was 2014. I served the longest suspension in Major League Baseball history for PED use. And that was both a watershed moment in my life where I was able to invest into deep therapy, and I spent over 12 years doing that. And while it cost me the Hall of Fame, I think it was able to help me rewire my brain, check out some of my blind spots. And as a result of that, it may have cost me the Hall of Fame, but I think I'm a better father today, a better business person, a better friend. So at a big cost, but anyways, here I am.
So growing up, you were famously obsessed by baseball. It was all baseball all the time. You play a game, you go watch 2 games, you'd be consuming it at all times. It arguably led to, again, one of the greatest baseball careers in the history of Major League Baseball. I'm curious if you share an obsession with business, and if there's anything specifically in the arena of the business world that you're obsessed with and drives you to achieve success in those terms as opposed to on the diamond.
Yeah, no, that's a great question. I think the obsession is the same, if not more. And the reason why I say it's probably more is because baseball, I started when I was like 2 years old, right? My dad played baseball, I played baseball. When I go against great people in the world of business, I'm the major underdog, right? People always ask me, why do athletes get in trouble in business? Is because you build a whole lifetime trying to get to the penthouse and essentially get your PhD in the world of baseball or sports. And when you retire, you think that it's your birthright to go to the other tower called Tower of Business, and you think you're gonna go in the penthouse, and you don't. You don't even go to the 20th floor, the 10th floor, or not even the lobby. You have to start in the basement. And when you start in the basement and you kind of have the humility and the self-awareness that you have to start at ground zero. So to answer your question, Zach, I'm very obsessed with process, people, and really like sports, not to implode, and to have the best practices and grow a business together.
Yeah, I mean, you mentioned on your session with Tom, which was really nicely done, by the way, you've had the benefit of some mentorship from Warren Buffett, from Magic Johnson, successful entrepreneurs in their own right. As you entered sort of the ground floor and worked your way up, what were some of the weaknesses that you immediately encountered in your own game, right? What's the curveball that you couldn't hit? What's the high heat that you couldn't hit, but in the context of running a successful business?
I think number one, it starts with pattern recognition and experience, right? I remember when I entered the big leagues, I was 18 years old. I couldn't shave. Well, I still barely don't shave now, but I would look at a curveball and I would think it was a strike, and it would end up in the ground and I would chase it. And then 3 years later, I'm like, oh, that's a sucker pitch. I'm not swinging at that. And I think the same goes in business. I've been in business now 25 years, and you're able to make decisions a lot quicker. I always say that a fast yes or a fast no is better than a slow maybe. So being able to say no and have the discipline to say no and feel okay about it, that's, I think, the biggest growth from as a younger entrepreneur.
Now, Alex, I'm from New York, so for us, you're up there with the Bitcoin of baseball. Maybe Derek Jeter has something to say about it. I'm not sure. But what I really love is, fans loved you. You were doing so much that was inspiring so many others. Now, co-chairman of the Timberwolves, again, another fandom opportunity. As an investor, as someone who looks at these businesses and also played the game, I'm really interested in the idea of being successful sometimes requires getting the crowds to sort of be on your side. What are the lessons of how you sort of live your life and run your businesses that don't sort of shy away from the fact that every man out in the audience can be a potential customer or a fan?
Sam, the thing about today is you can't fake the funk. I mean, if you're going to do it, you got to be ready. It's going to be published in the New York Times. And I think people can read through BS very quickly. I think you have to be your genuine self, something that I struggled early in pre-therapy in my early days, because I wanted to say what I thought people wanted to hear, and that doesn't work. If you're going to get banged over the head, at least get banged for exactly who you are, not for something you're not. So that was, I think, lesson number one. Number two is you have to be genuine, you have to be organic, and you have to be accountable. You can be a good person, you can be whatever. You're going to make mistakes. But I think when you make those mistakes, it's really important to get out in front of them, say this is my fault, and we're going to fix it. And actually go and fix it and do the work to fix it. So it's not a pretend, is you got to live and walk the walk every day.
The story of athletes leaving the sport they love and dedicated their lives to and getting into business or thinking about what comes next is one that has been explored very much so in media. Lots of stories have been told, and it has proven difficult for many. When you talk to young athletes, when you're giving advice, what do you tell them? And I think that can apply to lots of people who are trying to get into business investment.
Yeah, what I tell them is, first of all, don't think about the next 4 days or the next 4 months. Think about the next 40 years when you think about investing. Be patient, be thorough. This is not a race, right? And then I said, lean into your competitive advantages and understand what your competitive weaknesses are. The weaknesses are you don't have the data, you don't have the experience, you don't have the college experience to be playing at the big league level with, the who's who of the business community. But what you do have is an opportunity to get a call back from a John Gray or Barry Sternlitt or some of the best investors in the world, right? And the question is, if Barry Sternlitt's buying real estate, can you ask Barry, it says, you guys are making a big bet for $50 million. Can you take $500,000 from me or $50,000 from me? I just want a seat in the back of the bus. And while you're there, not only are you going to do usually pretty well, but you're also going to learn from a guy like Barry. So that's the path I would take versus trying to take it and say, my ego is my investment, is me. Just get a seat in the bus early on and ride it. Learn, and then you can do it on your own.
So Alex, you're at one of the world's biggest crypto conferences. We got to ask your thoughts on the crypto space. Curious what your experiences is with the world of blockchain, with the world of crypto assets, whether you see opportunity there, and what you're trying to learn as you enter this space.
I'm very, very new to the space. It's really, really exciting. I think it's going to change the world in ways that we can't even imagine. I've played along a little bit with maybe 1% or 0.5% of my portfolio in it, but it's something that I have a lot more learning to do. I've talked to a lot of smart people. I'm glad that I'm here. I'm meeting a lot of smart people here. But, think about, Zach, like sports, right? If you build an arena and you have the ability to say, all right, Jen and Sam and Zach, you guys are season ticket holders. If you guys, for $10,000, you can reserve this seat, your favorite seat, but in the new stadium, and you have 20,000 people do that, you can collect hundreds of millions of dollars and build your arena and partner with your community, if you want to do a private sector as an example. But I think technology like this is really exciting, where you can move money around the world in lightning speed time, and it can be very efficient. So I'm excited, but I haven't done too much in it.
Yeah, a lot of potential opportunities in loyalty. We've seen a lot of experiments around that. Digital ownership. I don't know, Sam, if you have thoughts on that, but certainly I think there are spaces in which sports can sort of move the needle in terms of meaningful usage.
I just think about the conversation we had with Kevin O'Leary on the stage, and he's wearing a $6 million Michael Jordan card around his neck because he's there to flex. And to me, these days, having Bitcoin in your portfolio is also the same, because it signals that you are interested in innovation in the future. So I just think, Alex, you're doing the right thing.
And what I like about it is my mom grew up, look, at the age of 12, when my dad left at 10, I saw my mom collect food stamps. But that doesn't mean that people from modest starts can't have access to great things. So I think of a world of, you can have one piece of a $100,000 piece of a beautiful Warhol, or you can have a $200 piece of a Babe Ruth game used jersey, or you can own part of the New York Yankees for a couple $100. And the fact that there's potential of this in the future is really exciting, because these assets should be for everybody, not just for the 1%.
Alex, we got to leave it there. Thanks so much for joining us at the desk.
Thanks, Alex.
That was Minnesota Timberwolves co-chairman and A-Rod Corp CEO Alex Rodriguez. We're going to take a quick break. We'll be right back.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server. Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now, if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter. I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Hey everyone, welcome back to CoinDesk Live at Consensus 2026. I'm Jen Senesi. Sam Ewan is here with me, and Charles Hoskinson joins us at the desk. Hello.
It's good to be here.
Well, it's great to have you back. The band is back together. feels like we've done this all over the world.
Yeah.
We were just talking, Sam and I were just talking, we said we didn't see you with the McDonald's outfit on stage, and you mentioned that you went back to cats. I know your cat shirt wardrobe, your cat shirts, you have they're plentiful.
Oh, very, very many. Yeah, I'm getting fat, and so this is the way you hide it, is you wear the cat shirt.
How's your consensus been going?
Oh, it's great. You know, Miami, we have a lot of treasured memories. We launched Ethereum here in January of 2014, and you know, for 12 years, I keep finding reasons to come back. Probably the best conference I put on years ago, we had Clearwater Creedence Revival and Steve Miller come and play.
So wow.
There's a lot of good memories here in Miami.
Charles, we started talking with you about privacy maybe 2 years ago. And now we're hearing about it at every corner of this conference. The institutions also are coming in a big way. They are all talking about privacy. As someone who was there in the early stages of Ethereum, you obviously understood and held Bitcoin as well. Was that a miss back in the day of not really understanding that transparency may only go so far?
Well, I mean, we had technology for it, but we didn't have very good technology for it. You know, we had ring signatures and mixed nets and these types of things, but the privacy that we get with zero-knowledge cryptography is unique to the cryptocurrency space. You know, the first papers on zero-knowledge came out in 1985. It was Silvio Macaulay, so shout out to the Algorand people. He was the pioneer who invented that. But those were interactive proofs back in the day and probabilistic in nature, and they weren't suited for the blockchain space. So it was only until around 2016, 2017 that we even saw various things come onto market that would be good for use, like Groth 16 was one. And it took a few years for those things to kind of work their way through. And then the problem was they were also horrifically slow, like 1,000 to 10,000 to 100,000 times slower than elliptic curve signature. So you can't really do it on the phone, and the proofs were too big. So we really had to wait for a series of optimizations to come and enhancements to come to make them programmable and useful. And only the last few years have we had the capability to do something interesting and unique beyond just making a transaction anonymous.
I want to layer on to that conversation. You know, one of the big themes, like Sam said, has been privacy here, and the other being agentic commerce. The last time you and I spoke was at the Midnight mainnet launch, where you took us through Midnight City that has AI agents embedded within. Talk to us about how you're thinking about the agentic finance future through a privacy lens.
Yeah, well, first, this is not just a cryptocurrency phenomena. Everything is becoming agentic. I mean, you see it everywhere. It's the new secret sauce. You know, there's a theme for every fundraiser. But the reality is that when you look at the internet of 2035, the vast majority of searches, transactions, e-commerce, finding information, it's going to be done by agents, not people. In fact, the vast majority of internet users are going to be agents. So the fundamental question you have to ask is, well, what does that mean for Google's business model and Amazon's business model and Meta's business model? Because agents don't click ads. And also, they're not really influenced by the same ways that we're influenced for shopping. They're much different. The news is consumed differently too. Normally you subscribe to things. Well, with this, it seems like microtransactions are going to be a big deal. So our industry has kind of like three converging trends. One is, how do you do payments with agents? Two, how do agents have their own wallets? And three, what does agentic privacy look like? So we have two standards already set. There's X402, what Coinbase did with Google, and they did a great job with it. And then you have OWS, the Open Wallet standard, and that's becoming kind of a good standard for how agents will have their own money. But the issue is you need the agents to know a lot about you to be effective, but if you share all that information, then somebody else gets it forever, and that's really problematic. So you need a privacy standard for agents. And so what we've been looking at is how do we roll all these things up together and then embed them into the Midnight protocol. And then once we have that, we can bring that to everybody in the cryptocurrency space through a program called Midnight Passport. And the idea is that you have one credential. It can run on a phone, or it can run on your computer, and your laptop, whatever, and then allows you to spend into and receive funds from any network like Bitcoin or Solana, and delegate authority to any smart contract or agent that has a passport. And so it's then very easy to hand off to an agent what you want, telling it what you want, and it goes and does it and comes back. Zero-knowledge proofs are super powerful too, because they can prove correctness. The problem with AI is it's non-deterministic, so it hallucinates and it says, oh yeah, of course I did that. Are you sure? No, okay, maybe I didn't. So it's nice for it to be able to speak to you in terms of proofs, because before it thinks it's done, it has to generate a proof of the event. And if the proof checks out, then it knows it actually did the thing that you asked it to do. So we think that there's a unique intersection in the zero knowledge world to the agentic world, and then taking these other standards, if you put them together, it's going to be something very special.
Charles, I think when we look at agentic privacy, as you're talking about, I can't help but think about April, which saw tons of hacks. We saw the Kelp DAO hack, all the DeFi issues, and I'm wondering if part of thinking about agentic privacy is also having to think about agentic security.
Right.
So like, how are you guys looking at that?
Yeah, that's the open claw problem. So everybody got so excited with that lobster, and they say, wow, that's the most amazing thing ever. Here's my email password, here's my entire private life, and then everybody's like, oh God, what have you done? So there's dimensions to it, but I view the agent as a positive factor, because the average user doesn't have a lot of sophistication. In fact, the statistic I saw the other day, which was unbelievable to me, is like 35% of MetaMask users don't back up their wallet, which is just unbelievable, right? And so your average cryptocurrency bearer, they're not really doing a phenomenal job of vetting things, understanding what they're getting involved in, the transitive connections of the different ecosystems. And so as a result, they stumble into something that seems like it works until it doesn't, and when it doesn't, contagion spreads and there's catastrophic failure. So when you look at an agent as a co-pilot, and you have it with you as you use cryptocurrency, and it's helping you with diligence and counterfeit detection, like, yes, that is the actual address, yes, that is the actual dApp, that's not a counterfeit dApp, that is the actual wallet, that's not an impersonation in Google Play trying to steal your keys, that enhances security. But you bring up a very valid question of, okay, where can it attack you, because it's a new dimension, and it has access to things that historically you haven't had before. So our view is you always have a trusted execution environment in the loop, you always have restricted access in the loop, and you always have some form of zero knowledge proof inside the loop. And if you add those control factors, then you have kind of safe environments, safe sandboxes that these things can run, and you are very careful to scope what they can and cannot do. But a lot of standards have to be written and are being written, and what's nice is they're being written for the software industry. Because when you're writing code, you have very rigid specifications. You say the code must do this, and the agent goes and writes it. Turns out you can reuse those same languages and those same formats to constrain behavior for an agent, and they have to follow that. So I think we're, within 3 to 5 years, going to be able to solve that problem.
You said 35% of MetaMask users don't back up their wallet, and you're right. I think that points to people operating within the crypto ecosystem, not fully understanding what they're getting into, and I can see that being replicated with AI. Right? What are some of the risks that you think we're going to run into, that you think we're going to see as people start to work more with AI and AI agents without fully understanding the technology that they're working with?
Well, there's an erosion of truth and trust. We live right now in a blacklist society, and we're moving to a whitelist society. So a blacklist society is you assume it's true, and then if it turns out it's false, you say, okay, that's unreliable information, so you mark it false. A whitelist society is assume everything's a lie, everything's AI generated, and then we'll verify that things are true as whitelist and give them an NFT or something like that. And by the way, that's real sad, because some of my friends, and myself included, have done some stupid shit in our teenage and 20s. Like, I had one friend who climbed up a tree and grabbed a mountain lion's tail, and they took a picture right before the lion mauled him. But now everybody's going to be, oh, that's an AI-generated picture. And it's like, oh, screw you, man. I got attacked by a mountain lion for that picture. So a whitelist culture is kind of difficult. And so when you look at that, this is where the cryptocurrency space is going to have the strongest impact, because we can be the arbiter of truth. We can timestamp things, we can establish provenance of things, NFTs can establish a human genuine user or human genuine content, and then once you have that as a trust and truth layer, then the next step is saying, okay, what do we do about that? Well, there's then a disclosure regime. Does everybody in the world get to see this, or only selected people, up to including maybe just yourself? Okay, so disclosure of one, that's a Zcash style scenario. So that's the second level, is how do you do selective disclosure inside that world once you've established a whitelist of truth? And then the third thing is, how do you get reliability in these things? So there's kind of two dimensions to that. One dimension is, can it fail in a way that it's just as useless but not harmful, or can it fail in a way where it's harmful? So the useless but harmless side is what we exploit first, so it doesn't do something, like it didn't write the email right or something like that. It's not a problem. failing with money is the highest bar. And so what you do is you then borrow ideas from high assurance domains, like self-driving cars or healthcare or other things where the failure of that autonomous system will result in the death of people. And so you take those ideas, you put them into AI as open source frameworks, and then what's cool about it is the AI actually can understand how to plug into that quite well, and then establishes some good guardrails. Lastly, you need an environment to build the trust with it. So assuming you have the entire stack, the next level up is somebody needs a sandbox. So Base created the Giza, and it's really cool. We have Midnight City at midnight. So there's a lot of these sandboxes where people can put a little bit of money in, and then the agent can go and trade for them and do some cool stuff. And then over time, people build trust and credibility. And then it grows and grows and grows until there's a disaster like Kelp DAO, and then it retracts a little bit. And then people say, oh, well, we need to go invent the safety belt to make the car safer.
It reminds me a lot of the early days of e-commerce, where most people wouldn't put their credit card into the internet, and now everyone does. I think about the idea, and I want to get your thoughts on this, Charles, of white hat AI, in the sense that like my father at 80 years old might be susceptible to an AI deepfake of me calling him and say, hey, I need you to send me some money. And AI might be the right tool for him to be able to sort of defend against that. So as we think about agents in the future, do we also need to think about the lens that says agents can actually be really helpful in these things that we are probably pretty bad at as humans?
Yeah, and it benefits every career. Like when you're a journalist and somebody makes an extraordinary claim, the AI can help you due diligence rapidly, especially if it's not your area of expertise, to vet that. Or if you're caring for a parent who's dying of a neurodegenerative disorder, and I had 3 grandparents die of that, they lose the ability to be self-competent. Their judgment is impaired. So somebody has to watch out for them and make sure they don't become the victim of scams. So agents are part of the solution. They're a tool that you can parameterize, and if you parameterize it just the right way, it can be helping you make those decisions or others make it, but it's the sharing problem. For an agent to be effective, it needs to know a lot. And the more you tell it, the more dangerous it can be to you. So if you pair agents with privacy, when you put those 2 components together, you get the upside without the downside. You know that other people can't weaponize and use that against you or steal from you as a result of it, but at the same time you get the semantical value of the agent. And that's really the space that we think Midnight is going to excel in, because we have such great and compelling technology for it.
Charles, I love hearing stories from you. So in our last minute, we know you do so much outside of crypto with the bioluminescent plants, with the dire wolves.
Well, we just got the
hospital.
Blue Buck now.
Pardon?
The blue buck now. Have you heard about that?
No, please tell us.
Oh yeah, that's the new animal. So Colossal just announced the other day, so it's no longer under embargo, that they're bringing back it's kind of like a gazelle or an antelope, I guess, from South Africa that went extinct a few hundred years ago. It's called the blue buck. And we should have it pretty soon, and it's just beautiful. It's got this beautiful iridescent blue coat and incredible horns and everything like that. So it's a real special creature.
I mean, that sounds absolutely incredible.
I'm just wondering, Charles, like, again, I remember you showing me about the bioluminescent plants, talking about the dire wolves. What's next? Like, what are the things that you're looking on the frontier and saying, I want to get in that?
Well, I love synthetic biology, and I think that's going to be one of the pillars of the 21st century, along with nanotechnology and quantum computing and things like that. And we're only just flirting with the surface of it. You're using biology to adapt things to environments that you want to be in. Like one thing that's always been on my unfinished business list, and at some point I'll probably do it, is in Chernobyl, the reactor actually has this mold that eats up the radiation. And I always wanted to take that and study it and see if we can get it into other plants, and then we could go to Fukushima or other disaster zones and use it to micro-restorate the landscape. Because it always bothered me having places that forever become no-go zones. Because of somebody's mistake at some point, thousands of years of humans have to live with the consequences of that. So I'd like to figure out ways to restore environmental biomes, and I think synthetic biology could do that very well.
We got to go, but I want to quickly ask you, you said you're focused on quantum. When do you think Q-Day is going to be?
Well, I think the best metric is DARPA's QBI, and there's probably a better than 50% chance that by 2033, there will be a working commercial quantum computer at scale. Because there's 11 companies going through that right now, including IBM and Quantinuum and Xanadu, and they've already passed gate A. So there's 2 more gates, and we'll know definitively next year, I'd say, if it's going to be a near horizon or later than near horizon threat. but there's no reason not to begin the process of migration because they do functionally the same thing. So we're working on lattices, other people are working on hashes, but the federal standards have already been applied, FIPS 203, 204, 205, and 206. So we know how to protect ourselves. It's just a question of when do we want to pay the price, because the signatures are much larger, they're much more inefficient, and we kind of have to rebuild the cryptographic stacks, which is a big pain in the butt.
All right, Charles, we got to leave it there. It was a pleasure speaking to you at the desk, and I'm sure we'll see you around the conference.
Thank you so much.
Thanks, Charles.
That was Input Output founder and CEO, Charles Hoskinson. All right, Sam, looks like NFTs are back. I'm willing to give
Is that what you took away from the conversation with Charles?
That's what I took away from all
Not that there's
of
new
that.
animals being created.
Charles is such a fascinating person. He really does think about so many things outside of this space. And it's just so interesting to hear his perspectives on where we are going as humankind. Yeah, I always find that very interesting.
I think we had a slew of great conversations, and the one coming up is going to be fantastic as well. Charles, I think I just always wonder how he retains so much. I don't have that kind of brain that can think about what's happening over here in DARPA, but also what's happening over here in the biome ecosystem. And I'd really just appreciate that he has such a wide purview in how he looks at the world, and it's always inspiring to me.
All right, we started the privacy conversation with Charles, and we're going to continue it with our next guest. Shall we get to it?
Let's do it.
Let's do it. All right, privacy is back at the center of crypto, but Josh Sweetheart argues the challenge is no longer just proving that cryptography works. It's making private money simple enough for mainstream users. Joining us now is Josh Sweetheart, founder and CEO of Zcash Open Development Lab. Hello.
Hello.
How are you doing?
I'm doing great. Thanks for having me.
Thanks for being here. Now, I just want to start here. For so long, we talked about privacy for humans who are interacting on the internet. Now we have this new layer to add on top. We have AI agents. So we need privacy for humans and AI agents who are interacting on the internet. Talk to us about how you're thinking about that.
Well, it's super important for everything. So if we're going to have commerce on the internet at all, whether it's agentic commerce or a person-to-person, it has to be private. It has to be private for personal security reasons. For anybody that's using it for business security reasons, you can't have competitors or anybody else knowing what the interactions are and who your customers are and who even these agents are that are working. And then ultimately, it's important for national security as well, right? So if we've got these businesses and these people that are using private money, it's necessary that foreign adversaries can't be able to kind of see what's going on.
Josh, we noted yesterday that we haven't been talking a lot about price at this conference. People are really talking about innovation. Mm-hmm. But it's hard for me to avoid what's happening in the Zcash ecosystem. And you guys are really building on top of that. And I'm just interested in what got you actually interested in Zcash as a place that you wanted to build in. And you've done a fantastic raise recently. I think you see that privacy moment is upon us. What was it specifically about Zcash that really answered the call for you?
Man, this is a really long story.
You have 2 minutes.
So I was actually on the other side way back when. So as a founder and technologist and had built software that was aggregating data. And aggregating data in order to be able to kind of manipulate outcomes through marketing. And so we were able to create these very rich profiles of people and kind of understand.
Were you doing sort of social arbitrage, just so I want to understand what that was?
Yeah, we were scraping data from a bunch of data sources because people post their vacation photos up online. And they post their vacation photos, it's geotagged, we know where the photo is taken. We can do edge detection, we can determine what's in the photo. We know who the family members are, what their connections are, do they have disposable income, where do they work, how good are they at their jobs, and how might we kind of service information in order to kind of get the outcomes that we want. So it was terrifying to me. And actually, we had shut that business down because there was a lot of government interest in actually profiling based on certain political biases. And so when we did that, fast forward some years later, when I kind of fell down the crypto rabbit hole, I discovered pretty quickly, like, none of it's private. Like, Bitcoin is not going to work as peer-to-peer payments if that information isn't private. So what is the solution to that? And then that's where I found this project that hadn't launched yet called Zcash. and I went knocking on the door and said, I need to be a part of this, and I'm gonna do this for the rest of my career.
Well, there are folks who've sat at this desk over the past day and a half that are working on Bitcoin payment solutions. What's your response to that? I mean, are you saying that Bitcoin payments won't work and we need to actually look at more private solutions?
They're not going to work. No, they're not going to work. So if everybody is able to see all that you do, and think about what's happening with AI right now as well, right? So back in the day, it was still very difficult for us to aggregate all these different data sources and query it to get information. But now with these LLMs, you layer that on top of a blockchain and somebody's address, and think about how terrifying that is for somebody to be able to say, okay, where are the top 10 Bitcoin holders in my geography based upon financial transactions? What's their home address? Who are their children? Where do they travel to? It's just not going to work as a payment system without privacy.
The way you're talking, other than scaring me, is really reminding me that we also live a little bit in a Palantir world. And now more than ever, I think we need those opportunities for us to be able to tick the lever on or off, where we can share information and not. And it feels like you used to be on one side and you really come to the other side. Zcash's challenge in the old days was really about usability. It was hard. And it sounds like what you're building is about making that usable, easy for retail, easy for an institution. So talk to us a little bit about the journey of saying, here's this thing that you are a diehard supporter of. How do I make that accessible for everyone in this room?
Yeah, for much of crypto, we've been building crypto tools for crypto. We have not been building crypto tools for normies, for normal people, right? And there's too much of a cognitive load. Like, what am I sharing? What's going on? Like, this kind of set of complicated things. It has to be super, super simple. It's got to be Venmo style simple without Venmo in the middle in order for this to work. And I think there's a really important thing as it relates to how we're conditioning people to behave based on these technologies. We see kind of these flock cameras going up everywhere. We know that we're being surveilled. People are saying, well, like, privacy doesn't exist anymore. But like, fundamentally, when you're being watched, it changes how you behave. Like, I've got this story about my daughter, and when she was growing up, we used to dance in the living room. And we would giggle and we'd twirl around, and the curtains were always closed so that the people that were walking their dogs outside couldn't peer in. We were free just to be goofy. We went to a wedding just this last year, and everybody's out on the dance floor, and I tried to get my daughter out on the dance floor to be goofy, and she wouldn't do it. And it was like, why won't you come dance with me? And she said, because everybody's watching. We change our behaviors based upon what we perceive to, what people may be perceiving based on what they see. And so more and more, we need that ability for protecting our human agency to be able to turn it off, to close the curtains, and to say this moment's private.
But that's our reality now, and like you said, it's been a conditioning. It almost feels impossible to uncondition people and reverse what's already been done. What's already been done? How are you thinking about that?
Yeah, we're going to completely flip it. That's what we're doing. That's why Zcash is growing. People want that privacy. They're recognizing that that I've lost too much. I want to reclaim that. I want to reclaim my agency. And so if they're able to download simple tools that they can use that feel like the same stuff that they have been using, and they can protect their privacy, and they can choose, okay, I'm going to protect my privacy, or I'm going to leave it open for everybody. They're going to choose privacy. We've already seen that with the crypto wars in the browser. We have an expectation when I go to Amazon.com, yes, Amazon can see that information, but people sniffing the internet can't see that information. They can't steal it from me. They can't figure out what I'm purchasing. I have a choice, and we're giving people that choice.
Josh, we got to leave it there. Thanks so much for joining us at the desk.
Thanks so much.
Pleasure.
That was Josh Suhart, CEO of Zcash Open Development Lab.
All right, we're back for another segment of overhyped versus underrated. The topic is crypto ETFs.
Yes, I believe they might be overhyped because I am into DeFi and decentralization, and I don't like the corporate takeover of crypto. So I happen to believe in alternative systems.
I think they're a little bit underrated. I think we still haven't seen the big inflows of institutional capital that we're going to see. And that's entirely dependent upon the passing of the Clarity Act and what ends up being in the Clarity Act, as well as the timeline that it gets passed in.
I think that's the future of crypto.
I believe with the Clarity Act coming into place, there will be a large influx in institutional money that's going to be into the ETFs.
I think they bring volume on chain, which is what we need when we're growing like this.
Jupiter started as Solana's dominant DEX aggregator, but it's now trying to become a full on-chain finance platform with a native stablecoin, institutional backing from Verify, and a thesis that AI agents will push DeFi beyond trading into autonomous financial management. Joining us now is Xiao Zhu, president of Jupiter. Hello.
Here. Glad to be here. Good to see you again.
Glad to have you here. Great to see you again. How has your consensus been going?
It's been amazing. Yeah, full of great meetings, great topics, and yeah, looking forward to the next chapter.
Well, everyone heard my introduction here. We're talking about an on-chain finance platform that has really been a theme. You know, a lot of companies broadening out, diversifying, really wanting to offer everything that I guess clients and customers demand in one place. Just talk to us a little bit about where Jupiter is in that journey.
Yeah, look, Jupiter is today the leading on-chain super app on Solana, right? We generated about $1.2 trillion of on-chain trading volume last year. It was vast majority of trading volume that happened on Solana, routed through Jupiter. But more importantly, we're now live across 18 different product lines, right? So it's not just spot trading, we're the number one spot trading venue, also perps, number one perps trading venue, the leading prediction markets venue, the number one TVL, lending, borrow, and looping DeFi protocol as well. We launched our own stablecoin as well to kind of like take back some of the stablecoin economics and give it back to our ecosystem. And then very excitingly, we're also expanding into everyday finance because we just launched Jupiter Global, which is our on-chain stablecoin payment stack, which will allow our users to use their on-chain assets to now also pay for their everyday bills. So I think these are some of the very exciting places how we not only want to continue to grow on that sort of on-chain DeFi space in Solana, but really connect that to the wider world and really like grow 100x from there.
Xiao, you know, I'm in a lot of group chats with a lot of folks in crypto, especially heavy traders, and I'm going to say probably 18 months ago, I couldn't stop hearing about Jupiter. That was what people were using. You just said 1.2 trillion went across in the last year alone. I'm just wondering what it's felt like to be on that rocket ship, really, you know, where you're building something and suddenly it really just catches on. And how do you think, you know, how do you motivate the team? How do you sort of frame it and where you want to go? Like, it must be quite like invigorating and also a little bit scary.
Yeah, look, to put it in perspective, I think what happened with the last 2 years is obviously it's a great proof of concept that on-chain finance finally arrived to a place where it's not only on par to centralized venues in terms of execution speed, slippage, you know, fees, etc., but now really is surpassing it. And I think that first phase of excitement when sort of meme coins launched, etc., was like the proof of concept that the infrastructure, the underlying Solana infrastructure, is robust enough to really onboard like millions of new users at the very short amount of time. And I think the job and the challenge was to really take that initial sort of excitement and take that into really building out a diversified on-chain super app business to really continue to add more utility and value to the users in their everyday lives. So you can do more of your financial tasks, not just with your bank account and your centralized exchange, but also really with a self-custodial, permissionless, decentralized super app like Jupiter. And that has been really our focus. And I think in that aspect, we're still extremely early, right? Because that first excitement was maybe in the group chat of the people that are pretty native in our crypto communities. But I think like if you compare it to like Robinhood with 30 million users or Binance with 300 million users, we really have a 10 to 100x, just from the market size alone to really grow after. We're just at the beginning. Blockchains, L1s like Solana being performant enough to support, for example, Jupiter had over 40 million unique active wallets last year. This only really happened, over the last 2 years. Before it was simply not possible. To be able to service, trillions of dollars of volume, you had to simply, before, go on a centralized exchange. But now it is possible, and so you now have a viable alternative, right? And we want to make it as easy as possible for new users to onboard onto on-chain and make it as hard as possible for them to leave it, right? Because you simply don't have the reasons to kind of like leave on-chain again. That is what we're building towards.
All right, Zhao Zhao, we have a game. Are you ready to play it?
Go for it.
Okay, there are paddles in your desk.
Okay.
You got to pull them out. One says underrated and one says overhyped, all right?
Okay.
Yellow is underrated,
So
black is... So you hold it up, right?
Okay.
We're going to just throw something at you, and then you got to hold it up.
Okay.
Ready? You ready?
Yeah.
Okay, digital asset treasuries. Why?
No, I think there's like definitely a good reason to exist for digital assets treasuries. But I think, underperformed probably the expectations that people had. I think as with every sort of new technology and new financial innovation, there will be like speculation at the beginning, and over time there's a period of consolidation. The most, value-adding companies will ultimately survive, and probably a majority of others will not. And I think that is a nuanced answer to the paddle.
All right, Sam.
Yeah.
All right, for me, I think I'm going to go with agentic trading.
Definitely underrated. Why? Because you can't really see the data today in the volumes, but the potential is, I think, vastly dwarfs probably anything that we can imagine today. Because once you remove the sort of technical blockers of how agents can really take more control and help people make financial decisions and execute those decisions as well, I think on-chain infrastructure where we have self-custodial wallets without human KYC and identity system required will really be the place where agents really just continuously do microtransactions at scale. And I think we, for example, are also building sort of agentic kits, right? So bots can directly plug in and read the APIs from the Jupyter trading infrastructure today. But building the building blocks for that also to happen, because today we serve already trillions of human transaction volumes, but in the future for sure, I believe a vast majority of transaction volumes that also will happen on chain will be between humans as well as agents. And so I think getting ready for that future is one of the greatest challenges of the next chapter.
Zhao Zhao, thank you so much for joining us. It was a pleasure having you at the desk.
Thank you very much.
Pleasure.
Pleasure.
That was Zhao Zhao Zhu, president of Jupyter.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server.
Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter. I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's public keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's public keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Welcome back to CoinDesk Live from Consensus Miami, brought to you by MoonPay. The regulatory crew is here with me, Eleanor Tarrant and Nick Day. The band is back together.
Yes, I was just saying, we did this in Hong Kong in February, and
we sure did.
Run it back.
Reef, that feels like a long time ago, doesn't it?
Yeah, I know.
It kind of was.
Yeah, February was a long time ago.
4 million and 4 months ago.
Yeah.
I know. We got our new consensus dates today. Miami again in 2027, and then to New York in 2028.
Back to New York, huh?
Back to New York.
Okay.
Where it started. Where it started.
Where it all started.
I never went to a New York one. My first consensus was 2022 in Austin.
I also never attended a New York one. So Nick, tell us about New York.
It was a different time. It was, back then, 3,000 people was a good event. That was the most crowded event we had for a while. I think we had 8,000 or something in 2018, but obviously not the scale we have now.
I'll say, what kind of crowd are you pulling these days?
Yeah, well, I don't know the numbers. I know we're
15,000.
Oh, okay.
15,000.
So just a bit more than
a bit more.
3 or 8,000. No, 2018 was like, it was the days where people were still doing kind of the crazy stunts. We had
Lambos
parked out front. We had the banker protest. We had
a protest. Oh boy.
Yeah, we had fake bankers protesting crypto outside the New York Hilton. We're in, I think, not the Hilton. We're in a bigger venue.
Center.
We're in the Javits Center.
Oh, that makes sense.
So slightly bigger.
Yeah.
It'll be, I think, different. We do not have the same institutions. We do not have, we have like JP Morgan, DTCC, Citi, all here. I don't think any of them were there in 2018.
It doesn't sound like it. That 2018 consensus has really gone down in the history books. Zach Seward was up here earlier saying, the Lambos were outside. I think Arthur Hayes had his Lambo parked outside the Hilton in New York City.
Well, he rented like 5 Lambos.
He rented 5 Lambos.
Wow.
It just sounds like a really different time. I guess the only similarity we can draw to this consensus is that Miami F1 happened recently, and so there have been some fancy cars driving around.
Yep.
But
I do associate Miami with Lambos and Ferraris. There have been a lot of Ferraris driving back and forth, but it is Miami, so you do expect that kind of behavior.
Exactly. Now, Nick, Eleanor were talking a little bit earlier about what she's been up to and the conversation she's been having on stage. This is your first time at the desk today. What's been going on?
A lot of meetings. Everyone's talking about, tokenization, agentic AI, payments. Really feels like that's kind of the next trend people are looking for. One of the questions I've been hearing a lot of people ask is, at what point are we going to see regulators want to get involved in agentic payments?
That's a great question.
What does that look like?
Yeah, is there going to be a bill?
Right. Please, no, not
yet.
yet.
That's going to take forever.
Yeah,
maybe after we get through clarity and the tax bill and whatever the next bill is, then we'll worry about this. But is it a banking regulation? Is it a payments bill? So I think that is a question that we're starting to see more of.
Yeah.
And then the other side, of course, is just clarity. Ellen, I'm sure you've been hearing things today. It sounds like things are moving. We'll see if they continue to an actual markup this month or not. But a lot of rumors about that happening soon.
Yeah. Senator Bernie Moreno, I think, said they're marking up next week, but haven't had a official mark or a notice yet. But we'll see if that comes in the next couple days.
On the topic of AI legislation, Senator Gillibrand was at the desk today. She said after clarity, the focus will be on AI and prediction markets. So we'll see what that looks like and how long that takes.
Yep. Lots to come.
Prediction markets is definitely the next fun thing.
Lots to come. All right. We're going to take a quick break. When we come back, our next guest joins us.
Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server. Build slowly, earn my operator's trust,
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter. I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Hey everyone, welcome back to CoinDesk Live at Consensus 2026. Our next guest joins us now, Catherine Kirkpatrick, Boss General Counsel at Starkware. Hello.
Hello, I'm so happy to be here.
We're so happy to have you here. Talk to us about your consensus so far. What's been going on?
It's incredible. Honestly, there's a buzz. It feels like a bull market, even though we're still in a bit of crypto winter. I think maybe there's cautious optimism around clarity all of a sudden. Mm-hmm. It's a little too hot for me. You know, I prefer the Chicago weather, but it's been fantastic. A lot of good energy, good vibes.
That's great. Yeah, so I know. I don't think I've ever heard, by the way, anyone say I prefer Chicago weather.
You know what?
That's gotta be a first.
We do exist. I get irritable in the humidity. That's all I can say.
The heat and humidity is how we keep people in the convention center.
Right. It's strategic.
I don't want to leave. It's very well air conditioned. Yeah.
I do want to start on something that Chair Seelig touched on yesterday when he was on stage here. He talked about rolling out guidance for crypto perpetual futures, and he actually put a timeline on it. He said within the next month or so. So I think a lot of folks here got pretty excited about that. It's something we've been talking about, hoping to see for a while. What will you be most closely watching from that guidance, and kind of like maybe just give a quick overview of like what the market should be expecting and how things are going to change? Because like you said, perps are allowed in swap form, but just not futures, right?
Thank you for reminding people of that, because I'm always explaining what perps are.
Yeah.
And it's really interesting. So I'm formerly chief legal officer of Cboe Digital, and Cboe rolled out a continuous digital future, which is one of, I think now, at least 5 products that are perp-like futures. But there's no true perp. And perpetual future is a truly continuous perp, which means there's no expiry, no expiration date. That is legal as a swap, not as a future. Nobody wants it as a swap because nobody wants to become a swap execution facility. They want perps traded on designated contract markets, derivatives exchanges. I think the real question is whether we're going to see an unlock of that true perp squarely in the futures category versus a swap. Mm-hmm. And the CFTC's conundrum is way back in the Binance case. They moved against Binance on the basis of the fact that they said, hey, these are swaps, they're not futures. So they need to roll that back. But obviously I've been a huge proponent of seeing a regulated true perps on DCMs in the futures market, because I think it's important for the commission to have that kind of oversight and jurisdiction of this very important, massive global derivatives product. So fingers crossed, I'm cautiously optimistic that this commission, very innovation friendly, is going to make a way, find a way to make that happen pursuant to the CEA, the Commodities Exchange Act.
And until now, it has largely been an offshore market because there has been no regulation. There's been no real interest in regulating something like that here in states.
Absolutely. And the problem is you have major U.S. market participants that have had to move that activity offshore. And obviously there's a multitude of reasons, both regulatory oversight, but also just the flows. We need to create an environment in the United States where it's conducive to our major market participants, our responsible regulated market participants can have access to these products.
Right. Yeah.
Yep.
I know you're going to be on stage tomorrow, I believe it is, right? And your session's called Are Prediction Markets Gambling or Not? And what a great question. I mean, where do you stand on that? Give us a little preview into what you're planning to talk about.
Yes, so I'm a bit of a commodities nerd, which is why I'm always talking about this stuff. And the prediction markets trade on DCMs, designated contract markets in the United States. And I'm always joking, I'm like, DCMs are so hot right now because everyone is applying for a DCM. Yeah. There aren't that many active DCMs.
Or acquiring them.
Yes,
in the
or
case
buying
of,
them. Absolutely.
Kraken.
Absolutely. And look, I think the real question is, does the CFTC have jurisdiction over something that might look like gaming or gambling? Because it's clear that they have jurisdiction over a lot of the contracts traded on prediction markets. that are more macro. I mean, there's litigation tied to the election contracts, but the real debate surrounds what some might look at and consider sports betting. Others might take a different position. One of the big reasons why I think the CFTC is absolutely right in fighting for this jurisdiction is people forget that DCMs operate as mini self-regulatory organizations. So they have a rule book, they have a legal obligation to self-police. There's a lot more oversight of these contracts than by the state gaming association. So there's kind of macro reasons why they should be federally regulated. And of course, separate and apart from the sports betting, a lot of these contracts, even the sports betting as well, because you know where the Super Bowl is going to occur or who's going to win, they have trickle-down economic effects. But a lot of people are using these contracts for very real hedging, and all of the data supports that they are the best mechanism for things like price discovery or data discovery. They're better than your average poll. There's been a long history of kind of this type of activity being appropriately and federally regulated. So I'm on the CFTC side for this.
So just to play devil's advocate and maybe preview what we're hearing tomorrow, there was a report out today that a lot of the volume on Call Street, for example, comes from parlays. And so basically, you know, what's the economic value of parlays? And then in turn, does this then mean that it really depends on how these things are structured? And so are there certain types of contracts that maybe prediction markets should leave alone?
That's the biggest question, Nick. And to preview this, I think this is ultimately going to be decided by the Supreme Court in 2027, 2028. This is actually a perfect matter to be decided by SCOTUS because we're seeing real time a circuit split emerge. You know, courts are making different determinations, which creates a lot of confusion for market participants. There's a true all-out litigation war happening. So the highest court of the land is the right arbiter of this important question. I will remind people, though, it's really interesting. People betting on sports and people betting on elections, the United States has had hundreds of years of people betting on these things. And a lot of the law has changed or the response or the precedent has changed in response to changing and evolving morals and values. You know, is gambling a good thing? Is it a bad thing? So there's a lot of very weighty both economic impact and history determining who should have the right to regulate this. Also, there's always the question of, is this overly paternalistic? Like, Americans should be allowed to lose their money as long as they have awareness that that is a risk going in.
All right, Catherine, we got to leave it there. Thanks so much for joining us at the desk. It was a pleasure having you here.
Thanks so much for having me. Always fun with this crew. And with you. Thank you.
All right, that was Catherine Kirkpatrick, Boss, General Counsel at Starkware.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server.
Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Crypto market structure legislation may be moving again in Washington, just as prediction markets are becoming a major legal battleground between federal regulators and state gambling authorities. Coinbase's Chief Legal Officer, Paul Graywall, joins us now to discuss the Clarity Act, the fight over stablecoin rewards, and the CFTC's lawsuit against Wisconsin over prediction markets. Hello, Paul.
Hello.
How are you doing?
I'm well. Thanks for having me.
Well, Catherine said that we are the fun bunch, so I think you got a good panel here.
I know I have a good panel. Let's have some fun.
All right. Before we get into it, how's your consensus been going? What have you been up to?
Consensus has been fantastic. I've been up to meeting with lots of partners, a number of elected officials and other policymakers, and of course you guys. So it's been a good couple of days.
Are you able to give us any insight into the types of conversations you've been having?
Yeah, lots of discussion about clarity and where things stand. That is certainly the topic of the day.
One thing in particular, maybe.
Yeah, I think that's probably on everyone's mind. But also lots of conversation about what this means when it passes. not if, but when it passes, for the industry and for new products and services for the market. So that's the part of the conversation that I wasn't necessarily predicting and expecting, but I've been enjoying as much as anything.
We had a brief conversation backstage, Paul, and I want you to use the word that we kind of discussed when it comes to how you feel about the stablecoin yield compromise. There was a word, and it starts with a D, and I'll let you expand upon what it was.
Decent.
There you go.
I guessed right.
Yes.
I feel decent about the language that was released, and more than decent that with this language we're going to be able to get to a markup and to a floor vote in short order.
So yes, right, we saw potentially, well, we heard Bernie Moreno yesterday say potentially a markup next week in the Senate Banking Committee. How are you feeling about the bill's chances now? And could we see a partisan markup, a bipartisan markup? What's your feeling going into next week?
Well, Ellie, I think if I'm feeling decent, it's fair to say not everyone is feeling decent about this language. Some of our friends in the banking trades in particular still seem a bit miffed that they were unsuccessful in killing rewards and yield entirely.
Yep.
I think it's important that the trades understand the clear and unambiguous message that the Senate is sending us, in particular Senator Tillis, Senator Alsobrooks. They want to see this move forward, and good enough should be good enough for us all. I would encourage my friends in the trades not to snatch defeat from the jaws of victory, to take yes for an answer, and to join us in supporting advancement of this language.
So I want to talk logistics real quick because we are coming up. It's already May. The Senate has, I think, about 8 or 10 weeks left before everyone breaks and goes for re-election campaigns. Is there enough time to get this through markup, have the Senate Banking and Agriculture Committee versions merge, get it to the House, get it through the House, and then get it to the President's desk before the clock runs out?
You didn't even mention reconciliation there, Nick. Look, I think your question rightly raises the great challenge that we all face in getting this done as quickly as possible, and in any event, no later than before the summer recess. I think it can be done, and I think it can be done for a couple of reasons. One, the heavy lifting has already been done. If you take a step back and look at how far we have come in just the last several months from where we were, we are very, very close. And so while I do think a markup will happen, and I acknowledge that markup will undoubtedly confront difficult issues in the process, that's just the nature of a markup, I think there's no question that this bill will go to the Senate floor for a vote. And once that happens, once the process of reconciliation within the Senate, over to the House, reconciliation again, and signature by the President finally kicks into high gear, I think a certain momentum will take hold. And at that point, every single senator, like every single representative who supported this legislation, will have a strong incentive to see that vote mean something. And I can't underscore enough how much that human need for doing things that matters and will kick in. And so I think that's what's going to happen here. I think we're going to see everybody lock arms and make this thing a reality.
Mm-hmm. Where do you hope we land on the ethics issue that's still outstanding?
Well, the Democrats and Republicans have been wrestling over the ethics issue, as it were, for some time. Our position is that in many ways crypto has enough to worry about, and so whatever reconciliation or decision or compromise is reached in order to advance the bill forward, we can support, we can live with. I think it's important, though, that everyone take that issue seriously as it has been raised, and continue to work hard to make sure that a compromise is achieved. Because I can't think of a bigger tragedy than if this bill were to falter or stumble or eventually fail simply because Democrats and Republicans couldn't agree on basic language in an ethics provision.
Yeah, I mean, fundamentally, do you think this is something that should include ethics language? I mean, it's a crypto bill. I also kind of think back to last week when we saw the Senate roll out a resolution to ban prediction markets trading. It was like a unanimous bipartisan vote. So I mean, if they can do that for prediction markets, why should crypto sort of not be any different? You know what's very interesting, Ellie, about ethics provisions in legislation? There's a complete checkerboard of approaches if you look historically at how the House and the Senate have handled this issue. The reality is that the committee jurisdiction over ethics questions is messier than any of us would like. And on any given day, for any given bill, one party or the other can make the argument that
provisions dealing with ethics ought to be included or ought to be excluded and treated separately under the supervision of a different committee. So I leave that to the experts in the Senate and the House to work this out. I just encourage them to pay attention to what the voters are encouraging us all to keep in mind, which is they want to see this bill passed. They do not want to see the ethics issue or any other issue hold up progress that we've all worked so hard to achieve.
Speaking of outstanding issues, another issue I've been hearing more and more concern about is the developer protections, the Blockchain Regulatory Certainty Act. Can you speak to any knowledge of what the status of that is? Is that on the chopping block? Where are we on that?
Well, developer protections matter. And I don't think it's unreasonable for the developer community to want to have more than just assurances that some of the excesses of the past won't be repeated in the future. And the BRCA is aimed at assuring that. I do know that the parties are close on exact language that will give enough assurance to the developer community that they can stand behind this bill and lend their full support to it. I think that's going to happen. I think we've seen good faith on the part of the Senate, and in particular, good faith to try to provide particular language that will address some of the specific concerns that have been raised. So count me an optimist that we're going to get to the right answer there as well.
All right, Paul, we got to leave it there. It was such a pleasure having you.
The pleasure is mine. It's great to see you all.
Thanks, Awesome. Thanks
for having me.
That was Paul Graywell, Chief Legal Officer at Coinbase.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server.
Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Crypto policy in Washington has moved from the question of whether the industry should exist to how it should be regulated. Solana Policy Institute CEO Miller Whitehouse Levine joins us now to discuss market structure legislation, on-chain securities, developer protections, and why he argues public blockchain should be part of the future of U.S. capital markets. Hello.
Hello, thank you for having me.
Thanks for being here. How's your consensus going?
It's been amazing. It's good to be back in the U.S. and see everybody here. It's been a packed week, and I feel like the energy's back, which is always nice.
I love that. Now, I saw that you pulled the paddles out of the desk.
I did.
And the rule here is if you pull the paddles out, you got to play the game.
Okay, I'm
But
ready.
I'll make it easy for you.
Okay.
All right. So our audience knows the paddles say overhyped and underrated. I don't remember which is which. Do you know?
I do know.
Okay, you know. Okay, good. So let's start here. Developer protections.
Underrated, for sure.
Okay, tell me why.
We need developer protections in crypto market structure legislation because developers are the source of every innovation in this industry. There is no such thing as crypto, Bitcoin, DeFi, any of it without developers. And they need the certainty that this legislation can provide them to do that in a way that doesn't risk them getting called by the cops in 5 years and potentially thrown in jail. I think without that fundamental clarity for developers, the legislation will have missed the mark because it's really the source of all innovation. If the developers aren't protected, then we've lost the plot.
Well, we started the developer protection conversation with our last guest, Paul Graywell, and I want to continue it for you. I mean, just lay a little bit of a foundation for our audience. Where do we stand when it comes to developer protections in what the Clarity Act looks like today and what still needs to be done?
Yeah, I think the language is very close. I think there's broad consensus that developer protections need to be in the legislation. It's a very important provision for not just developers, but also other constituents and stakeholders like law enforcement and prosecutors, because it is around a criminal provision that they're responsible for enforcing. So there's been recently a lot of discussion between those groups and the crypto industry on how to shape the language in a way that allows them to still go after bad actors who are affirmatively trying to launder money, help illicit actors. And of course, the industry doesn't want that either. And I think there's a compromise that's pretty close, if not there already, that everyone seems to be happy with. So I think that issue miraculously has been happily resolved, or will be in short order. So I'm looking forward to the new text coming out and hope to have those groups support as well.
Are you ready for the next one?
I'm ready.
Okay. Prediction markets.
Oh, that's a tough one. I'll go underrated.
Okay, why?
Why? Because I think their market innovations are interesting to me outside of just financial applications. I think prediction markets use market forces to try and reveal information that hasn't been really possible to be revealed in a systematic way prior to their development. So I think they're a fascinating new instrument for revealing information in a broad way and aggregating information from a collective group of people that would not otherwise have a mechanism to do so. I think the regulatory debate is quite active and interesting, and is above my pay grade. Leave that on the ball.
All right. I want to ask you about this debate between public and private blockchains. Sure. It's one that's come up a lot over the last day and a half here. I know that you've said the market's already answered the question of public versus private blockchains when it comes to a regulatory perspective. What did you mean by that?
Yeah, what I meant by that is I think the fundamental innovation of Bitcoin and blockchains are the fact that they're neutral infrastructure, they're public, anyone can be a validator or a miner, and anyone can access these networks. The fundamental innovation of them is that they are public infrastructure that anyone can use, similar to TCP/IP, the base of the internet. That creates a host of benefits, from certainty to innovation, and all of that is downstream of the fact that this is public infrastructure. Without a permissionless blockchain or a public blockchain, that all evaporates, and I think you end up with something that looks quite similar to traditional financial intermediaries. That's not, in my view, terribly innovative, and I think every couple of years, there's a private blockchain cycle, and we're in the latest.
Yeah, I want to ask you about education. I know the Solana Policy Institute is very focused on education. There was a lot of discussion around education ahead of the Genius Act passing, of course also around the Clarity Act. Where do you think the biggest piece is still needed when it comes to educating folks on the Hill about what's going on in this industry?
I think it's mainly the breadth of folks that are up to speed on these issues. There's a core group of policymakers in Congress, at the regulators, that are up to speed, far more sophisticated than I am in their understanding of the markets and the industry. But we always need more people. Like, Washington is a blob of tens of thousands of people involved in the policymaking process. And the more people are up to speed, the easier it is to have rational conversations and policy debates. So I think that has been a major challenge over our last 10 years of work on crypto advocacy in Washington. But I remember back in 2019, if any member of Congress said the word crypto in a hearing, we would all text each other with excitement. Now it's seemingly every day Congress is talking about crypto, for better and for worse. So there has been massive progress. Interest has been a big part of that. Legislating is a huge educational mechanism that I think the Genius Act pushed forward, this bill is pushing forward. So all of that has been very helpful. I think going forward, knock on wood, the legislation will pass, and then I think there'll be a bit of a shift from educating Washington to educating the industry and other folks that are looking to get into crypto for the first time about what the bill does, what it means for them, and how it's going to be implemented over the next decade.
Well, that's a whole other feat.
Oh, yeah.
Yeah. All right, well, we've got a long road ahead of us. I'm sure that you and I will be talking again about it, but thank you for joining me at the desk today. It was a pleasure having this conversation.
My pleasure. Thanks for having me.
That was Miller Whitehouse Levine, the CEO of the Solana Policy Institute.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server.
Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Celo is making major moves this week at Consensus. The network is announcing new infrastructure partnerships, a credit initiative for emerging markets, and its tokenomics overhaul is already showing real results on chain. Joining us now is Marek Olszewski, co-founder of Celo. Hello.
Hello. Thanks for having me.
Yeah, thanks for being here. Okay, tomorrow at 9 a.m. Eastern Time, Bridge is going to announce Celo support connecting stablecoin orchestration with Celo's native USDC. Tell me, just introduce us to the announcement.
Yes, so they actually announced it today already. Really excited. Having Bridge as a partner is obviously really important and exciting for us. Celo, as you know, is this kind of OG payments chain. We're seeing a lot of payment activity on Celo, $65 billion in stablecoin volume in the last year. And to be able to now bring bridges on and off ramps, they're bridging APIs for builders that want to move money between chains to Celo is just really, really amazing.
We're hearing a lot about payments infrastructure here at Consensus and payments-focused chains. Just talk to us and maybe tell our audience a little bit about what differentiates Celo from some of the other chains offering this same service.
Yeah, great question. So Celo, because we've been around for so long and we've been focused so much on payments, one, it has a lot of the integrations like Bridge, but two, we're really focused on ease of use. So one of Celo's core differentiation is the fact that you can pay for transaction fees in stablecoins. You can pay in USDC, in USDT, soon in USAT. We're going to be the first chain after Ethereum to receive USAT. That was announced a few weeks ago. And so that just makes it much, much easier to transact on-chain. You don't need account abstraction. You don't need any of that complicated stuff. It's supported natively in the chain today. It's just such a breeze to use. So that's, I think, first and foremost. The other thing that we do that I think is really interesting is we make it possible to send payments to phone numbers. So you don't have to use these kind of difficult public key-derived addresses that are really intimidating. So if you want to build a normie-focused wallet, a normie-focused application, then we're the chain that makes that possible.
How much integration or how much activity have you guys seen, come on chain since the Genius Act passed? I mean, that really was a catalyst for the stablecoin boom, as it were. I think we're still in the implementation phase of some of these rulemakings that we're seeing from the agencies, but that really was sort of the catalyst of being like, okay, payment stablecoins are here to stay and they're legitimized now. For someone who focuses on payments and payment infrastructure like you guys, how big of a boom was that for you?
It's absolutely huge. I mean, I mentioned USAT. I think this is the best example of this. I think they're one of the first Genius Act compliant stablecoins. They launched again on Ethereum not too long ago, and they're coming to Celo in the coming weeks. Mm-hmm. That is just really, really exciting for us. I think there's a lot of interest in Tether globally, but within the US, I think people are looking for something that's more US compliant, and I think USAT really is an interesting offering on that front. So we're seeing a lot on that front. MiniPay, which is one of the biggest wallets on Celo by Opera, in the last year has seen a lot of growth. Whether it's Genius Act related or not, I guess it's hard to say. They're operating primarily in emerging markets, and so you could argue that maybe it's not related. They now have 15 million users, which for a crypto product is really quite amazing. Mm-hmm. And they're just seeing tremendous growth. in the number of people that are transacting, the number of people that are holding stablecoins in their wallet, and now increasingly the amount of people who are receiving payment for their work overseas using the wallet. There's just been this tremendous, I would say, driver of growth in the Celo ecosystem, and we're just very excited about them.
How much of your user base is in the US versus abroad?
I would say primarily overseas.
Yeah.
So I think Opera has a really big presence in the global south. They, I would say that MiniPay launched in the African continent, but in the last few months they've been expanding outside of the African continent. So now 25% of their new users are from LATAM or Southeast Asia. That number is only going to grow with time. But if you think about it, if you think about where do we need something like global Venmo, right? Celo was built from the ground up to enable global Venmo. We don't really need it in the US right now because we have Venmo.
Mm-hmm.
But overseas, where people don't have access to the same financial rails, the same conveniences that we have today here, that's where the utility is. Now, that doesn't mean that the US won't follow suit, but I think just like with WhatsApp grew outside of the US and eventually network effects brought people in, even if they were in the US. I think the same thing is going to happen with mobile payments globally. It's going to start outside the US and then eventually pull everyone in the US in as well.
Mm-hmm. Mm-hmm.
As you look at kind of the different jurisdictions that you work in, are you finding that they're all kind of also evolving their regulatory approach to stablecoins? Are they competing in a certain area or just making it easier for you to do, the kind of work you're doing?
It's a great question. So we're the platform, so it's primarily the on and off ramps like Bridge that are working with the regulators in those countries. The other big news today, actually, which we probably should also cover, is Tala just announced today. Tala is a traditional fintech from the Web 2 world, focused on micro lending. They partnered with a private credit protocol on Celo called Textile, and they just launched a private credit pool on Celo today. So folks like Tala certainly have licenses in a lot of these markets, and I'm sure that the Genius Act and the fact that many other countries follow the US's leadership is certainly helping them with those types of licenses.
Mm-hmm. All right, before we wrap up, I know that the stage session you participated in is called Cash is Dead, What Comes Next? I think for some people watching might think about emerging markets and think, actually, I thought that cash is very much alive in those markets. Maybe talk to us a little bit about how cash is seen in emerging markets and why solutions like the ones that are being built on Celo are so successful.
Certainly. So I think, yes, cash is a big driver of many emerging markets. I think many developed markets have much better electronic banking infrastructure. And that's obviously the reason why they're so excited about crypto is because they don't have that infrastructure and they're interested in leapfrogging and moving to the next big thing. And I think if you think about it today, I think it's clearer now than ever that the future of electronic banking will be one where you just have stablecoins in your bank account. And if you're transacting, you're either sending stablecoins between bank accounts, or if you're holding them in your own self-custodial wallet, you're sending them to other institutions or other people that are in your contact list. And so MiniPay is enabling this future on the consumer front. I have a lot of conviction that they will become global Venmo. I think global Venmo will happen probably in the next 5 to 10 years, and it's going to happen on Celo, and it's likely going to be MiniPay by Opera that's going to pull it off.
Marek, thanks so much for joining the desk. It was a pleasure having you here.
Thank you. It's been amazing.
All right, that was Marek Olszewski, the co-founder of Celo.
What's up, everyone? Jay and Silva here at Consensus. We are on the lookout for the most fashionable people at the show. Let's go.
Well, I'm happy to be back at Consensus. I spoke last year speaking this time around, and I really wanted to be bold, kind of change it up a little bit. And then obviously I had to do a little orange to represent Bitcoin. So yeah, I'm excited. It's pretty cool.
It's nothing too crazy today. I mean, we're in Miami. I just came from Canada, so better weather. Have to pull out the pastels. All of this stuff is just like thrifted or just cool things that I found that had included, except for the shoes, the Clock the shoes. These are the artifact economies that I paid way too much for, and now I don't know if are worth anything because the company doesn't exist anymore. So here we are.
Oh, baby. Fashion is an expression of who you are. It's an art form. I think that we're the light of the world, and so we're supposed to shine. We were created to shine, and I love to sparkle. That's my favorite color. And my Bored Ape has the captain hat, so I go back and forth with the white and the black captain hat. And then the sparkly shoes, you got to match with the jacket. And actually, we're just a bunch of loudmouths.
I really just love color, so you'll always see me in something that's colorful. It's Miami, it's bright outside, so why not match that vibe? I'm also from the British Virgin Islands, so I have to match the vibe of the BVI. Most gorgeous place in the world. Sorry, Miami.
PayPal brought crypto to one of the world's largest consumer payments platforms, and now PYUSD is expanding globally as stablecoins move from trading rails to everyday payments infrastructure. Joining us now is Larry Wade, Global Head of Crypto Compliance and Regulatory Relations at PayPal. Larry, welcome to the desk.
Thank you. Excited to be back.
Lovely to see you here. I've been asking everyone this, but how's your consensus going?
Honestly, it is just extremely exciting to see where we are, the conversations, where we are evolving as an industry. I'm really charged up. It's been really good.
What's been different about this year as opposed to other years, and beyond the regulation, beyond sort of the the opening up of the regulatory friendly area, I guess you could call it, right? And the ability to grow. Kind of, you guys have been in this space for a while. So beyond vibes and sort of that regulatory side, what else has changed, and how do you feel is why it's different?
It's very clear that the technology now is here.
Yeah.
I think Genius passing really solidified that. So what's changed is the conversations.
Yep.
So on the merchant side, on the TradFi side, the partnership side, really institutions that are doing everyday activities, they're now leaning in saying, okay, this technology is important. Our boards and committees are saying, what are we doing? What do we need to do? And as PayPal, it's really cool because we have this kind of trusted brand, and to your point, we've been in it for a while. They're coming to us, and they're saying, what can we do to partner? How can we use PYUSD? How do we really start to bring this utility to the real world? Those conversations are materially different than even last year.
Okay.
But from years before, I mean, it's night and day.
Yeah.
Just sticking to the regulatory policy world for a second, are you paying attention to the Clarity Act? Is that going to affect how you're doing your work at all?
Well, as the head of reg and compliance, I am paying attention. Obviously, to Paul's earlier point when he was on here, optimistic. Would be great for the industry, but from our purposes, we're continuing to build, we're continuing to adhere what is in place. So I would say, on the reward side, would love for for that to kind of come through in a positive way, but we're just being good participants, waiting to see how this plays out, and obviously being positive and optimistic.
We talk a lot about regulation in the United States. PayPal is a global company.
Yes.
You heard me say in my introduction, PYUSD now available in, I think, over 70 markets.
Yes.
Just talk to us a little bit about navigating stablecoin regulation in so many different markets. It's not just the Genius Act that you got to be paying attention to. It's piecing together this framework really for a global network, not one that's living between nation lines.
Extremely challenging, extremely rewarding. It's interesting. I say this a lot. I probably sound like a broken record today, but the product innovation, the engineering, these teams they're nailing it. They're continuing to harden. They're continuing to innovate. The real challenge right now is the fact that this technology is starting to interact with the real world more than ever. So that's reg, that's risk, that's compliance. That's how do you bring a product where you can't reconstruct it from the beginning each time to a market where that government or regulatory regime has specific requirements or just a specific mandate. So with the 70-country launch, I mean, we've been working on this for about 2 years, but we have to not only think about what can we bring from an overall product perspective that we've built, but then also how do we make sure that in that market we're being respectful, we're able to maneuver if that regime changes, et cetera. It's very dynamic, it's very challenging, and honestly, I think that that's kind of a moat that companies can create is if you can start to navigate this, because it's very, very complex. You're dealing with human beings, you're dealing with governments, you're dealing with regulators.
In terms of these different markets, are you seeing kind of the same demand for the same types of services in each of the different markets, or does each region have its own unique thing?
That's a great question. It's actually quite bespoke. So overall, it's, hey, this technology can do some things. You might be in one part of the world and the government is really leaning in saying, we see this in the business side, this is great for settlement, et cetera. Others, they say, hey, we see the technology, but from a stablecoin versus digital asset perspective, we like stablecoins, but we don't like digital assets. So it's very, very interesting to kind of see which governments are kind of, how they lean in. And again, a lot of that is conversations, it's kind of reading the tea leaves, it's bringing best practices, it's educating, but it is very unique on how one regime sees consumer protections versus another, or one sees Bitcoin versus PYUSD. It's been quite interesting.
You talk about the 70 jurisdictions, but you've also got 50 states to navigate as well. And you guys work with Paxos, they're your issuer.
Yeah.
But talk about how challenging that has been, and also you have not applied for a traditional OCC trust charter similar to some of your peers in the space. You've actually applied for a Utah chartered industrial loan company. Can you explain that, what that is exactly, and why it's different to what some of your other peers have done?
So remember, we're PayPal, so that's a PayPal non-crypto initiative. So that's not under my mandate.
Gotcha.
On our side, we have previously been approved by NYDFS for a limited purpose trust charter. So we do have that.
You do have
that. You've probably seen that, if you have a PayPal crypto account, you probably got that email saying we'll be cutting over, so that's coming soon there. So moving to that kind of trust from bit license regime, that's our next step. But obviously we're continuing to monitor. It really depends on, what type of permissions you're looking for, which regime you want. So it doesn't necessarily always warrant moving to a national trust. Maybe it does. Mm-hmm. How does clarity shake out? You need to kind of be very dynamic and flexible. But from our perspective, we went with New York first because it had the most robust regime. We're elevating in New York to the trust, and we're continuing to kind of keep our eyes open. But to answer your question, it is quite interesting navigating the states as well, because they too have different requirements, even down to how do you sheet crypto? And maybe they'll want crypto versus fiat, or maybe they want crypto, but they don't even have the wallet to support it. Mm-hmm. So it's a lot of education and things of that nature.
So at the risk of getting too deep into weeds on policymaking here, I'm sure you've seen and responded to the OCC and FDIC's proposed rulemaking around Genius Act regulations. Can you just give us a sense of, what are your thoughts on their proposals and how you're going to navigate that?
Yeah, we are a regulatory first company. That's in the DNA. We're working closely with our partners and our regulators, having those conversations, trying to make sure that, we contribute in a responsible way. But this is very dynamic. It's above my pay grade. And, we're just trying to, as an organization and myself, just trying to assist as needed.
All right, you're on stage tomorrow, I believe.
Yes.
And the session is called From Compliance to Catalyst.
Yes.
Give me one takeaway. Everyone who's watching this program, they're not here. Maybe they're going to catch a piece of you on stage. But if you have one message for them, maybe the catalyst you're looking at, what is that? What do you want them to take away?
We have moved from how do we solve these engineering-only problems to how do we bring this great engineering to the real world. You have to have a risk and compliance first approach to do that, because safety and soundness when dealing with financial services is extremely important. So my mandate is how do we get to yes as much as possible with our innovation, and if we can't, we all can defend the no. So trying to be a catalyst.
All right.
That was okay.
That was helpful. That was wonderful. Larry, thanks so much for joining us at the desk. Good luck with your session tomorrow.
Thank you. Appreciate it.
That was Larry Wade, Global Head of Crypto Compliance and Regulatory Relations at PayPal.
All right, Jay and Silva here. We are back for another round of overhyped versus underrated, where I ask people whether they think a crypto subject is overhyped or underrated. Let's check it out. Prediction markets.
Overhyped. Too much insider information. We gotta clean that up.
I can't say it's underrated. It is super rated. It is highly rated, but there's more coming, and there's so much more coming. And I think this is V1 of what prediction markets would bring, and it will build. A big industry will be built on top of what we see today.
Probably still underrated because they're not being very widely used yet. There's a huge amount of inefficiency on that market. Actually, that's why I think a lot of traders are excited about them. You want to go for where you have a lot of slippage and inefficiency because you can make that more efficient and earn money doing it.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
Paxos has become one of the most important companies behind the scenes of the stablecoin and digital asset economy, issuing PayPal's PYUSD, powering USDG through the global dollar network, supporting Charles Schwab's new spot crypto trading launch, and now operating under federal OCC oversight. Joining us now is Charles Cascarilla, CEO and co-founder of Paxos. Hello.
Hi, great to be here.
Yeah, great to have you here. How's your consensus going?
That's awesome.
Yeah?
Yes.
What have you been up to?
Well, look, it's back-to-back meetings. You try to make hay in the sunshine.
Yeah, I've been asking everyone who sits at this desk what they've been up to at Consensus, but I mean, talk to me about, being the CEO, co-founder of Paxos. When you come to events like this, what's your goal? Like, what's the purpose, and is it happening for you right now?
Look, the thing with conferences is they're such a congregation point from people all over the world, and particularly Consensus. And so this is an opportunity to be able to sit here and talk to our clients, partners, potential customers, and you try to fill up the time as much as you can, so you're trying to meet with everybody. You also want to hear what's going on in the market, and partly I think it's because we live in a decentralized industry that you need a centralized point to be able to come to and be able to have meetings and be able to talk and have a good time. And so Consensus is a staple of this. And I think this is probably the best consensus I've been at, so it's been a lot of fun to be here.
I don't think you can beat Miami for having a good time, right?
Yeah, it's not easy. I mean, look, I live in Miami, so it's,
there you go.
I'm a little partial. But yeah, anyways, it's great to have it here, and this kind of reminds me back in the good old days 5 or 10 years ago.
Jen mentioned you guys are operating under an OCC trust charter now. I remember back in December when you guys got the conditional approval from the OCC. Has that been given a full approval? I'm kind of checking in with all the players who did apply, and obviously it was conditional. Like, can you give us an update there on where you guys stand?
Well, it was very technical. We got conditional approval. We actually got full approval by that evening. So it was actually the same day that we got conditional, and then we got full approval. And so that's unique because we are issuing, in this case, our PayPal dollar from a fully functional OCC entity. And so that allowed us to convert from New York, where we had a trust company, into OCC federal charter. And we operate both our crypto brokerage business as well as our stablecoin issuance out of the OCC trust. We also have global entities where we do this as well. And so the PayPal dollar is issued from the OCC trust.
Is that timeline usual? I mean, Eleanor,
So actually, BitGo had a similar situation. So I believe it was you guys and BitGo who were kind of like that immediate upgrade, or just converted right away. But folks like Ripple, folks like Circle, I believe, have taken a little bit more time for conditional approval just because they have newer charters, I believe.
I think
how it works.
what happens is, and we had applied several years ago, it's a different story, for de novo. And then you're getting conditional approval, and you have 18 months, up to 18 months, you could do it faster, in order to launch. Whereas we did a conversion. So our conversion was from New York into an OCC trust. And when you're converting, you already have an operating entity, and so that happened very quickly.
Gotcha.
So I'm sure we've been talking a lot this afternoon about the Clarity Act and rumors abound that it might move soon. I'm just curious, what's your reaction to the yield language that was circulated last week? If you have any thoughts on, is it good, bad, just decent enough to get us through?
Yeah, well, I mean, certainly, like anything in a legislative process, you're compromising. And so if everybody's happy, then there wasn't a reason to compromise. And I think that it's generally striking the right tone. There was Genius, and Genius was fairly open-ended in how interest and rewards could be paid out. I think the language is a little bit more specific in trying to prevent a deposit-like instrument from emerging, but you can still use duration and balance levels in order to understand how much rewards you want to pay out for activity that people are doing. And I think that's a pragmatic compromise. As an infrastructure provider, we have relationships with the distributor, not with the end user. So our ability to pay out to the distributor is something that has been really clear from both Genius and this language. It's going to be a little bit more complicated for the distributor to pay to the end user as a result of this language, but it'll come out, there'll be rules that are set. I think it'll all end up coming out in the wash. At the end of the day, stablecoins are democratizing access to dollars. They, in some ways, are also democratizing access to the risk-free rate. But stablecoins alone aren't democratizing access to the risk-free rate. T-bills are, money market funds are, eventually repo will, and that is all going to be tokenized. And so I think this is an inevitable direction of travel. And there's $8 trillion in money market funds in the world right now, or at least, in the United States. There's more in the world. And that hasn't changed the ability for banks to be able to continue to have customers, and they have now deposits that are 2 times their loan balance. So we're not running out of deposits because you have money market funds. I don't think stablecoins are going to create a problem for banks in the long run either. In fact, I think it'll actually be another enabler in their business because their customers need to be able to move funds, and they want to be able to move it at the speed of the internet.
How do you feel about the proposed Fed payment accounts, or the skinny master accounts, and do you guys plan to apply for one?
I think that we probably will. We haven't done that yet. I think there's a lot of advantages to having an account at the Fed because you can now move directly in the RTP process that exists at the Fed, real-time payments. Mm-hmm. It's also valuable to be able to do other things that you can't do in the skinny account, mainly either hold treasuries directly at the Fed and be able to earn interest at the Fed. But being able to hold reserves is important.
Is ACH payments part of that?
Well, ACH operates differently from the RTP process, and so you still have to hook into ACH directly anyways. But I think it's a really good start. It's a way of being able to open up access to the Fed. If you look outside of the Fed at either in the EU or at the BOE, there's a thing for non-bank payment service providers. It's a mouthful, but it's a way of being able to have accounts at those central banks. And I think that's a logical way of being able to enable payment firms to be able to access directly to the Fed, and that will create actually safety and soundness within the payment system. I think it's important to make sure that you have a payment system and a banking system that are able to interoperate together, but at the same time are different. And so I think partly stablecoins also enables this, where you have the capacity to have fully reserved payment dollars, either because you're holding the reserves at the Fed or because it's stablecoins that are fully reserved, and you can have fractional dollars that are for lending. And that way, if a crisis comes along, and inevitably one will, you don't get the accelerator effects to the same degree that we saw, for instance, in the financial crisis, or even to a limited extent with Silicon Valley Bank and other bank failures.
Agentic payments has been a big theme here at the conference. It's been a theme here at the desk. Just curious from where you sit, how you're thinking about agentic payments and how that might change your business model.
I think of agents as new users, and basically what happened is we've just kind of birthed a whole new type of user for products. And that means you're going to have your APIs constructed differently, your go-to-market might be constructed differently, the underlying architecture might have to be different because you're going to have micropayments and things are going to move fast. And so I think it's going to be a huge shift in how the financial system works over time, because everyone's going to have agents working for them. And you're also going to need products that work for agents, not just companies that are set up in the right way. I think that's why stablecoins are so important. You're going to be able to create an always-on programmable dollar that moves with real-time settlement. And that's going to matter a lot when you have agents that are out here buying things for you, and you're enabling to make investment decisions. Some of this stuff is going to be futuristic, and it might take 10 years, but some of it's already happening now. You could go onto your MetaMask wallet and tell Claude to basically go figure out a way to generate you 5% returns. Now, maybe it'll generate more, maybe it'll generate less, but that's pretty amazing.
Maybe it will drain your wallet.
Yeah, anything could happen. That's part of being on the frontier. But you can see how that frontier will quickly become the status quo, and it just takes time, and I think agents and agentic commerce are obviously the future.
All right, the last question I have for you is a hard-hitting one. You are a Miami resident. What do we need to get up to after the event is over?
Look, it just depends what you're looking for. Miami's got a little bit of everything. That's the interesting thing about it. You can come down and live with me and kind of like the family in Coconut Grove, and it's a little quiet. You can go out to Brickell and have a really great time. You can go to Miami Beach and enjoy the sun. It's a dynamic city.
All right, I feel like that was an official invite to your house. I'm not sure, Charles.
Depends on how you want to take care of my kids. You can come over.
Charles, thanks so much for joining us at the desk. It was a pleasure.
Great to be here with you. Thanks.
That was Charles Cascarilla, CEO and co-founder of Paxos. We are going to take a quick break. We'll be right back.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server. Build slowly,
earn my operators' trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter. I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
CoinShares just completed its US NASDAQ listing, giving one of Europe's largest digital asset managers a public market foothold in the world's biggest capital markets. CEO and co-founder Jean-Marie Mognetti joins us now. Hello.
Hello, thank you for having me.
Of course, thanks for being here. How's your consensus been going?
It's been fantastic.
Yeah, I have been asking many people who come to this desk, take us inside some of the conversations you've been having. It's been quite interesting hearing from different people's perspectives what they're walking away from consensus with.
It's very interesting because if you go back to the first consensus, it was really crypto for crypto and absolute crypto people there, and like it was a mob of crypto people. And now you have bankers, lawyers. It's like you're a very different crowd, effectively, than what used to be consensus, at its early beginning in New York. So it's a proof of the maturity of the ecosystem. It's a proof of transformation of the ecosystem, and that we are becoming something quite a big deal as an industry itself.
Yeah, we were talking earlier in the show about 2018 consensus in New York and
at the Hilton Midtown.
Yes,
everybody
with Lambos outside, but also bank protests. Bankers were coming up and showing we don't like crypto, but now a lot of bankers are here.
I remember we had this Lambo Moon crypto party in 2018, thrown out by CoinShares back in the day. So yeah.
That's incredible.
Everyone has been reminiscing about Consensus 2018. I feel like we got to find some video footage or something.
Yeah.
Put together a little capsule. I don't know.
There's definitely a time capsule somewhere.
Yeah.
We still have a baby Lambo in our office as a souvenir of 2018. So.
I was not in crypto then, so I would be very interested to see that video. But Jean-Marie, you just completed the NASDAQ listing, as Jen mentioned. But why was now the right time for CoinShares to make the move from a European listing to the US public market? We've seen some of the US companies actually pause their IPO plans because of the state of the market, but why did now feel like the right time for you guys to launch?
Yeah, it's a question which came out quite a lot, funny enough, from analysts and bankers. And a lot of companies are trying to time the market and try to effectively list at the top of the market and effectively use that as a good catalyst. We don't really believe in that. We believe in being ready. And CoinShares has been a company running for 10 years plus. It has been profitable since 2016. The process are in place. The company is ready. So let's be listed in the US. Let the market make its own noise and success make its own noise. So we were not like really trying to time the market. Timing the market is really for hype company. We are a very reliable company in the way we are producing our returns, and we just want the market to have exposure to it. So there is no good or bad time, there is just time to do it.
Interesting.
CoinShares had a pretty solid 2025 in terms of ETF inflows in Europe. Can you just talk to, what do you see as kind of driving the inflows in Europe, and how you contrast that with the US market?
Well, Europe has been a very different market in itself than the US. Europe has ETF in the ETF format since 2015, while the US has been deprived of it for a very, very long time until effectively January 2024. So realistically, the market is much more mature, but at the same time, the consuming market is very different, where the market is much more intermediated with a lot of kind of intermediary gating the accounts effectively between the final client and the account. So most of the time you have to deal with private bankers, most of the time you have to deal with trustees who are effectively looking up the account in terms of allocation policy. So the education process is much longer. And so despite the fact that it has been a much longer opportunity in Europe. It's still a market which has plenty of growth power into it, and as the US market come online, it has been used as a massive catalyst for European allocators to say, oh, actually now it's becoming more and more legit, so the late ones say, okay, now we need to get going. And so it has been a very positive thing. You know, in Q4 we see net inflow in CoinShare and product in Europe was the American market, so outflow. So you can see this dynamic being something quite powerful. You know, the European market versus US market, then the second part of your question, yes, Europe is 10 times smaller than the US, let's put it this way. It's a fragmented market. There is like as many countries as there is regulators, as there is languages. Investment culture is very different from one country to another. You don't sell to an Italian the same way you sell to a Spanish or to a Danish. So all this kind of stuff creates a lot of fragmentation in the market and give it a very, very different flavors in the American market, which is very much an access market where people used to trade directly themselves on their accounts. There is little intermediation, especially on the coastal area versus the flyover states. And so it's a very different market in general, and the total addressable market of the US in one language, one or two languages maybe, and one regulatory framework is like much bigger than what you have in Europe. So two different markets, two different beasts, and that's why the commoditization of this market happened really in the US, not really in Europe.
You ended the year last year with just under $500 million of available capital. Just talk to us about how you're thinking about expanding in the US. Are you thinking about investing in new products? How are you going to compete with what's already here?
Yeah, like, look, everybody, when we tell people we're coming to the US, they all think about us competing with Fidelity or BlackRock. And so we've been in this business for 10 years plus. We've been running hedge fund before, so we're not just delusional. We're not coming here to just spend our shareholder money to compete with like superb company like BlackRock and Fidelity. We're coming here to bring differentiation, bring added value to customers, and bring very much something we know how to do. So it's a very kind of, you know, a complete different strategy. You know, we have a strategy which, you know, is a mix of organic growth and external growth. So we are very much on the look for what we want to put on our book next.
Mm-hmm. I think you and I met at the sort of peak of the Bitcoin spot ETF launch, and that was back in, you know, January of 2024, which seems like forever ago now. But since then, we've seen a lot of ETF launches onto the market of, you know, altcoins, single product ETFs. We keep hearing that index ETFs are going to start hitting the market. I mean, what's your view on that? And are single product ETFs kind of, are we, you know, is it oversaturated in that market? You know, kind of what are we going to see next from the ETF scene?
Yeah, you know, if at CoinShare, we tend to see the saturation of the market as a kind of you know, a victim of the success it's having. You know, like if you look at the European market, for instance, people don't realize, but there is 185 different crypto listings in Europe.
Yeah,
it's enormous for Europe, and like a lot of them are not doing anything, and a few of them are just the winners. And the US, you know, because we're playing catch up on this 10 years gap, effectively, has been kind of fast tracking that at speed with the regulatory limitation of what the SEC allow you to list or not to list, with the limitation of what you can do on a 33 Act versus a 40 Act, and there's a bit of a kind of a trading horses there between the different type of product and what they allow you to do and not to do. Now, as usual, it's going to overswing. You're going to get way too many products. We're going to get way too many single coin product. You know, and the amount of Bitcoin ETF right now in the US available, you have a long menu of them. Mm-hmm. You know, are they all useful? Absolutely not. And you're going to see at some point some of them shutting down, I'm pretty sure. And same thing for the single coin. You know, like now to go to your other question about the indexation. Indexation has been a very interesting topic. It has been a very under-invested thematic, maybe or more certainly because of the very high correlation between all these coins. You know, despite the fact they have some kind of very specific, different kind of added value, the way they trade tend to be over time very correlated, and so the value added of an index is not that great at that point. But you know, some companies like CoinDesk indices are launching great indices, and there is some kind of differentiation coming up. So it's going to be a question of like how investor maturity approach that, and do they feel that they are better off stock picking themselves, the constituent of their own index, or relying on someone like CoinDesk to propose them an index.
All right, Jean-Marie, we got to leave it there. We're going to head on over to the main stage now, where Michael Saylor takes a seat.
I wanted to wait till I had something interesting to say, but I do today, so thank you for allowing me. First, I want to talk about digital credit. Digital credit is based on digital capital, and so we wanted to create the best credit in the world. How do you create the best credit, the highest yielding credit? Well, you need the best performing asset. So you see Bitcoin's been outperforming the S&P and gold and NASDAQ for quite a while. And we started thinking, can we carve a credit instrument out of Bitcoin? Now, it turns out the volatility of all these assets is quite high. And so the impediment to spreading Bitcoin to the world is 40 vol is too much for most investors. And without the cash flows and with the vol, it's a difficult sell. Believe me, I know. I've spent thousands and thousands of hours doing this. So what's the idea of digital credit? The idea is you use a capital gain to fund a credit dividend. We strip a certain amount of yield out of the capital gain. And so if you think you're getting 30%, you can extract 11. If you think you're getting 6% from real estate, you could pay a dividend of 3. And so, as you can see, Bitcoin's the highest performing capital, and so we can pay the highest dividend. What else do you need to create asset-backed credit? Well, you need a lot of assets. And so you need a lot of equity capital. And the thing about Strategy, my company, is we've got about $68 billion worth of capital, and we've got an $85 billion enterprise. So when you have a tower of equity, the question becomes, how are you going to get yield on it? What are you going to do with all that capital? And what we realize is the killer app for Bitcoin is digital credit. That is, we don't borrow against it in a conventional way. We sell the credit into the TradFi, the traditional capital market, and we offer a yield. And for every dollar of capital, you can probably sell 20 cents of credit a year. So you want to create $20 billion of credit, you want to start with a $80 or $100 billion of capital. The big advantage we had is we had a big equity capital market. We have $3 billion in trading in the equity market. We have a massive derivative market. Some people don't know, but MSTR trades more than IBIT. Our open interest is more than IBIT's open interest. So we've got the equity capital traders and the derivative traders supporting this security, and then we wanted to use this to create credit. What's credit? Well, we take a block of capital, we strip the currency risk, we strip the credit risk, we strip the duration risk, we damp the volatility, and then we distill a yield. So think of it as taking a barrel of crude oil, putting it through a reactor, and coming out with kerosene, right? Digital credit is like monetary fuel. If you have a volatile capital asset, it's a 30 or 40 vol, you've got this, crazy roller coaster. What we're doing is we're extracting that first 11%. And most people, they want to compound their wealth comfortably. They don't want to risk their principal. They just kind of want to compound their wealth progressively without a massive drawdown. So what happens if you actually process that signal and you create 11%? Well, you have excess energy, excess volatility. Where does it go? It goes to the equity. And so the very act of creating the credit actually creates a digital equity that is actually more volatile and higher performance than the capital asset. Hence, MSTR is amplified Bitcoin. STRC is Bitcoin credit. Does it work? I show you the theory. This is the actual result. This is 5.75 years of data. You can see since August of 2020, Bitcoin's up 40%, MSTR is up 60%. Notice where STRC is. That's your credit. So what we're doing is we're straddling both sides of a capital asset. There's a set of people that want leverage and performance in the roller coaster, like strap on the rocket, pull the G's. And there's another set of people that just want to live happily ever after, comfortably, and they'll give up the excess performance, and we're giving them both. So what is it? Well, we're really just combining things that have been around. A listed public stock, a listed digital capital, Bitcoin, that you can trade, a listed preferred stock, a variable monthly dividend on a preferred, a return of capital treatment, it's a 100-year-old tax code, and an actively managed ETF. If you put them all together in one instrument, you can create digital credit. What is it? It's double-digit returns, tax deferral. It's all the benefits of equity. It's low volatility and capital preservation, all the benefits of credit, all in one instrument. If you don't need your money for 4 years, I would say buy Bitcoin and hold it forever. But if you need the money in the next 4 months to pay your kids' tuition, or if you need working capital or to pay taxes, you can't afford to take that risk. You're gonna want a credit instrument. So STRC is like short-term money, BTC is long-term commodity, and then if you're an equity investor and you want amplification, you would buy the common stock. What's unique here, we discovered, is that if you actually use unrealized capital gains to pay a credit dividend, the dividend becomes tax deferred. That's called return of capital. We inadvertently created the most efficient, scalable generator of tax deferred fixed income in the world. We weren't trying, we just tripped over this. How's it working? Stretch has got $375 million of liquidity a day. We got the vol from 40 down to 3. It has grown to $8.5 billion of AUM. It's growing at 340% a year. It's hyper growth. It's the most successful financial instrument of the year. Why is it growing? And how is it growing? Well, it's growing because it's powered by the crypto economy and by the volatility of 24/7, 365 digital assets. It's now the biggest preferred stock in the world in 8 months. It's also the most liquid preferred stock in the world in a few months. It's also the highest turnover preferred stock in the world. So we created something which turbocharged the entire economy of preferreds. In the last 6 months, Bitcoin traded down 37%. If you're a capital investor, you get no yield and you take the 37% hit. If you're a credit investor, you got 6.4% in dividends and you held par. So if you're wondering why would you want to own it, well, that chart illustrates exactly why you would want to own it. Stretch is new. You can see it's seasoning, and in the last 3 months, it's been in the trading range 100% of the time. So it's really just the past 3 months that this thing is clicking and coming to life. The liquidity has grown 7x in 5 months, and it keeps building. Why? Well, because the money market pays you 3.5%, private credit pays you 8.5%, Stretch pays you 11.5%. If you're a retail investor, if you pay taxes in the US, that's a tax equivalent yield of 18% in Miami. How does it compare to the rest of the world? Well, Stretch is like the risk-free rate in the crypto economy. If you're looking for the free market risk-free rate, it's 11.5%, and it compares to, nothing in yen or Swiss francs. But now if you look at this chart, you see there's a mother of all arbitrage opportunities here. If you're looking for the carry trade, you borrow at 2% in euros and you invest in Stretch, you catch the difference. If you're a DeFi trader, imagine looping 2% to 11.5%, capturing 9.5% times 10. Now 10x leverage sounds dangerous on a 40 vol asset, but what if I give you a 2 vol asset? At 2 vol, you can 10x lever it, and the volatility is like the S&P index, but you captured 95% yield. Okay, so this is very interesting what's going on here. If you live in New York City, Stretch is like a bank that pays you 24%. Why wouldn't you want that, right? I mean, same in San Francisco. Now, if we look at risk-adjusted rates, the Sharpe ratio is you take the yield, you subtract the risk-free rate, you divide by the volatility. What you can see is Stretch has got the highest Sharpe ratio of any credit instrument in the world by an order of magnitude. Money markets have a negative Sharpe ratio. Stretch has got a higher Sharpe ratio than any equity you can buy. It's, actually this is an asset than any asset you can buy, like the S&P or Bitcoin. Stretch outperforms NVIDIA, right? And finally, If you go to a hedge fund and you paid them 2 and 20, Stretch outperforms every hedge fund strategy publicly disclosed by every hedge fund. And so, how is this interesting? It's interesting because the hedge funds lock up your money, charge you a fee, take a carry, and take heterogeneous risk. Stretch is liquid, no fee, zero fee. You can get in and get out whenever you want. It's homogeneous. It's transparent. We update the risk every 15 seconds. So digital credit is really attacking the credit markets, and there's no reason why it won't transform 1%, 2%, 10% of a $300 trillion credit market, because everything else compared to Stretch is like return-free risk. Now, how does it impact the ecosystem? There's an explosion of interest. There's retail interest, there's corporate interest, there's institutional investors buying it, there's crypto-native firms building on it, and there's TradFi innovators building on it. So first of all, Stretch is distributed through all retail brokers. It trades on NASDAQ. You can buy it on Schwab, Robinhood. Vanguard doesn't let you buy Bitcoin, but they let you buy Stretch. And so we've used it to get to every traditional, conventional investor. 80% of Stretch out of the gate is retail, massive retail following. Just like crypto is retail, Stretch is retail. It's going viral. Everybody tells their friends, their family, their parents. Because why wouldn't you? I mean, who doesn't want to retire and get paid 11% and not get taxed on it? Like, why wouldn't you want to do that? Corporations are using it as part of their corporate treasury. Instead of 3% taxable or 2% after tax, it's 11% tax deferred. It's number 2 in the credit indexes of BlackRock and Van Eck in the first 8 months. So it's really crawling up, and it's embedded in all of these other fixed income funds. There are a lot of ETF developers that are building on top of it, so you're going to see it in public funds. But now I get to the most interesting part of my presentation, because I think the compelling thing about digital credit is it is the stepping stone to digital money and digital yield. And that's where everybody in this room ought to be interested, because this is your business. What we've done is taken digital capital, which is too volatile with no yield. We've converted it into a 3-vol, 11% yielding credit instrument by stabilizing it with billions of dollars, actually $60 billion worth of equity capital. And now the opportunity is at layer 3 to create digital money or digital yield. And what do I mean by that? I mean, money is zero volatility, daily liquidity instruments with yield. Digital yield is maybe non-zero volatility or maybe a liquid staked yield. So how do you create this? You can create a token, a private fund, a public fund. You can offer it on a bank. You can offer it on a crypto exchange. You can program the volatility from 0 to 10. You can program the yield from 5 to 25 or even more. You can program the liquidity, and you can transform the currency. Lots of people might do it. You could do it as a bank, a Wall Street operator, or maybe most interesting, a crypto entrepreneur or a startup or any innovator. If we give you 3-vol, 11% credit, you can step it down to 0-vol, 5% money, or 6 or 8 or 9, or you can step it up, lever it 3 or 4 times and make it a 25% instrument. If you want it liquid every day, it'd probably be 25% instrument with 8-vol. But if you want to make it a lockup for a month, it might very well be 0-vol, 1 month liquidity, 25% yield. Who needs it? The stablecoin market, right? It's $350 billion. It's all starved for yield. How are you going to actually put yield on this? This crypto native yield, it's endogenous. When activity explodes, it expands, and when activity contracts, it contracts. There's also exogenous yield, and here digital credit competes with treasuries. The challenge with endogenous yields is they're reflective. So in a bull market, you'll get good yields, but in a bear market, the yields compress. On the other hand, the benefit of treasuries is it's external, but the problem is if your cost of capital is 3% and then the asset pays 3%, then their net yield is 0. And then so if you lever up 10 to 1 on 0, it's 10 times 0, it's just 0, right? There's nothing there. What you want to do is start with 3.5% money and then lever on 11.5% yield. Now you get a net 800 basis points, lever that 5 to 1, and you can actually create a 40% yielding instrument. And that's what Stretch represents. It's an external source of power, right? This is financial fuel for DeFi and financial fuel for digital assets like kerosene. You figure out what to do with it. Now, we're already equity backed. We've got nearly $5 of capital for every dollar of STRC, so it's way over collateralized. So we're giving you an equity buffer. And our company is managing to keep STRC trading around 100, and that means raising billions of equity capital, buying billions of cash, raising the dividend, adjusting the ATM. So that's what we do. What happens next, though, is what you do, what anybody else does. We're offering this transparent, institutional, highly liquid yield instrument. You go to our website, we update it every 15 seconds, so you can see exactly how much capital we have. We make SEC filings every Monday morning. You can see when we've raised more capital. You can calculate and see the Sharpe ratio. You can see the price and where it settles. We've even published our credit models. You can actually go here and estimate the credit risk of these instruments, and it's updated every 15 seconds. You put in all your forward expectations of Bitcoin and vol and the like. What's the upshot of this? Well, capital is going to flow to the superior yield, and so DeFi is better than TradFi, but digital yield backed by Stretch is going to be better than DeFi yield with endogenous sources. We've got transparency. You can see that as a public company. And who's doing this now? There's an explosion of innovation in the DeFi economy right now. You can see Apex, Hermetica, Kraken, Ondo, Pendle, Roxum, Saturn, the Spread, Strata. They're all doing very interesting things. They're moving faster than TradFi innovators. There are a lot of TradFi innovators, but in my experience, the DeFi innovators seem to go about 10 times faster, and they're a little bit more sophisticated. So in 8 weeks, we've gone from nothing to 270 million just in the DeFi space. Stretch was 1.2 billion or 1.5 billion in sales in March, 3.2 billion in April. So you can see this entire thing is exploding. Why am I excited? Because I think digital credit's the bridge between Bitcoin and crypto, between TradFi and DeFi. It solves a lot of problems in the crypto space and the DeFi space, but it also leverages all of our TradFi assets as well. And so now you can see Bitcoin is the digital capital layer, Stretch is the digital credit layer. You've got a layer 3, and then if you take these tokens and put them into applications, you create all sorts of interesting things. So the way we see it is Stretch is a platform to create apps. Digital money and digital yield are some of the apps. Lots of people are building them now. And I would submit stablecoins are zero vol, zero yielding instruments. They're good for a medium of exchange, but they're not a good store of value. They don't really make, you don't want to have that collateral tied up for a year in a prediction market or in a DeFi or a futures trade. Yield coins are zero vol, 8% yielding, 7 or 9% yielding. You can build them in dollars, euros, yen. But wouldn't you like a yield coin that looks like a stable coin that pays you, that's backed by Bitcoin? And that's what we've done. Stretch creates yield coins. And right now, you already see Apex creating it. You already see Saturn creating it. You see an explosion in enthusiasm to tokenize this. But there's a lot left to be built. You know, who's going to build the 8% yield coin in yen or in Swiss francs? And who's going to build the 24%, the 24% yield coin, either with 5 or 10 vol, or you stake it for 90 days and pay 24%. All of these things are out there to be done. They're not that complicated ideas. What you needed was a mountain of equity to create the credit. Then you need the equity investors in MSTR to support that. You need the credit investors to support the credit. Then once you've got that intermediate layer, the sky's the limit. You can create all sorts of incredible digital money, digital yield instruments in every currency, and then you can take them to every chain and you can put whatever functionality you want on it. Our company's focus is to stretch this $100 billion AUM, multi-billion-dollar liquidity instrument and get the volatility below 2 into the 1s, like a money market. And then we stop, because that's enough for us. What we offer to all of you is you can create the hundreds of digital money and digital yield apps and plug them into all the cool crypto and DeFi applications. And maybe you keep 200, 300 basis points of it, right? You could offer 8, keep 350 basis points, get paid 11, and it would be a huge value added that you're offering. And instead of getting 15 basis points on an ETF, why don't you get 150 or 250 on a proprietary product that you create? It'll be easier to sell, it'll be worth doing, it'll be better for you. I think the people in this room is how we take digital credit to the entire world and to every part of the ecosystem. I think that this represents the merging of the interest of Bitcoin and the interest of crypto and DeFi and TradFi, and it should power the entire digital assets industry to the next 10x or 100x development. I've been really excited working with all of you so far, and I look forward to what's to come. Thank you for your time today.
Welcome back to CoinDesk Live, brought to you by MoonPay. I'm Jen Sanasi, joined by Eleanor Terra and Nick Day. Our next guest built a multi-billion-dollar real estate business around cash flow, scale, and personal brand. Now he's combining that real estate engine with Bitcoin, using property income to accumulate Bitcoin. Grant Cardone joins us now. Grant, welcome to the show.
Thank you. Thank you for having me.
How's your consensus been?
It's been fantastic. We've been here. We were in New York yesterday, flew in last night, came in for this. I slept terrible last night. I was up till 1 o'clock in the morning and watching Michael Jackson videos.
Okay.
My algorithm got fed Michael Jackson, so like I'm on a loop, like literally 3 hours of Michael Jackson and the King. And now I'm here with you guys.
All right, from Michael Jackson, we just saw Michael Saylor on stage.
Yep.
Good segue.
Now you're here with us. Let's just talk about what you've built. You built your reputation on cash flowing real estate. What made Bitcoin interesting to you? What was that inflection
Well, look,
point?
if you're a real estate investor, I know you had A-Rod on this morning, so if you're a real estate investor, you're looking for ways to improve the real estate, and there's only so many ways you can improve it. Put a new roof on it, you paint it, you make a bigger pool, put in a pickleball court, but at the end of the day, we're all doing the same thing. We started adding Bitcoin because we believe it adds a value that my competitors, which are the REITs, Starwood, Blackstone, Goldman Sachs, JP Morgan, these are giant behemoth real estate owners, MetLife, New York Life, they own all the real estate in this country. I am now able to add Bitcoin to each property that we buy, and we believe, it has to be proved out, that the real estate and the Bitcoin combined will out-deliver just a real estate only asset.
Mm-hmm. Talk us through that strategy. You say add Bitcoin to every property. What does that look like?
Yeah, so we bought a deal in Boca Raton, just up the street here. You probably been by the property. It's 101 Meisner, 366 units. We bought it out of bankruptcy. The asset cost about $400 million to build it. We paid $235. We pulled it out of bankruptcy on my balance sheet, and then we went and bought another $100 million of Bitcoin. So we basically We bought the real estate that everybody understands, and then we stacked some Bitcoin on top of it. And we put the two, we fused them together as one investment vehicle and allow our investors to participate in the upside of both of these things.
I love it. As someone who has been accumulating Bitcoin, right, from one accumulator to another, can I just get you to weigh on quickly on Michael Saylor's strategy and what he's been up to, and sort of maybe the headline from yesterday was that.
Look, I grew up in a single, raised by a single mom.
Yeah.
You need cash flow.
Right.
Families need cash flow. When my dad died, I was 10 years old. My dad was 52, and my mom, I remember my mom had an AT&T stock that paid a dividend every quarter. She didn't get paid every month. The bills were due every month, but she only got paid every quarter. People need monthly cash flow. This is Bitcoin's deficiency, okay? It requires me to put it on margin in order to get cash flow out of it. When you add the real estate and the Bitcoin, right, I get the real asset that cash flows and provides tremendous tax write-offs. And I also get the magic of the Bitcoin. So with what Michael's doing, somebody came up to me today and said, oh, Michael said he might be selling some of the Bitcoin. I'm like, Michael should do whatever is good for Michael and his company. And if that means the entrepreneur needs to shift the story, if you're not going to change lanes on your way to success, you're not going to get to success. So the fact that I said I'm committed to the left lane, if you stay in that one lane, there's going to be a moment in time where it backs up on you, and it's not going to be cool. I'm from the bayous of Louisiana. Bro, we use every lane. We'll jump the freaking middle. We'll go to the whatever it takes to get to success. Like if you're hungry and ambitious and you want to do great, you're going to have to change your mind on the way to the parade.
Yeah.
So not to use a cliche, but we saw a number of companies follow strategies, strategy.
Yeah.
I didn't want to say it like that, but yeah, of accumulating whether Bitcoin or Ether or a specific digital asset. Is Michael Saylor now indicating he might shift strategies, signal for this broader ecosystem that they should also reconsider, or is each to their own?
I mean, look, Michael, I met with Michael 2 years ago before we built our first real estate Bitcoin hybrid. Michael was very helped me a lot, kind of see where I could do this. I have a big audience of about 20 million people online. 20,000 of them have trusted me with their money. Many, many more than that have trusted me with their companies, their weekends, their sales department, their operations. Like I work in a lot of small to medium-sized companies, not just here in the United States, but around the world. These people my clients want to be able to invest in things like I'm investing in. So they're not going to invest with Michael if they don't know about it. You have to break obscurity. You have to get people to know who you are. You got to tell your story about what you're doing, and the right people will move to the right investments. And a lot of people are going to miss the right investments and regret that they missed it later. So we believe what we're doing with the real estate Bitcoin hybrid. See, Michael would tell me to just drop the real estate. In fact, he told me to do that. He's like, you don't even need.
He told you that.
He's like, just get the Bitcoin, dude. You don't even want the real estate. I'm like, I'm a real estate guy, dude. It's not my story, right? It's not. I'm not a Bitcoin person only. I am trying to take real estate and improve it, and I believe I improve it every time I combine it with the Bitcoin, so that I have something very intangible and tangible, something that's 2 million years old. Real estate is ancient. And something very new that's only 15 or 16 years old. Combine the two together, and I think you have I'm gonna disrupt an industry the way he's gonna disrupt credit.
The way you went to Michael for advice, are other real estate investors and developers coming to you and asking about this strategy, how they might be able to replicate it?
Yeah, well, no, actually, the real estate people have their hands full, okay? Adrian. The real estate people right now, we're in a massive real estate correction cycle right now. The biggest institutions in America have a massive problem in real estate. Nobody's talking about it. It's not in the headlines. It should be, by the way. It's a multi-trillion-dollar problem because debt from 20 is due. Right. And now it's expired, it's matured, and it's late. So there's a massive problem. That's when you want to buy real estate. You want to buy problems when people have maturing date. So that's why we're able to buy the real estate for 2/3 of its value and then stack it with Bitcoin to the other third. If you don't have a correction moment, we don't have this vehicle. It won't work. You can't just buy full retail real estate at its full value and then stack Bitcoin because you're going to be cash negative. So late last year when we started doing this, some people in some big companies, some big real estate companies were like, we want to do that. Well, they can't because they're a REIT. Their structure legally will not allow them to hold a currency or a Bitcoin on their balance sheet. So there's a $4 trillion REIT industry that can never ever play in this little thing that I'm creating. And then there's the syndicators, people that you mentioned, that would love to, but they're already having trouble raising money for deals now. So raising more money for Bitcoin becomes impossible for them. And lastly, we went to 126 and then it fell apart to 74. Anybody that was considering doing it ran for the doors.
Yeah. Well, how do you explain that to investors? You know, your investors are looking at your business. You just talked about the volatility. How do you talk to investors about that?
Well, we just had an experiment with them. We have 1,500 investors. They gave me $300 million, 100 million of it's Bitcoin, and not one person complained. Because the real estate asset is a long-term asset. Okay, these people are not degenerates. Okay, no offense to the people here at Consensus, but you got some degenerates here. Okay, the crypto community, Bitcoin, the altcoins they're a magnet for degenerate investing. Real estate investors are long-term investors. They know that real estate gets sick, it never dies. And when you combine that with the Bitcoin, you take the volatility out, you take the price out. You're not looking at 81 or 79,000 every day because you know the real estate doesn't have a number on it. So again, I think when you combine those two, you have an investor. The investor has to be right for the investment. Mm-hmm. Michael has to attract the right person for stretch, and I have to attract the right person for a real estate investment wants long-term play. So.
All right, really quickly before we go, what's your Bitcoin outlook? You got to give me a target.
189,425.
For when?
End of the year.
What time? End of the year. Okay.
189,425. That is so very specific.
Well, no, everybody else, when they're not specific, what do they give you a range?
They give us a round number. 189,425. All right, Grant.
189,425 is the number.
All right.
Number. It's never going to land on 189 even.
All right.
It's impossible.
This guy knows his Bitcoin.
I know, right? Grant, thank you so much for joining us. It was a pleasure having you here today.
Thank you.
All right, that was Grant Cardone, founder and CEO of Grant Cardone Enterprises.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server.
Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Hello, everyone. Day 2 has sadly come to an end. I'm here with Nick Day and Eleanor Terrett to wrap it up. Nick, I think we got some news off of one of the stages since we last had a chance to talk like this.
Yeah, so we had Patrick Witt, the White House's executive director for the President's Council of Advisors for Digital Assets.
It's such a mouthful. I would just say White House Crypto Council.
I say White House Advisor.
That works.
It works too.
Patrick Witt was on the main stage. He told our Jesse Hamilton that they are targeting July 4th to have the bill through to the President, the Clarity Act. So he laid out what a pretty aggressive timeline, I would say. He says that the Senate Banking Committee would have its markup hearing this month. They would have 4 weeks in the Senate to negotiate with the Agriculture Committee, do some reconciliation, make sure the two bills are merged, get it to the House, and then to the White House, or to the President's desk by July 4th, calling it a, quote, tremendous birthday present for America.
That is a really aggressive timeline, Eleanor. And some folks have said to me, you know, it's it's an aggressive timeline, but if we can get to markup, it is possible. What are my question for both of you is, what are some of the risks? What are some of the things that will delay that markup and then maybe delay this timeline and make it so that market structure can't pass before midterms?
So I think the reconciliation process might take a little bit of time. I'm not entirely sure how much time, but that could, you might have to over-index a little bit for that. And then on top of that, you also have the ethics issues that we have been talking about a lot on the desk and in the space quite a bit recently. That is going to be an issue that goes beyond just the banking committee. The Senate Judiciary Committee is going to have to weigh in, and that could get a little messy towards, floor vote time. I mean, the Senate banking Dems and also the Senate banking Republicans, right? We heard from Senator Tom Tillis recently how he said he would really like to see some ethics provisions in that final bill when it leaves the Senate, or he will, kind of turn and be a no vote, which I think was very notable. So we're not hearing much about it right now because I believe it's still in the works, and Patrick did say that to Jesse on stage. He kind of said, we're in constant contact with the White House, well, he is the White House, but with the Senate Dems and Senate Republicans on the matter of ethics. So I think they are still hammering out some of these issues, but we're going to hear a lot more about it when this bill goes through committee. And so you've got those roadblocks. It's an aggressive timeline, and we know Congress isn't very good at keeping timelines.
Yeah, I mean, I think you laid out the Senate part of this very clearly. I would also note that the House has, I would say, had some difficulty with passing bills recently. If you look at some of the recent actions they've had to deal with, the DHS funding bill, I think there was another funding bill, I'm forgetting what it was, but they've struggled to get a bill through cleanly the first try around. And with this timeline, they're suggesting that they'll have, 4 weeks to get through not just the Senate version of the bill, which, I'm sure out the gate, the House is going to want to have its own input on this, make sure that their signature is on this as well. And if that happens, that's going to continue that's the reconciliation process, but it's going to continue these negotiations. And then the other thing, just to the ethics point, CoinDesk, we've talked about this, recently commissioned polling data on how, the average American electorate feels about crypto issues. And over 70% said they don't want senior government officials to have direct business ties to the industry. And that's not specific to the Trump administration, but it is kind of relevant to this discussion that we're having here.
Yeah, for sure. And I just pulled up the Senate calendar, and so we do have Juneteenth off, which is obviously it's just a day, right? But then we also have the last week, which is June 29th through July 10th off, and I guess that would fall in the period before July 4th. So Patrick is, I guess, tracking before June 29th. So we'll have to see. We have the last week of May off, of course, as well, with the Memorial Day week. So we were talking about that time crunch. I mean, I think a lot of people underestimate how much time the Senate and the House actually gets off. I mean, they do have a lot of, a lot of vacation days.
A lot of holidays.
A lot of holidays, yeah. And if you look at the calendar, it's like kind of ones that are a little bit random in there too. You get state work periods, kind of thrown in there. So yeah.
Sounds comfy.
Sounds comfy.
Sounds nice.
Yeah.
And the important part here too is the Senate staffers are not going to be taking breaks necessarily during this, but we're at the point now where we're not necessarily talking about the staffers. It is the actual lawmakers who are going to have to vote on this and argue about this and do all of this. So this is very relevant that they're going to be not here in 2 weeks.
That's a great point. I think a lot of the bill is facilitated and in the early stages specifically by the staffers, and then you have these real issues where it can't just get done at the staff level. You really need the senators to get together in a room and kind of hash out and negotiate these really critical points. And to Nick's point, if they're not here and they're on, they're in their respective states, when is this going to get done? It's going to keep getting pushed. So.
Well, these are the types of conversations that we have at Consensus, and this type of news is the news that breaks on the Consensus stages. Thank you so much for joining us for this live program and sticking with us all day. We will be back again tomorrow at 9:45 a.m. Eastern Time. For Eleanor Terrett and Nick Day, I'm Jen Sanasi. We'll see you tomorrow.